for today. I don't know if you've heard me tell the story of the person who, on a flight, his phone was, or should I say, phone was ringing. You know, when you fly, you're either putting the phone in flight mode or you're turning it off. So, mid-flight, this phone begins to ring. And if you're the air hostesses, you can only imagine how they would have felt. They were upset, they were disappointed, they kept looking for whose phone was ringing. And when the phone rings, it's only natural that you follow the sound. As they say, follow the money. So following the sound, it is found to be ringing in one particular seat. Unfortunately, I was seated on that row. And everybody looked in the direction of where the phone was ringing. And to the man from whom the phone was ringing, we said, "Oga, your phone is ringing." He said, "No, his phone cannot be ringing." We said, "Your phone is ringing." He said, "His phone cannot be ringing." And we said, "Why?" He said, "Because his phone is off." He brought it out and truly the phone was off. So he got upset. While he was angry that we were accusing him falsely, the phone began to ring again. And apparently, turned out that he uses one of those phones manufactured by secondary school children in China that even when it is off, it is still ringing. If that's the phone you have, please remove the battery and hold it separate from the phone, so that the ringer of your phones will not disturb us this morning. Please. Thank you very much. Turn your phones to silence and vibrations. Kunle, can we get the panel into the room? We need to start right now. Where's Kunle? Frank or Blessing or someone? Please get the panel into the room for me. We're set to start. They are ready. We thank those who are punctual for their punctuality. I did say earlier that we're looking at energy, finance, and investment. Subduing challenges and seizing investment opportunities in the dynamic oil and gas landscape. I had the privilege of moderating a panel in South Africa some time ago. One of the panelists was on that panel. And he made a suggestion on how we can better fund this industry. And I hope he makes that same recommendation here today as how we can really get the money we need to drive continue to drive our business forward. Okay? And yesterday we were told of the Sovereign Wealth Fund. Somebody was thinking yesterday that it was for the entire Africa. No, the man who said it, Dr. Banuako, who said it is the 64 billion is for Apple member countries. The total amount of the Sovereign Wealth Fund that is in So at the end of the day, it is just for Apple member countries. The 64 billion is for Apple member countries. Stock somewhere outside. But there's a group of people I think can fix the finance challenge in this industry. There's a group of people. And I know how we can get them to bring the money. But I'm not the president. I wish I was for 48 hours. What if I told you I can raise, given that opportunity, all the funds you need in this industry in 2 days? Would you believe me? Oga, your smile, you are doubting me. Oga, don't doubt me. Don't doubt me. The money is in this country, I'm telling you. 48 hours as a president, I will take certain decisions and steps. The money will come out. I will not jail anybody. I will not kill anybody. Just in case you're thinking that's what I want to do. No. Oh, yeah. I'm married. All right, good morning once again and welcome. Let's get into the business of the session. We'll first of all begin with a keynote presentation from the Chief Upstream Investment Officer of NNPC Upstream Investment Services Limited. After that, I set up the panel. That'll be moderated by the founder and CEO of Dindo Energy Services and Resources Limited, and they will take center stage and do and have the conversation around the theme on finance and investment session. As I invite the speaker, they go that way to speak, and the panelists will take their seats when it's time for them to come up. Let's take the keynote remarks immediately, as I like to invite the Chief Upstream Investment Officer of NNPC, Mr. Bala Wunti, represented this morning by one of the general managers at N.I.E.S. Please welcome with me Dr. Justice Derefaka. Dr. Derefaka, you're going to go speak. You're going to go speak that way. But you know, I'm a prophet. You're going to go speak that way. Thank you very much. So I stand corrected as you would advise. I stand corrected as you would advise, Doctor. Over to you.
Okay, good morning, ladies and gentlemen. I will be delivering the keynote speech, just like Richmond has said, on behalf of the Upstream Investment Officer Bala Wunti. And it's on the topic, subduing challenges and seizing investment opportunities in a dynamic landscape in the oil and gas industry. First off, I'd like to give some bit of an insight on some of the knowns that we are all familiar with, and that has to do with that there is more demand for energy globally as the world population and, of course, living standards increase. And we know that the world must find ways to meet rising energy demand while reducing global greenhouse gas emissions to limit the effects of climate change. So we know that in tackling challenges, of course, the opportunities are there. And when the opportunities come up, we need investment. And investment in this climate, especially in the oil and gas industry that we are in, need to have some bit of ESG, environmental, social, and governance framework, and of course tying that into the 17 Sustainable Development Goals that the UN came up with. And if you look at how we operated in oil and gas sector, even in Nigeria, we seem to straddle and of course meet almost all of the 17 Sustainable Development Goals, but that in itself need to be deepened and of course improved upon. So in my speech this morning, one thing that we know is that number one, there is population increase. Some years back, Nigeria wasn't on the map of one of the most populous countries in the world. But in 2017, we're number 7, and it's been projected that by 2050, we will be the 3rd most populous country in the world. That means we need more energy, and we need to do it sustainably with the growing demand for investors' appetite that I looked at most of the issues on ESG and of course climate change. So without further ado, I will speak to those points and of course other issues. Now we know that today 7-point-something million, and by 2050 the population will increase to about 11 billion. Now how do we address all of these issues? And we know that investors are beginning to be cautious and to see what they need to see before they put the money where the mouth is, like we used to say. So again, in this climate, in this part of the world, we have issues around energy poverty with our, of course, blooming number across the African continent. So one thing that we equally need to look at is, do we look at the need for energy security whilst we have the issue about net zero emissions? And I think the question comes to play that we need energy security, because if you look at Sustainable Development Goal number 7, it tells us that we need energy across board. Now, if you look at the slides there, you see energy investment flow in years to come. And one key thing I'd like to mention here, ladies and gentlemen, is the fact that irrespective of the claim for renewables, I'm not against renewables, that oil and gas has come to stay and it's going to be there up until 2050 and even beyond. Whilst we look at the improvement of renewable that is intermittent, because renewables, like we all know, will not and cannot drive most of our heavy industries and the heavy energy needs that we have. So again, looking at the global energy demand for fuel, oil plays a key role. And then secondly, we have natural gas. And the good thing in this part of the world, in Nigeria, is that we have over 209 trillion cubic feet of gas proven, and of course, around 600 TCF unproven. So we are equally capable of meeting our energy demand. But the right environment needs to be in place, which takes us to the benefit of what the petroleum industry act has brought to bear. Before now, investors were having some thinking to say, in this climate, I cannot invest. But with the PIA, it has attracted the right investment because the PIA played some bit of, if you like, grandfathering role to attract that needed investment. So looking at energy, of course, the emission and of course supply security, like I did mention in my opening remark, the world needs energy to power it, and someone has to produce the energy responsibly. Looking at ESG, of course, stringent regulatory frameworks, and overall, capital is required to produce the energy in resource-rich countries like we have in Nigeria. So again, fossil fuel will still power the world, currently around 70, maybe 75%, and renewables is doing about 25, 30%, which means oil and gas, like I did mention, will be there. So bringing it back home, let's look at why we need to invest, and of course, how we can attract that needed fund. A professor friend of mine used to say, Justice, if you go to a 20th floor and you drop 50 bags of salt, you come back after a year, will you see them? I said, yes, the salt will be there. So if you drop another 10 cartons of sugar, if you come back after 2 years, will you see the sugar? And I'm like, maybe, maybe not. And he said, okay, why won't you see them? I said, it will attract ants to eat up the sugar. So what we need in this climate now is to get that sugar that will attract investors to bring in the funds here, because we have a lot of our resources on the ground that we need to explore. So premium quality crude, a given that we all know, stable regime and regulations, policy transparency, regulatory certainty. The PIA has now opened up, and the two regulatory bodies that came up, the upstream aspect and the midstream downstream, have churned out regulations to underpin the operationalization of what the PIA has. And we can see over the years since this came up that investment has begun to come in that climate. Of course, experienced workforce, you cannot gloss over that. We need that workforce, and 35 years average age, 50% with 2 or more degrees. Local content has played a significant role, and you cannot just wish that away. And that is one thing that has given opportunity for indigenous operators to hold sway in that sector. And of course, the fiscal attractions. The other bit now is a call to resilience and innovation. Environmental restrictions, which the ESG, like I mentioned, speak to. So we have compliance issues. Sustainability, of course, has come to stay. And what investors want to see, where they put their money, so that they won't have that issue to say they're not in the right thing. Market volatility, geopolitics is another one that we cannot gloss over. Regulatory changes, like I did mention, the PIA. And so what are our challenges? Amongst the numerous Hydra-headed challenges, I just point to these three. Oil and gas capital now has choice of movement between mature fields and new frontiers. The second one, changes in governance structure of onshore assets. Again, we all know the divestment by IOCs, which is a given now. And then the third one, corporate governance, which is very key. And I think the indigenous companies need to boost up and step up and take that ownership. And most of them have demonstrated that to bring to bear. And in the industry that we know that most of our productions come from the onshore assets, and we have communities. So just like the PA captured what industry needs to do for the local communities, that has to take a center stage, because if you don't carry your host communities along, then you've already started to fail from the outset. So looking forward, how do we mitigate governance and compliance risks? Because compliance is something you cannot just wish away. If you go against the regulations, NEPRC, NMDPRA, for the midstream downstream players, they will come heavy on you. And the good thing is that the current set of regulatory institutions, NEPRC and NMDPRA, they're not doing policing work. They are enablers. They're trying to enable the business. And so from the outset, they engage, they indulge, and they tell you, say, you need to do this, engage us and we can help. But where you fault, I think they have a sledgehammer that they can use to maybe to kill an ant. So the other bit, what are the causes of weak governance and compliance issues? Are there new terms to explore? Are there compliance initiatives to implement beyond ISO certification, which is voluntary? What other regulatory compliance initiatives? Because as an industry, as a company, one good thing you can do, and you can be the poster company, is to self-regulate yourself and be that attraction, that, in quote, the sugar I talked about, that will attract the ants, that will bring investors to play in your space. Over the years, with 3-4 years while I was in government, there was this claim for an energy bank, African energy bank, and I think it is beginning to gain traction, and I want to believe that the panelists will speak to that. So, in wrapping up our collective odyssey, several challenges as well as opportunities abound, and legacy issues, but the only way you can address this is cooperation, collaboration, trust, and corporate governance, which you cannot just gloss over. So what gives us hope for the future is our collective ability to overcome challenges and seize the opportunities. And these opportunities, I believe the panelists will speak to, and of course, profile other viable solutions. Thank you.
Thank you very much, Dr. Justice Derefaki. Yes, please. Thank you very much. Speaking on behalf of Mr. Balawunti, Chief Upstream Investment Officer of the NMPC Upstream Investment Management Services, NIES. Let's please give them another round of applause. It's as though you knew, you were not here yesterday, that I've been giving out award for accurate timekeepers. You just got a badge. Accurate timekeeper. Dr. Justice Derefaka, accurate timekeeper. Can add that to your... Thank you very much. Onwards now to the panel. Please join me as I make welcome our panelists. First off, let's welcome the partner, Argentil Capital Partners Limited, Mr. Olumide Ogunfowora, CFA. You're welcome. Put your hands together, please. Thank you very much. Just right here. Thank you. Yes, please. Joining Mr. Ogunfowora on the panel, we would like to welcome Chief Executive, Africa Energy Investment Corporation, Apple Fund, Mr. Zakaria Dosso. You're welcome. GCFO, Pan Ocean Oil Corporation Nigeria Limited, a New Cross group of companies, is on the panel. Let's welcome Dr. Sheyi Oladapo. You're welcome. Director, Strand Ventures, is on the panel. Let's welcome Mr. Ig van Krinigan. All right, thank you very much. And of course, our moderator, I did say earlier, is the founder and chief executive officer of Dindo Energy Services and Resources Limited. Please let's welcome Ms. Chidima Obi. You're welcome. Okay, so stage is set. Madam Moderator, ma'am, is all yours.
Good morning, distinguished audience. We're happy to have all of you here in our midst. And my distinguished panel, we are saddled with the very nice opportunity to discuss finance and investment. So this is the finance and investment session. And as we all will agree, since the commencement of this summit, finance has been on the burner. In this panel, we are going to have our eminent discussants tell us where to find the money. I have no doubt that they're going to be able to lead the House to really understand the emerging trends in financing, in energy sector, crisscrossing the issues of government policies, securities, the energy bank, and without much ado, I'd like to set the tone of the conference, of the panel, by letting each and every one of them give us their opening remarks on the topic at hand, which is the energy, finance, and investment. Mr. Olumide, I'd like to start with you.
Okay, thank you, moderator, and good morning, everybody. I think just briefly from our own experiences, I'd just like to speak about one particular element of energy financing that's a challenge for us in Nigeria, and that is the equity gap. As we all know, oil and gas investments, they are massive, ranging from anywhere from $10 million or equivalent to billions. And I think one of the biggest challenges that we have in Nigeria and indeed Africa is being able to have that equity capital that would permit you to even get that project to reality. So just two big buckets. The first bucket is the development capital that is required. Each of these projects, typically to get it to a bankable state, you will need a few $1 million equivalent, depending on the complexity. Now, we know our entrepreneurs are working really hard, but it is extremely difficult to get maybe $5 to $10 million to progress a project to a bankable stage, given the challenges that we know we have in Africa to even get that money. So this is not a knock on them. It's actually kudos to them that they are actually even able to come in and put $1, $2 million, $3 million, which may not result in the project going forward at the end of the day. So I have this quick thing that I say that if you have $1 million in Africa, it's almost the equivalent of having $10 million in a place like America. That is how difficult it is to gather that money. So how can we address and support these entrepreneurs to have that equity? Because if you go to a bank now, they will tell you to bring in maybe 10, 20, 30% of the funding as equity. But how can we have that? How can we bridge that equity gap? I think that is a major element of the discussions that I'd like to just table to the hall. Thank you.
Thank you, Olumide. Mr. Darso, would like to get your views on the opening remarks, and just bear in mind that the business energy follows money, and as you're speaking to the audience from your experience, we would like you to, tell us how we can generally attract those investments in fossil fuels and renewable energy, the energy mix.
It's me?
Yes, that's
okay.
it.
Thank you so much, madam.
Zachary, sorry.
Okay.
Zachary.
Allow me just to give a...
That's his surname. His surname is Zachary Darso.
Yes, Zachary. So good morning, everyone. Just let me give a quick, small picture of the fossil oil situation, for example, in Africa. In 2008, Africa produced daily 10 million barrels per day, and 2008, 10, and 2022, 7 million barrels. So it decreased. But worldwide, we produce 83 million barrels per day, and in 28 and 2022, 93 So worldwide it increased. So in 2008, Africa was producing 12% of crude oil daily, and 2022, Africa was producing 7%. So the production of Africa decreased mainly because of lack of investment, not because we don't have enough reserve. So that is showing us the critical situation of the investment in Africa oil sector, and we need to invest. And we have some challenges. So the good news is wherever we have the challenges, we have also opportunity. So this is a good opportunity also to invest in Africa fossil oil sector, and if we go beyond that, the energy sectors. We know every time during meeting we are saying that more than 600 million are lacking energy, all those things. And 2 days ago, the OPEC secretary was saying, for example, we are expecting more than $40 billion in terms of investment opportunity globally in the energy market. So all those data are showing that the energy sector is in need of investment. But coming back to Africa sector, for example, we also know that we are exporting our crude oil and importing petroleum product, for example. This is an opportunity. Thank God Dangote has built his own refinery, but we need more refinery, we need more investment in the value chain so that we can also create jobs, increase our economy and the sector also. This is what I want to say for start, and I think during the course of the discussion, we can go on the solution provided by government institution to tackle the challenge of financing.
Shay, you're next online. Give us your opening remarks, taking the vast experiences of your establishment in this country to the audience on handling finance and challenges.
Thank you, moderator, and distinguished ladies and gentlemen, standing on the assisting protocol. I think we need to just understand the ABC of finance when we speak of energy, investment, and finance. There is need to make projects bankable. I work with a group that operates within the upstream and midstream sector of the energy business space. And we've been around for close that have actually kept us reflecting ESG. That's environmental, social, and governance in what we do. And driven by process and data in our decision-making system. So we need to just look at what are those things that investors want to see in order to make and to see a project bankable. The first one is return on investment. This return on investment must be competitive, and there must not be anything because of the opportunity cost on everything that you are investing. The security of the capital is actually very essential. Security of the capital in terms of the policies, having enabling environment, and seeing into the future of because the amount invested must be kept secured. And the third one is the going concern, which is the sustainability of the investment. So for us to actually pass the test of time on this, collaboration is actually very key, even as we navigate through this new energy, world order. Collaboration in the sense that the government, the policymakers, the community, even the people in academia, the consulting arm, because we are looking for the knowledge. Knowledge is power. So that when we have this knowledge, any policy, any circular will
Shay,
pass
don't give
the
it
test
all
of
out.
time.
Don't give it all out.
We'll pass the test of time, but our project is bankable. Once your project is bankable, then it will attract the funding that you need. And we'll still speak about that. Thank you.
Sheyi is a finance core person that's gone through the mill. So if we leave him on the mic, he can take all the time in the opening remarks. Ik, I would like you to give us some opening remarks based on our discussions behind the scenes of your being here, seeing through all the financial truths of managing our assets and in the country. So based on your experience in coming to Nigeria and financing projects here for over 3 decades, can you just give us an opening remarks on how we harness the finance to move on in our energy mix?
Perfectly. Thank you very much, Madam Moderator, distinguished ladies and gentlemen. I think one of the key considerations here is when you come down to a bankable project is risk and security assessment. For the large IOCs that operate in multiple countries and have multiple assets, they can balance that risk portfolio much more manageably, although every now and again something does blow up massively, like in Mozambique. Here in Nigeria, it affects mainly the smaller independents because they have smaller numbers of assets, so it becomes harder for them to raise funding unless they actually have a very solid security and risk assessment and a means of mitigating that security and risk. With that, they can obtain funding. Without it, they will struggle to obtain the funding because you are deploying significant sums of capital over a significant period of time in order to make your returns. And for international investors, they need to see that security, they need to see the risk assessment before they're willing to back you and deploy the cash in. And that's really a crucial element for any bankable feasibility study to make sure the money's going to be safe and how you get the money out, but more importantly, when something does go wrong, because usually it does, what are your mitigates in order to reflect that and to get the project back on track? That is very crucial. Thank you.
Thank you. And on that cue, I'll still come back to you, Ik. Can you speak on your experiences in how security concerns impact energy investment decisions, especially in regions prone to instability and conflict related to, we're in Nigeria, and over the years you had done investment, and the keynote speaker had told us in the last 2-3 years there was capital outflow in our country, which is regaining traction now because of policy. Can you please tell us how security factors play a key role in attracting investments into the energy sector?
Yeah, of course. Yeah, it comes down to a single point. When you're investing large sums of cash, either for an independent, an IOC, or a mid-tier player in any form of energy, the capital needs to be deployed into the country. You have a long feed stage, which is the engineering and design stage. Then you have the build-out stage, and then obviously the operation. So it may take you 5, 10, 15, 20 years before you get your full capital back. So therefore, as an investor, when you're looking at projects, you actually have to look at the security of the country and whether or not you're willing to back that country. It's not just that Nigeria's had problems. There's been a lot of countries that have gone from being investable to uninvestable around the world, and it can happen very, very quickly. So we look typically at the 3 levels. At the high level, effectively, you look at how can you effectively mitigate, and via that you can use certain international organisations. You can get meagre insurance, get backing from people like Afreximbank, AFC, the World Bank, and these large organisations can provide you some protection in certain countries because the governments are shareholders and therefore they do not want to see those projects being disrupted. Secondly, you can get various insurance wraps as well, in particular out of Lloyd's of London, which will help mitigate that risk, but that comes at a cost because there is a financial cost for taking these packages. For the big IOCs and for the big projects to become bankable, they have the balance sheet, they have the firepower, they can do it. For the mid-tier and for the independents, quite often that insurance wrap will turn the project from being an attractive internal rate of return to uninvestable. So that's actually a negative. So what you need to see in country is effectively AAA. You need at the top layer significant support from the government to make sure that you have robust military and police providing security in country, protecting assets, protecting people, because it's not just the physical capital, it is the human capital as well that you have to protect, and that's obviously your local population. Secondly is the mid-tier, what I call the mid-tier, and that's at the state level. You need to likewise work with the government. You also need to understand each independent state you're operating in and work with them. And at the lowest level, you need local community engagement, and you need the support of the community, be it making sure they get jobs, and then you can do certain civils and infrastructure in the areas, sort of like roads, bridges, schools, health clinic and so forth, to make sure the local community are on side. Because one of the things historically we have seen, not just here in Nigeria but other African countries, is that companies come in, do a project, and there's no trickle down to the local population, and that causes a lot of issues. So for us, and for a lot of funders who work with us, you need that multi-layer approach. You have to engage with the stakeholders, and the stakeholders are the local community, are the state, and the government, to make sure that they understand the long-term benefits to the country in terms of taxes, in terms of employment, and that helps the country, that helps the economy. And I think that's the key thing. And if you can deliver those functions, you can avoid a lot of the security issues at all, because a lot of the security issues are actually self-made by the companies being arrogant and just being plain stupid sometimes.
Thank you, E. Shay, I'm coming back to you. I'm doing the reverse osmosis. I'd like you to, share with us. I remember as a youth copper, Panocean was, which is your company, was one of the foremost indigenous companies. And you've gone through your history and stories. Can you share with us the likely challenges and opportunities for investment in new energy projects, evolving projects? And whilst you're speaking to that, I'd also want you to kind of come from the very high horses of those who had stayed for a long time and probably address the issues on young entrants, investors in the energy mix.
Okay, thank you, moderator. It is crystal clear that while maturing any opportunity, we must not lose sight of the challenges that will pose. We're having some lucrative opportunities that the emerging markets had actually posed. Now, if we are transiting from fossil fuel-based energy to renewable and the carbonization of the same. So we need to know the opportunities first, then we can now look at the challenges and how we can manage the risk attached to those challenges. Now, from the keynote speaker, we heard that part of the opportunities in the emerging market, we have rising energy demand. That demand is there, the market is there, and not only that, we have abundant natural resources. Abundant natural resources in terms of very rich reserves of fossil fuel. The crude oil in this country is 37.1 billion barrels proven. Natural gas, 209 trillion cubic feet proven. 600 trillion cubic feet unproven. Then we have sources of renewable energy. And we're having the human capital also that can actually make the transition very easy. Then we have opportunity, investment opportunity for people to actually develop infrastructure. Now, where we are coming from, we've actually gone through this. And like I said, for any project to be bankable, the requirement of the fund providers, requirement of other key stakeholders must be met. So as a country, as a continent, as an individual, we must know the key roles that we are playing. So what are those challenges that we are having? We can attribute some of the challenges to the security that has actually been mentioned here. Nobody wants to lose any capital invested in any project. And knowing full well that in this industry, it requires huge capital investment and with long gestation period. So you need a certain level of stability in government policy because you are putting the project document together with some key assumptions. So if those key assumptions are valid and over the years they can remain the same, then before the maturity of that project, we are not having a change, then the project can still be a lucrative one. But changes in policies can actually make nonsense of whatever financial model that one has actually put together. So that's why collaboration is actually very inevitable here. Collaboration of the key stakeholders, government in terms of having good environment, and I mentioned something around academia here. We have the skills, we have that human capital. Let's bring them to table. The consulting, so why formulating the policy so that we can formulate a policy that can be in place for at least 10 years? So if the potential investors know that this policy that I'm actually using as the basis for my investment making decision will still be there, then there will be security of capital and assurance. And that can actually retain investment even in the country and in the company. Then, not only that, I mentioned the academia and even the host communities should be part of it, because when you are talking about security, you need the host community and other community there. And we also need investors to do due diligence on whatever they are doing. While making investment decision, let some certain things that can prevent threats to the going concern be there. And that's why I mentioned ESG. ESG is actually becoming very popular now, to have sustainable investment. And what does the ESG does? It makes your investment to be environmentally friendly. And it makes it to pass the test of time economic-wise, profitable, and affordable. And the social element of it, culturally acceptable, and accessible. Once you have these, even you can present a package that can attract funding from the fund giver. Now, from Pan Ocean side of it, we've actually synergized and we believe in collaboration. In both things that we have done, we've collaborated with the government very well, with the other key stakeholders to have insight into what you are doing, and transparency is actually very key. Let your decision making be driven by data and process. And with this, one can have something that can pass the test of time. Then in the area of legal and contractual risk, in this space, we have a complex legal framework and weak contract enforcement mechanism. That will pose a challenge to an investor. And also, infrastructure deficiencies. We need to work on our infrastructure so that people can see that I can have quick wins. When I'm investing in this, take for instance, if you're investing in upstream, you know that the downstream, the midstream infrastructures are there. I can easily connect to the evacuation route and getting into the terminal in terms of the upstream, end to end, and across the value chain. That helps, and all stakeholders must be involved in actually getting this done. But the policy that drives this must actually see and ensure security of the capital invested.
Thank you.
Thank you.
Thank you. Zachary, you speak for Africa, right? As the CEO of the Investment Corporation, I'd like to pose this issue so you can address the audience on how private sector, government agencies, and international organizations work together to mobilize investment capital for energy infrastructure, generally speaking. And this is my own assumption that if we're able to establish that energy bank that we're all clamoring for, there would be some breath of air coming to Africa within our own pooling of salvation space to be able to get deep hands into our own funds that are established for the energy sector. Please enlighten us on this.
Thank you so much, Madam. This gives me the opportunity to talk about the strategy of Apple to solve the problem of the funding of the hydrocarbon sector, particularly, and in general, energy sector. Apple, African Petroleum Producer Organization, established its fund called previously APA Fund. It set up this fund in 1992, but it was mainly focused on internal project of Apple. And because of the world trends, we made a reform of the fund to create a proper financial institution called Africa Energy Investment Corporation with a capital of $1 billion and mainly focus on financing the development of the hydrocarbon sector and energy in general in Africa. And in the equity fundraising, we approached Afrexim Bank to assist to raise the fund. And during 1 year of working together, Afrexim Bank said they already financed the sector, and $1 billion they think is not enough for the sector. And they approached to propose to establish a joint venture institution so that we can work together to solve the problem. So this is the origin of the Africa Energy Bank. I know since months now you have heard about this, or Africa Energy Bank, Africa Energy Bank. So we're working on that. The Council of Ministers of Apple approved the idea to work with Afrexim Bank to establish this Africa Energy Bank. It was during an extraordinary meeting of the ministers 2022 in Angola. And we are done now with the negotiation with Afrexim Bank. The main term to establish the bank, it will be a development bank like Afrexim Bank itself has an African Development Bank. It will be focused on financing the energy sector in Africa, but primarily hydrocarbon, since Western people are withdrawing the funding for this sector. And we, Africa, we have enough resources to fund this sector, enough resources to harness this natural resources. We have so many countries depending on the revenue from fossil oil, so we have to fund these resources. And what I can share with you, the capital of this bank to start will be $5 billion.
Wow.
The two main...
It's a lot of money.
$5 billion. And the two main funding members will be Apple and Afrexim Bank. And when you hear Apple, it means behind Apple, we have Apple member countries, we have Apple National Oil Company, and all sovereign wealth fund, those countries who have sovereign wealth fund, all national entity will invest through Apple, and coming has a block in the bank. So that if other entity have the majority, may have a majority, the Apple block will still have its word to say, so that we cannot change. So that we cannot change the vision or the direction of the bank. So that if Apple says the bank is for finance mainly hydrocarbon, they will keep the majority so that the bank will keep financing this strategic sector for our country. It's very, very important. And we also expecting some other investors. It may be financial institution, regional or continental, or outside Africa, but we are not expecting any sovereign investors outside Africa. So those are the solution. The APO member countries are generally composed by ministers. So they are thinking the solution like this, and we are expecting from each country around 80 million to invest. But the countries that can invest more will be happy to receive that. Because the bank will start with 5 billion, but I'm sure after 2-3 years, we hope the capital will increase to 20 million, 50 million.
Thank you, Zachary. Thank you very much. Olumide, I've been told that we have very little time to wrap up because the Minister of State for Gas is coming in to speak to the audience. Please, following from Zachary's cue as an investment capitalist, how would you speak to the issue of still emerging trends in energy finance and how private sector and government agencies and international organizations will work together to mobilize investment? Unfortunately, I'm going to give you 2 minutes to do this, and then I just give the rest of the panelists 30 seconds. Cheyi, you have 30 seconds to wrap up. Olumide, please.
Thank you. Look, I'll just focus on some key things that we need to apply in Nigeria. We all know that we have to look inward to raise capital. It's very basic. We are not going to get money or rely on foreign investors. Let us build internally. My main thesis, therefore, to everybody is that, look, we have about 130 trillion of capital in Nigeria, comprised from investments in banks, insurance industries, sovereign wealth funds, and then a pension. Look, let us work with these agencies to even look at 1% of these funds under management to support equity investment. By so doing, right, you can easily tap into about 1.5 trillion naira that can be sort of more an equity base to develop these projects. Now, this would then leverage on what I would call the 1% rule. 1% rule means that this 1.3 trillion naira can basically support, really, over time, investments of about at least maybe 10 times, I should say, 10% rule, I should say. Okay, so that would then be channeled to support projects and tap into the other financing institutions. We've talked about African Energy Bank. We see this success. It is already successful. We don't need to look anywhere to know the impact of AfriExim. They started off with just about $1.2 billion. Today, the asset base is 34 billion. AFC is there. NSI is there. We need to actually take this thing and develop our own Nigerian Energy Bank that will supplement the efforts of the Africa Energy Bank. You see, we can't tax our way to prosperity. We can't save our way to prosperity. We can only invest to prosperity. Let us start small. And over time, we'll be surprised about how much we can do. Nigerian pension funds, as an example, have about 18 trillion under management. If you took 1% of it, okay, the results will be unbelievable in a few years' time. Thank you.
Thank you. I'm so sorry to rush you, and that's Richmond cutting on our time. And we'll have to give space to the minister. Can you just give us a 30 seconds closing remarks?
Guys, let us stop avoiding risk. Let us embrace risk. That is what we do in Nigeria today. We avoid. Embrace it. It is okay for you to lose that 1% I talked about. It's not going to make the pensioner poor. What is going to make the pensioner poor is that at age 65, after getting their investment in fixed resource, they are still paying 600 naira per kilowatt hour for electricity generation. Pay that money down to secure your future.
Thank you. Zachary.
My
30 seconds.
My last word will, we Africa, we got to build our own financial capability, and we are on the right way to build that. So that if we have our own financial capability, we can implement our own strategy, but not be subject to the strategy of outside Africa.
Thank you. Sheyi, 30 seconds.
Thank you. 30 seconds. The Energy Bank must have its ownership cut across the stakeholders in the industry. It shouldn't be restricted to a particular, probably Apple and Afrezim only. Then collaboration is key. If we are going to pass the test of time and prevent security issues here, then incentives from government is actually very key to make the project more lucrative, like tax holiday, and that can stimulate investment in energy.
Thank you. Thank you. Aik?
Yeah, I think the key thing here is to engage all stakeholders from the government all the way down to the local communities, and that mitigates a lot of security and risk for your project and gets you funding. Simple.
Thank you. Richmond had taken 10 minutes out of our time, but I did promise him when we were getting on here that we were going to give the audience space, but we don't have that opportunity again. You can all agree with me that 30, 45 minutes is just a trickle to discuss financing of the energy sector. You've been a wonderful audience. Thank you for listening to us. We wish we had more time to deliberate on this. And to my distinguished panelists, thank you for dousing my fears behind the walls. I'm a lawyer. The first time I was told I was going to talk about investment, yes, they say lawyers know all things. I was like, no, what am I going to talk about? But they say preparedness, opportunity meets preparedness, and we did prepare. I'm sorry we are not able to deliver all we wanted to, but I think we've had a good session. Thank you for your time.
Thank you very much. Let's quickly give you your plaques. First begin with Mr. Ig van Krunigan. Thank you so much for sharing your thoughts with us. We appreciate it. I'll be followed by Dr. Sheyi Oladapo. Thank you. Thank you. And moderator, thank you for your understanding. Photographers, thank you for your understanding. You make me feel too powerful. I'm not that powerful, though. I'm an errand boy. They send me and I go. Who am I? Who am I? Thank you so much for obeying. Thank you. Thank you. Mr. Zachary Doso, thank you so much. Thank you. Thank you, Mr. Olu Ogunfowora, CFA. Thank you so much. Thank you. And thank you, our moderator, Barrister Obi. Thank you so much. Do that and then quickly take pictures, and kindly photographers leave the front. We'll appreciate it. Quick, picture. Oh, please join them in that picture, sir. You took pictures as well. Oh, there's one for Mr. Balawunti. Please come, Dr. Derefaka. Please, there's one for Mr. Balawunti, and then you join the picture. Please take that one. Thank you very much. All right, thank you very much. Let me acknowledge the presence here. Please take your seats. Thank you very much. Take your seats in the audience. Let me acknowledge the presence of the Right Honorable Peripo, our Minister of State, Petroleum Resources Gas, as well as Dr. Matthew Opoku Prempe, the Minister for Energy of Ghana. Thank you, Your Excellency, for joining us, as well as Mr. Andrew Mensah, the Deputy Minister for Energy of Ghana. Can you please give our Honorable Ministers a round of applause? Thank you very much. Your Excellencies, very distinguished ladies and gentlemen, you are aware that our President is the Minister of Petroleum Resources and has assigned 2 very able lieutenants to lead gas and oil. Now, our Minister for Gas has been asked by the President to represent him at the Gas Exporting Countries Forum. Now, sometimes these events coincide internationally, and the Honorable Minister of Gas would have to leave for Algiers even this morning. We thank our Minister for Ghana, who is also here to speak at this session. So we'll beg your indulgence that the Minister for Gas would make his remarks to kickstart the session. Then I'll go back to what I have on the agenda, which will be Mr. Edubong will speak, and then Mr. Nwokedi will speak, and then Mr. Osubo will speak, and then we will take the Honorable Minister of Energy for Ghana, his address, and we will then drive into the panel session following that address. But if we get a legislator in, we'll take it at that time. Honorable Minister, sir, please, over to you.
The Honorable Minister for Energy, my brother from Ghana, and the Deputy Minister, the Permanent Secretaries, Decade of Gas. I have seen Shell, Chevron, UTM, and other distinguished guests that are here. It is a wonderful day for us, and today we are talking about gas, which is the direction to flow. And I believe with the faces that I've seen today, you will really articulate what we need to move the gas sector forward. Nigeria has no business with energy poverty. I've been saying that. And if you verify it, you see that it is the naked truth. So I call on all of us to contribute meaningfully to this meeting that we are having today. The global call for energy transition is a wake-up call for Nigeria as a nation with the abundant resources, that we rise up and take our rightful position in the energy landscape. And of course, if we develop the sector well, the way it should be, and we will be able to meet the local demands as well as export for revenue generation to the country. I believe we have competent people that are manning the sector. So I call on all the critical stakeholders to come out and assist us. It is not for the Minister of State Petroleum Resources, Gas alone. It is for all of us. We need to rise up and fix Nigeria and take Nigeria to the rightful position that it belongs, so that tomorrow, generation come will be able to know that we have started something very, very significant. Thank you very much and welcome to this very session. God bless us.
Thank you very much, Your Excellency, the Right Honorable Peripe Ekpo, Honorable Minister of State Petroleum Resources, Gas. And Godspeed as you go to represent His Excellency President Bola Ahmed Tinubu at the Gas Exporting Countries Forum in Algiers, and continue the conversation of why we must make gas our destination, transition and destination fuel. Thank you. We're moving on with the gas agenda. We're looking at a blueprint to reality, from blueprint to reality, navigating Nigeria and Africa's gas sector and balanced narrative on energy transition. So real quick, I move on back to where it is. A couple of years ago, we set up the Decade of Gas, and currently leading the charge for government and indeed the private sector in that Decade of Gas Secretariat is the former president of the Nigerian Gas Association. So please join me in welcoming the director at the Secretariat of Decade of Gas, Mr. Ed Ubong, for his own remarks.
Good morning, ladies and gentlemen. Please permit me to stand on existing protocols respectively set by the Honorable Minister of State for Gas for going for the GECF holding in Algeria. I think I just want to say a little bit around where we are today as a country, and it's a message around resilience. We know the challenges that we have across various sectors in the country, but the gas sector has remained resilient in spite of the forex challenges, in spite of the fuel challenges, different challenges. And this is a testament to quite a number of people, which I would like to sort of acknowledge. At the root of that is what we call the upstream producers. They bring gas to the surface. They have continued to bring gas to the surface in spite of all the challenges we are facing. Chevron, N.I.E.S, Seplat, Total Energies, NMPCL Limited and its subsidiaries, ENI, Shell, Savannah, Hayes Holding, ExxonMobil, IPPG, OPTC as a group, the Nigerian Gas Association, the largest umbrella association looking after gas, the Nigerian LPG Association, the large association looking after LPG production in country, the Women in Energy Network, WEN, the WEOG, the LDG looking after local distribution of gas. All these groups of people have continued to put their hands to the plow to ensure that gas supply remains available for people in country. At the other end also have been the big off-takers who have ensured that gas produced has been off-taken and paid for. This includes the likes of NLNG, who sort of export the largest volume of gas virtually. We have the WACP, who ensure that the gas line along the Elf takes gas to neighboring countries, Ghana and Togo, to ensure that there is energy in the West African region. The GENCOs, who have continued to take gas even though they do not get paid on time by all of us in the room. Indorama, BOA, Dangote, Axela, Shell Nigeria Gas, Falcon, Tetraco, they've continued to take bulk volumes of gas that has ensured that the market itself has remained viable. There have also been a couple of players in the LPG market, bulk traders, the likes of Bana, Asico, Stockgap, who continue to ensure that they move LPG from both importation and from LNG back into the market to ensure that we have cooking gas. At the other end, of course, have been players who have said, we do not have the scale of these players, that we will move gas via CNG to various parts of the country. The likes of NIPCO, the likes of Total Support, the likes of Power Gas, the likes of Green Energy, the likes of Cottonwood. I have tried to mention as many of them as I can, but it's quite a large sector. These players continue to work. Of course, we cannot forget our regulators. In Nigeria, it is difficult to regulate because everybody knows your boss. The likes of NMDPRA, the likes of NUPRC, the likes of NCDMB, the Federal Ministry of Environment, the Ministry of Petroleum Resources, Oil, Gas, the Ministry of Power, the Presidency, of course, where we have the SA Energy also looking after all the energy activities. All these people are committed to ensure that the whole sector continues to work. I would also like to thank our communities because all we do sits at that level. They have continued to support the work we do in the gas sector. Our NAS, our National Assembly members, our governors at the state level, because that is where real work gets done. And of course, the media, who have the flexibility of reporting both what they think and what they hear. In spite of all that has occurred, there are a lot of new investors in the gas space. In upstream, the NUPRC has concluded its Nigerian gas field commercialization program. There are over 40 people who have signified interest that they're going to make that program work by turning gas fled to gas commercialized. These are people willing to invest in the sector. The President, of course, has launched the CNG initiative. There are already over 20 people who want to build new CNG compression plants. I see Stars Gas, I see A4E, I see Tamros. In the LNG space, we also have lots of players coming on, the likes of Alphaden, the likes of VTT, and of course there is floating LNG, big scale, multi-million, billion-dollar projects. I can see Julius sitting in front for Run Gas. These are all investors who are still willing to take a long-term position in the Nigerian gas sector. And for these investors, the government, of course, has said we will support you. In line with the PIA, the president has inaugurated the Midstream and Downstream Gas Infrastructure Fund, the largest investment money available for investment only in the gas sector. Today, I see Wole Adama, the executive secretary of that fund. He's holding the money, so I am sure during the course of the day, everyone should please ask him how they can partake in sort of utilizing those funds. A lot of it will come from gas flaring. A lot of it will also come from payments of 0.5 levy on the top of every wholesale price. But his mandate is very clear. That money must be invested back in the gas sector to allow Nigeria to develop its large-scale infrastructure. We have been talking about the decade of gas since 2021. First, it was the year of gas. I see Mr. Tony Atta, one of the pilots for that program. After a year, together with the minister, let's move from a year of gas to a decade of gas. And that's what we have been trying to do. Last year, when we started, at the snapshot, we thought that there were only about 10 projects that could deliver about 3 BCF a day, which was what we saw as the short-term growth. But following the inauguration of the Secretariat and the work being done by all the sponsors group, today we have 20 plus projects that can deliver about 4.6 BCF a day. If we all follow through with that estimate, Nigeria stands a chance of doubling its current gas production. 4.6 BCF a day, that is long-term up to 2030. But it is January and February, and in Shell, where I work for Mr. Osage Okombo, he always says, hey, let us agree what we are going to deliver this year first. So this year, I think, based on all that we have seen and working with all the critical stakeholders, we are confident that we can add 20% to Nigeria's current production. There, of course, we will thank the likes of Seplat and Shell who are working on the Asa North project. Chevron has committed to ensure that they continue to produce over 300 million of scoff of gas a day into the Alps. So apart from sustenance, we're going to see a 20% jump in gas production in country. Additionally, it is worth noting that based on all the work being done by the Honorable Minister of State for Gas, in January alone, the LNG supply has moved to the levels that we're seeing last 2 years ago. That is significant progress. And we will not we are not yet out of the woods, but a lot of work is going on with the National Security Advisor, just ensuring that the resilience that is being built around that supply continues. But that is the trajectory that we are looking at for this year. We also need to make final investment decisions. We think that we can deliver about 5 of that this year. The final investment decision is an indication that we have agreed that we are going to invest money as an industry. Special thanks there to Shell, who declared their first FID in January. Iseni, when it comes on stream, will produce 100 million scoff of gas a day to the Dangote fertilizer plant. That's about 400 megawatts worth of energy that will be consumed in the domestic sector. It is not all done. There are various unlocks, enablers that are being requested by the sector to continue to progress this work. And that discussion has been supported by the NCDMB, the SA for Energy, who is working on looking at how the fiscals can be changed to make projects more profitable. But everybody's NMDPRA who is looking at the economics just to ensure that the issue of gas pricing begins to work. And also there's an improvement along the Alps, which is our main transportation line. All the stakeholders have joined hands to ensure that we are safe and walking that track. I will speak a little bit about infrastructure. Sitting at the back of the Alps is about 300 to 600 million scoff of gas a day, which can become available once we complete the OB3, OB line. The minister spoke about this on day one. What is most important is that today, at the highest level, right from the presidency, there is a monthly report on that piece of work. How is it progressing? The minister assured us on Monday that that work will be completed by the end of March. I know there have been a couple of site visits by the EVP Gas and Power, a key champion for delivering that project, together with the GCO and NPCL. Once OB3 is complete, the link and the spur lines, over 600 million scf of gas a day will become available on the network, feeding into the AKK, feeding into the West where there is significant demand. This is the single most critical infrastructure that we need to complete in the short term to improve the overall gas reliability that we see in the system. We will not finish the conversation without talking about arrears that gas producers are owed for producing gas and selling it to the GenCos. As of last year, that was about 1.3 billion, depending on how you add up the numbers. But I am pleased that between October and the end of January, the government has paid over $120 million to offset some of that debt. More importantly, the government is also now working a framework that can liquidate most of that arrears. That's a piece of work that is ongoing, and we hope that it will be approved, and then the industry can move away from that legacy issues. We must build capacity for gas. The engineers, the technicians that would work in this new gas sector that we are looking at over the next decade. And at the Secretariat, we are committed to that. We're looking for interns. We're looking for young people who are willing to join us and then provide their time and energy in supporting the wider and bigger goal of the sector. For the first time, we now have an interministerial committee, one that involves both the Minister of State for Gas and the Ministry of Power, because power and gas, they go together. We are confident that when that has become fully operational, that critical link between gas and power will lead to more sustainable solutions going forward. Ladies and gentlemen, it's been a pleasure being here since Monday. I know James called this Energy Summit. We thought we were going to hear a lot about oil on Monday, but the discussion very quickly went to energy and gas. We thought the same on Tuesday. We ended up talking a lot about gas. So it's actually been gas day from Monday. And I think it's a testament of what Nigeria needs to move forward. Thank you very much.
Thank you very much. Mr. Edobong is the Director of the Decade of Gas Secretariat. He's giving us the state of play of what is happening with that initiative of government and the private sector. Moving on swiftly now to welcome the General Counsel for Nigeria, LNG, who is also the President of the Nigerian Gas Association. Let's welcome Mr. Akachukwu Nwokedi for his own thoughts.
Thank you, Richmond, for the warm introduction. I think my brother Ed has done an excellent job in establishing the protocol, so with your permission, I would like to adopt it. Let me, first of all, thank the organizers for the kind invitation to deliver the keynote. I must say, it's been an absolute pleasure to be here. First, because the Nigerian Gas Association, as the industry umbrella body and voice, is very interested in the keynote theme, as investment promotion is one of our cardinal objectives. And secondly, we're heavily invested through the activities of our members in ensuring the success of the Decade of Gas, as we see it as pivotal in enabling sustainable development and economic growth for our country, as it impacts all critical sectors of our economy, be it power, industry, security, agriculture, energy, financial services, to mention. Nigeria's gas resources are currently at more than 280 TCF. Is now recognized as the primary catalyst and transition fuel for the realization of several national aspirations, whether it's for the attainment of some UN Sustainable Development Goals, or climate change, or energy security aspirations, and I could go on. So every gathering such as this is important to keep us honest with regards to our expectations on the one side, and on the other side, laser focused on the solutions to enable the potential we have as a nation, especially one that is propelled by gas. There's no doubt with the right policies, the right approach of all the key critical stakeholders and the respect of contracts, thereby creating a very strong legal and contractual stability, we can fully utilize this decade of gas, which I must say the NGA sees as the decade for investment, which is needed to rebuild our nation and unlock a sustainable energy future for Nigeria. If I use the latest corporate buzzword, gas investment is needed to build and sustain today so that we can future-proof Nigeria. Before I go into the core of the theme, which is exploring the types of policies that spur investment and indeed act as a real catalyst for growth during this decade, let me paint a picture of some of the pain points as a business community we see today that act as barriers to investment in our sector. First, where the rubber hits the road is that businesses are in it to make returns, so there must be the enabling environment for the sector to ensure a level playing field, competitive and transparent playing field. Secondly, investments flow where you have policies that have very clear fiscal and commercial terms. So as a minimum, there's recovery of investment. There are issues around speed to market. The GCO mentioned it yesterday, asset and social security, which all need to be addressed. But we note the positive steps already in this area that is yielding results. My brother Ed spoke about legacy debts. It's really an issue as these huge debts are on the books, which erode investor confidence, hindering further investments in upstream and on critical infrastructure. We therefore recognize that there have been steps to clear the debts, and I'm happy to hear that over 120 have already been cleared. But for us in NJ, it's not just clearing the debts, which is a very good thing, but it's putting in place policy mechanisms that will prevent reoccurrence. Then we could call it the elephant in the room, which is the multiplicity of taxes and levies in existing policy regulations, increasing the cost of doing business, which chips away at the returns and discourages new and existing players. I must say, it seems every law passed in Nigeria today levies the business community. And the simple message here is that this has to stop, and the approach needs to be harmonized and streamlined as a matter of urgency, whilst regulations should be positioned primarily as enablers to business, especially recognizing the new reality in our nation that we're in a development stage and all hands must be on deck. The question is, how do we achieve this feat? How do we go from roadmaps to reality? Because we have very solid plans in Nigeria, very solid frameworks for the gas sector. There's no doubt the discussions today will center around identifying sustainable solutions, so these pain points stop recurring to the extent that they discourage investment. Time is of the essence, and so we must move from planning to execution mode because the world is fast changing with the window of opportunity closing, especially when you look at the bold steps of nations like Qatar and the Saudis that are changing the global gas landscape. We can also learn from countries like Australia, Oman, if we add them into the mix, as they have been very deliberate about implementing investor-friendly policies. So, Nigeria's gas potential requires the right enabling environment to attract the much-needed investment to unlock its potential, be it to ramp up production, improve gas infrastructure, drive utilization and exports, boost domestic energy supply, whether it's for power, whether it's for cooking, whether it's for transport, all are aimed at truly supporting the rebirth of our industrialization. The NGA therefore recommends a regulatory impact analysis to be carried out on the main policies and legislative frameworks with direct or indirect impact on the Nigerian gas industry to test, firstly, for harmony, and secondly, for effectiveness in achieving the investment growth and efficiency goals required to achieve our national aspirations. We now need to ask some tough questions. Are the current legislations working for investment? Will they encourage rather than discourage investment? Do the regulatory bodies have the right approach, striking a balance between the much-needed governance on one side and then business support on the other side that will ensure the desired investment outcomes? On this note, we do acknowledge that there are steps in the right direction by the federal government, but they must be sustained and have to carry industry along. For example, the PIA is a very good piece of legislation, and it's responsible for some of the positive steps we see today. But despite its forward-thinking and business-enabling nature, there are still aspects of the legislation that hinder investment and ease of doing business. For example, there are no fiscals that truly incentivize NAG and deepwater project development, and there are also provisions that give rise to multiple taxation concerns. So there's definitely room for improvement. As I conclude, the very experienced panel will no doubt do justice and enrich the discourse. So my rounding up message is simply that gas is a relationship that must last long because of the interconnectivity of investments, the required capital involved, and the relatively long nature of contracts in the industry, which average about 10 to 20 years. We need policies that keep the regulatory relationship, should I say the marriage, interested for the long haul. We also need policies that complement rather than conflict with each other in order to enhance and catalyze the required foreign and domestic investments. Finally, if we stay the course with strong execution discipline that we're used to in our industry, Nigeria's decade of gas can truly become Nigeria's decade for investment. Thank you very much.
Nigeria's decade for investment. Thank you so much, Mr. Akachukwu, the President, Nigerian Gas Association and General Counsel for Nigeria LNG. Thank you so very much. We're still talking gas. I love the way Mr. Obong puts it. We've been talking gas since the one. Even when we did the Pan-African sessions, gas was also on the front burner, more like gas burning, right? Okay, we're moving on to the Managing Director of Nigerian LNG, now Dr. Philip Michel-Bila, who was not able to join us, but speaking on his behalf and making an industry address for the session of the event is Deputy Managing Director, Nigeria LNG Limited. Let's welcome Mr. Olakunle Oshobu.
Thank you very much, Richmond. I will follow suit and stand on already existing protocol by Honorable Minister. Good morning, ladies and gentlemen, once again. And Akachukwu, well done for that. That was quite brilliant. Okay, I've made an attempt to come up because I do not want to miss out on anything. We are gas. The focus is on gas. We have had that for the last 3 days. We've been talking gas. Gas is indeed the future. I'm indeed grateful and honored to be here today, having the opportunity to talk about a topic of great interest to the leadership and policymakers of this great nation, specifically on Nigeria's gas sector competitiveness on the international stage. When you mention the name Nigeria anywhere in the world, what comes across to the mind of business leaders and investors is simply oil and gas endowment. The entire world believes Nigeria is a bedrock of oil and gas. But these industries do not exist in isolation. We play in the global market space and are exposed to global market dynamics. The world is in a golden age of gas, when gas is now playing an important role, both as a clean energy choice and a transition fuel from global demand expected to reach 5.1 trillion cubic meters by 2035. We know that of all energy options, natural gas is far the cleanest, emitting half as much carbon into the atmosphere as coal. Natural gas also fundamentally enables other energy systems. It is reliable in providing the baseload capacity sources of energy such as wind and solar. Natural gas, no doubt, has a significant role to play in the clean future we desire. Now to some statistics. The global population is expected to grow to between 9.5 billion and 10 billion by 2050, with Africa projected to experience significant population growth, rising from about 1.4 billion to 2.5 billion by the same year. Africa is on the brink of a massive takeoff for industrialization, with a growing young population, a youth bulge, with abundant natural resources and emerging internal markets. Africa's real GDP is expected to nearly triple from 2.7 trillion US dollars in 2021 to 7.1 trillion dollars by 2050. This potential for growth relies heavily on energy to provide the necessary amenities, in line with the United States Sustainable Development Goals. The position of Africa in the global energy market cannot be overemphasized. Between 2010 and 2020, approximately 40% of all natural gas discovered worldwide was in Africa, with most of those discoveries located in sub-Saharan Africa. Africa remains a vital part of the global natural gas network, with the continent estimated to hold around 10% of worldwide proven reserves. With the continued growth in natural gas trade, it is anticipated to rise by 36%, exceeding 1,700 billion cubic meters by 2050 from current levels. In 2023, about 14% of global natural gas demand was met through NLNG supplies, highlighting the importance of liquefied natural gas will play in the global energy mix. Global trade in liquefied natural gas reached 404 million tons in 2023, up from 397 million tons in 2022. The United States was the largest exporter, shipping 86 million tons in 2023. The trio of USA, Australia, and Qatar accounted for 60% of the global NLNG supply. Africa supplied about 6% of the global liquefied natural gas volumes. A situation analysis. For the world to achieve the projected level of growth in natural gas trade, a huge upstream investment of 9.7 trillion is required by 2050. Africa and the Middle East are set to require substantial investments to increase gas production and to ensure that they contribute their share to the supply of natural gas into the global market in the future. Africa must take necessary steps to attract required investments to boost the gas industry from exploration to production. Meanwhile, in Nigeria, it's reported to have the highest gas reserves in Africa, making us a key player in the global gas market. However, only about 25% of those reserves are producing presently. According to the Nigerian Midstream and Downstream Petroleum Regulatory Authority, Nigeria's gas reserves grew to 209.5 trillion cubic feet in 2022, which ranks as the 9th largest in the world. But the country harnesses only about 8 billion cubic feet per day. Despite this potential, our country has struggled with inadequate infrastructure to efficiently harness and distribute our gas resources. This infrastructure gap has not only hampered domestic energy growth and power generation, but also the country's ability to export commitments, posing a tremendous risk to its viability as a reliable and competitive gas destination. Furthermore, the current spate of divestment moves in the industry will have immediate challenges at the same time present emerging opportunities. This wave of divestment began in 2010 and has resulted in the divestment of major onshore assets by the IOCs. The major triggers for this wave has been identified as operational risk management, portfolio rationalization, energy transition commitments, and uncertain fiscal and regulatory regime. We have already seen an estimated 21 billion worth of oil and gas assets divested since 2010. Currently, the country's oil and gas industry is undergoing a significant transformation as indigenous independents seek to replace the departing IOCs. While the ongoing divestment program does present certain opportunities, such as the promotion of local content, improved community relations, and potentially more gas production. There are challenges immediately impacting the landscape. Most importantly, funding and financing of existing and future infrastructure and the security of any new investments, i.e., curbing theft, vandalism, and sabotage. What is our way forward? The PIA provides a roadmap to mitigate these challenges. Its provisions have the potential to significantly alter not only the oil and gas landscape of the country, but also to solve the critical objective of bridging the gaping hole in the country's gas infrastructure, which thus far has impacted the sector's competitiveness. The Act introduces several provisions aimed at enhancing the gas industry's attractiveness to investors and improving infrastructure. And we have heard about key infrastructures that will soon come online, looking at the OB3 and the AKK. These major provisions address historical concerns and belief that the Nigeria's gas environment was unfriendly towards private capital investors, and these deterred foreign investments. A key fact is that a dearth of investors significantly impact capital necessary to enhance gas infrastructure within the country. The federal government in August 2022 disclosed that about 20 billion investment yearly is required to bridge the gas infrastructure gap in Nigeria in the next 10 years. These provisions, working alongside the tax incentives established by the PIA, encourages investments from both domestic private groups and foreign interest in Nigeria's gas infrastructure. All this will facilitate an enabling environment that is light on regulatory volatility and heavy on efficiency of process and operations, encouraging foreign investment, which is the means to bridging the infrastructure gap in a competitive and sustainable manner. We, in NLNG and as Nigerians, are confident that these steps will reposition our gas industry to ensure our competitiveness in the international market space. Thank you, ladies and gentlemen. This proverb, he who pays the piper dictates the tune. We need to decide here, who do we want to play a tune? Is it our fellow Africans, or is it the foreign investors majorly? We need to support the Afrexim of this world and all other investment companies working with us. Thank you very much.
Thank you so very much. Mr. Shobo is the Deputy Managing Director of Nigeria LNG, speaking on behalf of Dr. Philip Michel Bila. Philip Michel Bila is, of course, the Managing Director of the company. Did I say earlier that that is Africa's most successfully run company in the energy space, maybe beyond the energy space? Please give them one more round of applause, ladies and gentlemen. Thank you. Okay, so moving on from that, we are gradually getting to the more talked about panel of brilliant experts who will come do justice to the conversation. But before we get there, we would listen to this address. We've been talking about the impact of gas in the Nigerian country and economy. And our next speaker will talk to us from his own perspective of what gas and oil is doing for his country, and with his own vast experience as a man who has traveled the world serving his country and serving the people of his country. He was a former Minister of Education in his country, but then the president deemed it fit that because this man is a surgeon, he should come and conduct some surgery in the energy space of his country. And I hear he's been doing a fantastic job making those incisions and putting on the right policies there. So we're delighted to have him join us today and to come talk to us at this NIES 7th edition. If memory serves me right, I don't think it's his first time, but I'm sure he would remind us that. I'd like to also add one little part that he's from a presidential lineage, as is a grandson of Ghana's former president, one of Ghana's former president. Please welcome with me Ghana's Minister for Energy, His Excellency, Dr. Matthew Okpoku Prempeh. Your Excellency, you're welcome.
I'll start by saying thank you for the warm introduction. As we eat, our parts fail us. And I don't know whether my eyes are failing me or things. I see well in the morning, I didn't see well in the afternoon. I don't see at all in the evening. I'll also start with some really personal thanks. As the Minister of Energy in Ghana, I would like to thank so much my colleague who just left, the Minister of State for Petroleum Resources, Gas. And he was saying we should go to Algeria. And I told him Algeria is for gas exporters. We in Ghana so far we import gas, so we are not going to Algeria yet. And that he should not be so happy about Algeria, he should think about those in West Africa, just like my honorable person said. The Nigerian gas sector has done so well for Ghana, especially in the last few weeks. Without their support, I think Ghana would have been in blackouts. And other neighboring African countries like Togo, Benin, Ivory Coast, and Burkina Faso, that depend so much on electricity from Ghana. So thank you. Thank you. And I wish you the best. As has been said, and standing on existing protocols, the natural gas industry in Africa has significant potential for growth due to the continent's abundant gas reserves. Many African countries with the resource are now awakening and seeking to leverage their natural gas endowment for economic development, energy security, and comparatively reduce greenhouse gas emissions. Africa has the potential to rid itself of abject poverty by the commercialization of natural gas for power generation and industrial purposes. It is a fact that we live in the most energy-deprived continent. And it's a fact that we live in a continent with the highest energy prices. And so when my honorable friend just said, where do we expect who should pay? I think we should think about it very well. That the utilization of gas for Africa's energy self-sufficiency probably will pay for itself as a better investment than taking it to our cold climate elsewhere. We shouldn't be so much concerned if they sleep in bad weather. We should be concerned about whether we get gas for our own energy security and our purposes in Africa first. Nigeria's decade of gas has come as an opportune time to serve the needs of the continent and the world at large. In terms of meeting growing energy demand and also the impetus for industrialization at the reduced cost of the environment. Yes, even that is under threat. So when people hear about green hydrogen, you ask them, what do you use to convert to get the green hydrogen? And it burns more and puts more carbon dioxide in converting our gas to green energy for the other climates. But let's first satisfy ourselves with gas home in Africa here before we talk about other people's needs. Green energy. Africa is home to some of the largest gas reserves. Nigeria, with over 200, today I heard 280 trillion cubic feet of gas. Others also have significant reserves. Mozambique, Angola, Senegal, Cameroon. But we in Ghana are also accelerating our exploratory and developing for more production of its oil and gas reserves in a sustainable way. In the next decade, we can expect to see continued investment in natural gas infrastructure, such as pipelines, liquefied natural gas terminals, power plants, and petrochemical establishments on the continent, which present a unique opportunity for Africa to take charge of its own destiny. We in Africa should be happy about the decade of gas set by Nigeria, because maybe through that, Africa, the black man, would see better prospects around the world. However, one has to be mindful that similar endeavors in the past have been fraught with challenges such as political instability, civil and social unrest, corruption, and regulatory hurdles. Nevertheless, with proper planning, prudent investment, transparency, and collaboration, the natural gas industry in Africa could play a significant role in bridging the energy gap of the continent while ensuring equitable and a just energy transition. As indicated earlier, infrastructure development is key in fulfilling the massive untapped potential for the resource presents. There has to be adequate infrastructure for processing, storage, transportation, and transformation of natural gas resources to meet the market's demands. In this regard, the initiative of Dangote to build a 650,000 barrel per day oil refinery and a petrochemical complex in Nigeria is extremely laudable. In Ghana, we recently commissioned a 100,000 barrel a day oil refinery, the first phase. And we hope to increase our refining capacity and put in more plants in the country. There are other ongoing projects in Ghana like the Tema LNG terminal, the City Gate and the gas distribution pipe network, and the Petroleum Hub Development Corporation, all to put value to our natural resources of oil and gas. Ghana looks forward to Nigeria as its main supplier of affordable, I'll not use the word cheap. I don't believe in the word cheap. Ghana as its main supplier of affordable and reliable gas to complement those of our domestic resources and also to feed the West Africa gas pipeline. The whole of West Africa is hungry for security in energy, and Nigeria stands at the threshold of supplying us that through the West Africa gas pipeline. The execution of the Nigeria to Morocco pipeline will also stimulate patronage of gas and expand the gas market on the continent, especially countries along the pipeline route and within Nigeria itself. Whilst renewable or green energy is often regarded as a competitor for natural gas, on the contrary, the availability of cheap power from natural gas will further enhance the judicious exploitation of our green energy potential. This continent is blessed with huge deposits of lithium, cobalt, platinum, iron ore, manganese, and silica, which are all now regarded as green minerals and are already in high demand. Extraction and processing of these minerals before export will require affordable and reliable energy sources. Else, the continent would once again be faced with the age-old problem of exporting its resources in its raw state and thereby compromising on its value addition. Also, natural gas can serve as a source of hydrogen production to be used for similar purposes with very minimal carbon emissions. The potential of natural gas to transform the African economic landscape is enormous. Adequate indigenous capacity and technology would, however, play a crucial role in materializing this potential. As such, promoting local content must feature prominently in the objectives of the Decade of Gas initiative. This, without doubt, will help boost employment opportunities while promoting African ingenuity. Africa already boasts quite a number of world-class engineers and businessmen to make this happen. Furthermore, the Decade of Gas can only be holistic and more meaningful if Nigeria and other producer countries carry the rest of us Africa along. You cannot be happy on your own, yeah? Just yesterday, I was reading a book, and there was a paragraph talking about happiness. It said, happiness is so much of a relative term that you can only be happy based upon the expectations of around you. If everybody around you is a billionaire, your happiness goes down, right? So I want Nigerians to be happy so that they can be magnanimous enough to give those of us coming up also more gas. So we want to be both happy and enjoy. We can only be happy if we have our energy security. And Nigeria stands at the threshold of ensuring that. So we want you to prioritize gas supply in your region where you live, before considering export to already favorable places. I know you need the money, but the money is here. And I hope Nigeria will take note of that. With the existence of the African Continental Free Trade Area, which is another blessing for the continent, it is now much easier to establish an African regional hub gas pricing system than always relying on the hubs and the other things of other countries. We should start thinking about Africa, also dictating the prices of things around the world and not always relying on others. And I sincerely believe that Nigeria should take the leadership in this regard and bring all of us along the line. The ability of African governments to contribute financially to the development of our natural gas resources is critical to sustaining its viability. So when the speaker before me talked about who was paying the piper, I wanted to tell a story. That if you sit on the resource and you allow somebody to come to extract the resource, and you don't utilize the resource, 80% of the gas and oil and gas that we mine, we drill, is exported in Africa. It's a sad story. The profits go up to Europe. The people who benefit are not like me and you. They don't resemble us that much. And when they finish, they come and tell you that you are poor. And you also go around believing you are poor. No, nevertheless, we are always poor. Let us develop the market within Africa. And let us sell amongst ourselves in Africa. And you realize that Africa is never poor. It has never been poor. So when we talk, and when I hear about infrastructure, doing pipelines, doing LNG terminals, doing power plants, then I think that one thing that we haven't thought about in Africa, one thing we haven't been doing well, one thing we need to do more is the financing of these things that we want to do. So those who have benefited from 80% of Africa's resources, oil and gas, are so rich and so comfortable that they tell you that stop extracting your natural resources. No country has ever done that and prospered. No country has ever stopped exploiting its natural resources and prospered. Why should Africa? So when we heard that almost all the new oil and gas finds are in Africa, I'll take you two stories that happened. They said, we are going to stop investing. It means they are not going to bring their money. Already they are rich. Right? They are not going to bring their money. So I had a senior brother here who was the Minister for State for Petroleum Resources, who just left office, Timmy. And we went in Houston. And we coupled together and said, look, Timmy, if we don't start thinking about having an African energy bank, a bank dedicated to promoting the infrastructure development of agricultural resources, me and you will sit on our oil and gas and we don't know, we will even get some to breathe. So the imperative must be for every oil or non-oil producing country in Africa to invest in the African Energy Bank. Why? Africa has gone through about 3 series of use and dump. First, our best source for energy was said to be hydroelectric power. They were building dams everywhere. When Africa started building dams, we were told that it was not environmentally friendly. So the Congo River that can supply us energy through dam, hydroelectric, was never done. Let us not forget, it was never done. Till date, companies took contracts and never did it. And that river alone can supply us our energy needs. It was never done. Fast forward, one of the most environmentally friendly way to produce energy at a very, very cheap source is nuclear. And the resource is on. Africa is blessed with everything, right? The nuclear resource or uranium found in Africa. Even when South Africa was going to Black Mountain rule, they closed their nuclear power plants. It wasn't good for Africans to have that technical ability, right? And now South Africa is in darkness, right? We haven't stopped. When they talk about sun, We have more sun to provide electricity for the whole of Africa. But do you have the technology and the money to do it? No. When you go to geothermal, East Africa has the potential for geothermal in East Africa. They don't have the money, right? The last time we were there in Africa Climate Conference, there was a big banner on the signing ceremony. I twitched, then I looked at my president and he also said, what is happening? Well, that was not going to be developed for the benefit of East Africa. It was going to be turned into green energy for export. Right? And now gas, that God has helped us so much with. They say we should turn it into green energy. Yes, we would. Yes, we would. Yes, we would. But if we are going to, we should make sure that the people 100 kilometers away from here are not in energy poverty. If electricity is good, it's good for everybody. My colleague, who is not now in the office in Niger, on the side of when he said we will invest, he said, it is imperative that we develop our oil and gas resources. I said, why? He said, afforestation. Our women folk are cutting the trees for coal to eat. The health benefits, I don't know if it's health disbenefits, of cooking with wolf oil. If we can preserve the forest in Niger and in Burkina Faso, that is going down around 100,000 acres per year. We can only do that if we exploit our gas resources. And they say we shouldn't. So we should cut the tree. Say, don't cut the tree. The biggest carbon sink in the world is in Africa. And we don't get value for that. Because you yourself, you think you are cheap, you are poor. So we have to start banding ourselves. We have to start working together as both energy ministers around the country. That is what I advocate, and that is why I'm here. And we also have to bring our environment ministers around, right? Because they go for all these good meetings and sign all these pledges. So, whereas Heineken will be busy looking for people to invest in the oil and bring up more oil. I don't know my colleague here, his name in the energy minister. He goes to sign a contract. Stop drilling by 2025. It's serious, not funny. I attended COP, the last COP, and I was there with my president, my environment minister, my transport minister, and a few others. And I had to rush to Paris and come back. And when I came back, my environment minister had gone to Ghana. But he had gone before we had signed the declaration of COP. So I got very, very worried because the whole world was moving against those of us who have the resource. So I decided to snoop around and participate. And I went into a room, and it was only African ministers who were then advocating our position on the declaration. And I looked around, and there was no energy or natural resource minister. It was these lovely ministers. And it was these lovely ministers, my colleagues from Africa. And they had agreed. And we got shafted. And so the declaration from COP that came said, in the next decade or so, or next 20 years, starting from now, we should, start cutting fossil fuel. And I was wondering. I said, did we read this? So I protested on the floor. I said, did we read this? Because if the issue is something that we should cut carbon dioxide going into the air, there's enough technology in the world now to deploy to reduce carbon in the air, right? If you are talking about the worst resources that the air doesn't need, they're harming the environment. Yes, CO2 is bad, but methane is worse. And where is methane produced? From the cattle in the fields in America, in Switzerland, doing all these dairy products. If you cut methane, maybe the Dutch government would collapse. But they didn't talk, because the next paragraph talked about methane. So we should start thinking about how we reduce our methane gases. That was for Europe, right? And start cutting oil. And they didn't say oil, they said fossil fuel. But the science of fossil fuel Trees are fossil fuel because when you cut and you develop charcoal, it's fossil fuel. Oil is fossil fuel. Coal is fossil fuel. And the number one importer for coal in Africa now, goes to the most complicated and complex industrialized country in the world, Germany. And they import coal from South Africa and told South Africa to shut its coal power generation stations. So the fix, everybody should have the idea that in this world, if you don't protect yourself, nobody will protect you. If we don't learn to trade amongst ourselves as Africans, we will be at the short end of trade purposes. So 2 things I want to leave. We were all very sad in Ghana when Nigeria refused to be part of AFCTA. It was probably the last African country that signed. And yesterday I was with my colleagues and I said, how can a country born in trade, lives in trade, eats in trade, has the internal market be afraid of trade? If we do an AFCT in this Africa and it works well, the number one beneficiary country will be Nigeria. It will not be Togo. And of course, it will not be Benin. So what is your fear? The fear is because you get 1 or 2 people who drive it. What happens to Nigerian farmers? But you see, in this country, there are people who were born with trade in their nerves. They were. We forget that that trade would have extended to refining Nigeria's crude and oil products and shipping around Africa. We forget. We forget that Nigeria is more richer in gold resources, except that they don't know about it. End of trade. So we should participate in African trade. And you should lead us, Nigeria. Wake up and lead Africa. Don't run away from your responsibilities. As far as Nigeria ducks its responsibility of leadership, Africa, the black man will never be free. The second issue is that Africa needs more banks than we have. We are underbanked. We are seriously short of banks to invest in Africa. And so there's African Energy Bank that is coming. I'm sure that I have heard, I don't know. I've heard Nigeria is interested in it. And I've heard it has become even issues on this floor. One, I'm thankful that for Nigeria all of a sudden wants to participate in something in Africa. So the leadership is natural, right? But I told my colleague that I should be careful. Right? So our senior brothers, Heineken and Gas, who do well so for my country. But the fact is that there's a very, very good example that when my colleagues here say that Accra is a suburb of Abuja, I say yes, it's true. Accra is a suburb of Abuja, yes, it's true. But you choose your best suburb to put your best things there, right? You put your best suburb. So Ghana is modeling itself like the Switzerland in West Africa, right? So we want the banks to come, right? And the Nigerians to come and enjoy. So I'll plead with my colleagues that when you have a bank in your suburb, it's still your bank. Except you want a bank where it is safe, it is secure, it is protected. You don't have harams and things around. So please join me in all accepting that the African Energy Bank should be only headquartered. I didn't say it should be in Ghana. There's no bank with only one branch, is there? So you have UBA is now one of the best banks. It's from Nigeria, but it's probably one of the best banks in Ghana. Access Bank and all these FMB, they're all from Nigeria, right? So when we have African Energy Bank, this small thing to why. So, for the first time, I've considered the Jollof war. And yesterday, when I got here and I was hungry, I went to the restaurant in Transcorp and I saw jollof, right? And I didn't want to touch it, right? But there was a beautiful lady standing behind the jollof. And I looked at the lady and I looked at the jollof. So I told the lady, because of you, I'll eat the jollof. Come to me for my thoughts after the jollof. And she came, so I had to dash her some money. And she was eager listening to, I came, sir. I came to hear. And I said, this is a very, 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 very good jollof. Then the lady started jumping, except it doesn't meet Ghana's own. And she didn't even hear that, right? I tell you, she was jumping because I had given her something. She was jumping because he had very, very, very good jollof. But I ended the statement by saying, it's not Ghana. But these jollof wars have gotten to a stage where at COP, the last COP, in Sharm el-Sheikh, the last but one COP, Timmy had gone to address a meeting or something like that. And I was waiting to have a word with him. And our colleague from Senegal, they have also found a lot of resources. There was a lady. She came and said, I'm at you. I'm looking for Nigeria. He didn't say I'm looking for Timmy. I'm looking for Nigeria. You have to help me sort ourselves out. So I said, Timmy is around or something. Let's go and look for him. So we went and we sat in a room and we were talking. I don't know how it ended up in jollof. So because this jollof is so serious, when Ghana plays Nigeria, we both prepare jollof. And me and Timmy got into jollof. Then the lady sat and looked at us and said, hey, hold on, boys. Do you know the word jollof is from Senegal? Whether jollof is from Senegal or Accra or Nigeria doesn't matter. Africa needs to feed itself with the best food. Africa needs energy, the best energy for itself. And thank you.
I think he deserves a resounding ovation. He deserves a resounding ovation. He deserves a resounding ovation. Oh my word. His Excellency Dr. Matthew Opoku Prempeh. Oh my word. I like the sound bites coming out of Ghana. I like the sound bites coming from the ministers of energy, oil, gas in Africa. I am totally enjoying every bit of it. It gives me hope. It gives me confidence that finally we are plotting our own graph and we are placing our own resources on the graph as we deem fit and as we see fit. However, if the best banks in Ghana are Nigerian banks, the headquarter of an energy bank should be around the headquarter of the best bank, so the branch of the energy bank can be in Ghana. I was just thinking. Please give him another round of applause. Thank you so much. Thank you so much. The Ghanaians are inviting you and I to the very first Africa Energy Technology Conference, which is also a partner conference with the Nigerian International Energy Summit. It is taking place on the 12th to the 14th of March and is at the Labadi Beach Hotel in Accra, Ghana. If you're interested to attend, just ask us for one of those flyers, any of our hostesses. It will be given to you. The numbers to contact is on the flyer. Or you check their website. Their website is www.aetconference.com. We'll try and put it up, try and put up that website at some point while I'm speaking or any other time I'm speaking after now. Okay, let's get to the panel real quick. Thank you very much. Please, one more time for the minister. Let's give him a round of applause. Truly inspiring with a lot of humor. Lovely, 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 lovely. Thank you very much. Your Excellency, sir, I thank God. Honorable Minister, sir, I thank God that you are... No, please sit down, sir, please sit down. I thank God that you are a minister, not an MC. I would have had a run for my money, so thank you. Please, keep being a politician, keep being a politician, keep being a politician. Remarkable, remarkable. Well done, well done. All right, so we're moving on swiftly now to the very next panel, as I said, and this time, we're still talking gas. And this panel, I'd like to welcome first off our moderator, Commission Chief Executive of the NUPRC, that's the Nigerian Midstream and Downstream Regulatory Petroleum Authority, Engineer Muya Komola for FNSE, represented by Executive Commissioner Development and Planning. Let's welcome Mr. Amadasu Eronase. You're welcome, sir. Okay, real quick, please. Now, yes. Forgive my interruption, please. All right, so continuing, I'd like to welcome the Authority Chief Executive of the Nigerian Midstream and Downstream Petroleum Regulatory Authority, Engineer Farouk Ahmed, who is not able to join us, but representing him is Executive Director, Distribution Systems, Storage and Retail Infrastructure. Let's welcome Mr. Kalu Ukoha Obugu. You're welcome. As a Nigerian company that is trying to put us on the map of floating LNG projects to increase our gas utilization, and that is UTM Offshore and UTM FLNG Limited. Let's welcome their Chairman and Chief Executive, Mr. Julius Rone. He's on the panel. Yeah. This way, sir. Thank you. Got you. Okay, joining them is the chairman of OPTS, Country Chair Shell Companies in Nigeria, MDSPDC. Let's welcome Mr. Osage Okumbo. You are welcome, sir. Also on the panel is the President, Nigeria LP Gas Association and Managing Director of Asico Energy Limited. Let's welcome Mr. Felix Ekundayo. You're welcome. Executive Director, Owando PLC, COO, Owando Energy Services is here. Let's welcome Dr. Ainoje Alex Irune. You're welcome. The Group Managing Director of Techno Oil. If you would give me a quick second. Changes. All right. The Group Managing Director of Techno Oil Limited, Mrs. Nkechi Obi, is on the panel. She's currently having some urgent meeting somewhere around, and representing her is the General Manager, Techno Oil. Let's welcome Daniel Isiocha. Daniel Isiocha, you are welcome. Mr. Daniel? Okay, Daniel is here. Daniel, you're welcome. Thank you very much. And to drive the conversation and help us get the wisdom and insights of this esteemed panel, I'd like to welcome the Managing Director and Chief Executive Officer of Elling Systems Limited, Ms. Charlotte Essiet. You're welcome.
Good morning, ladies and gentlemen. It's very nice to be here again. And of course, it's good I will be taking on the existing protocols as we dive into this fantastic panel. Fortunately, I think I'm the only female. And of course, this is basically to balance Madam Kechiobi. And so we would dive. I think we've taken a lot of time, and we've had fantastic sessions with ED. That was fantastic. We had with the DMD for NLNG, and then another insight, of course, ACA, and then of course another insight from Dr. Matthew of Ghana. It was very good. I think we all had fun, and we will just continue from where we're starting. I basically would just go dive in. I think we've had so much of around on what we're doing with gas from the year now we're in the decade, and from a regulatory standpoint, And this question will be going to the representative for Mr. Malie Kiari. As a regulator, how is NNPC aligning its gas policies and regulations with the Nigerian Border Energy in terms of the transition goal? At the same time, what is the regulatory reform or initiative that NNPC is advocating for to attract investment and facilitate the commercialization of the gas resources across downstream? He's not here? Oh, shame. Okay, so I will just move to NUPRC, please. So from a regulatory, again, standpoint, how is NUPRC addressing the challenges and ensuring a level playing field for stakeholders involved in LNG, auto gas, LPG, CNG, and gas-to-power initiatives?
Okay, thank you so much. Just to put it on notes, Amanda Spenorice is my name. Ladies and gentlemen, I want to thank you for your presence and also for the speakers and also for the organizer of this program. I'm Executive Commissioner Development and Production, not Planning, from NUPRC. Okay, so if we remember, in 2017, the National Gas Policy was issued, and in 2017, our reserve was 187 TCF. And over time, there has been continuous growth in reserves. It has been slow but steady. And from analysis that have been done just recently, we'll still see another increase again. But then that will be announced at the appropriate time by the Commission's Chief Executive. If you look at the national policy that was issued at that time, it was issued basically to enhance domestic penetration into Nigerian markets. It was enhanced, it was issued to move Nigeria from exports, crude oil export economy to crude oil exports and gas economy, changing the landscape of our economy by using gas. And so we have seen that steady growth. And over time, various governments and also NUPRC has come out with various initiatives, and some of them have been discussed here since the beginning of this program. We hear my brother, Eddie Ebong, the director of Decade of Gas, very well. He has articulated all that we have achieved, all this. We have also seen the Nigeria Gas Commercialization Program that came up from NUPRC, basically to take care of economy, to take care of climate, and also to monetize gas that's being wasted. We have also carried out a study where we have seen uncommitted gas, almost up to about 57 trillion cubic feet of gas. Presently, we are working how we want to unlock and bring out the value from that. There are also some other initiatives that the Commission has also put in place, because if you talk of gas, everybody is talking of production, but nobody is talking about how to increase it, how to bring in more reserves. But there are also initiatives as a regulator that we have put in place. We are looking at encouraging operators in the area of going deeper to see how you can get more gas and increase reserve. Because if you don't talk of reserve and we all focus on production, see how we can have LNG, CNG, time will come where we will not have to be lacking of gas. So on that note, the Commission is doing all that we can, especially enhancing our mantra of business enablement in using our regulatory instruments to enable business. Thank you so much.
Thank you very much. Whilst we're enabling that business, I think it would be best now to go to the operators who are supposed to be getting it from you with the policymaker. And so, Mr. Okubo, please. As an executive in Shell, Shell has extensive experience in LNG and other gas-related projects globally. How is Shell leveraging that expertise and resources to support Nigeria's effort in LNG, auto gas, CNG, LPG, and gas-to-power initiatives? Sir.
Thanks, Charlotte.
Thank you, sir.
Quite a lot you're expecting from me there. But I think the place to start before I delve into the share specifics is just to say, for years, you've heard somebody like me on this stage express quite some frustration about the lack of movement with this abundant resource that we have, 208 TCF discovered, and all sorts of constraints around the place, studies after studies. Nothing was moving. I think the place to start is that I have, in the past 6 to 9 months, seen some pretty decent progress. I think you listen to Ed essentially articulate end to end what is happening in this space. I think the whole initiative of the Decade of Gas has actually been a blessing to this country. So I want to first acknowledge that point, that you're not going to hear me start complaining. There are still constraints in the system. I think Aka Woke did a good job of essentially laying that out. But there's much progress, either from the perspective of the two regulators who are doing a great job, in my view, in taking on the responsibilities that came with the PIA. Let's just say the NNDPRA, in terms of setting the price mechanism and just making sure they steward that space. Excellent progress there. The Minister of State for Petroleum Gas, together with the Permanent Secretary, had a great event on the 6th of February at the PTDF that brought all stakeholders together. And I have seen big push. So when you see the likes of Shell taking FIDs early this year, that Ed talked about earlier, these things are not accidental. And given where we are going, I'm a lot more confident that we finally are charting our path, both in terms of export and domestic. Yeah. Okay, now after that long diatribe, to your question. Shell at the global level is essentially the foremost, the biggest in the world in terms of LNG. We are the global leaders in that. And one of our key heartlands on the LNG space is actually Nigeria. Nigeria LNG, you know that we play a very significant role, both as critical shareholders in Nigeria LNG, but also for the first 6 trains we supply via SPDC, our onshore company, some 53% of the gas supply to that facility. And with the train 7, which is intended to grow the capacity of that plant by another 30%. Glad to have my colleague and friend Tony Atta here, who essentially midwifed that effort. We are still in place to supply over half of the feedstock for that gas. So we are key players in Nigeria LNG. So when you hear us talk about rebalancing our portfolio, I'm still saying we will stay vested seriously in gas, both domestic and export. I expect to see over the next few months, with all the enabling conditions I'm seeing, a lot more FIDs coming out of the Shell space. I would be quick to add that the one area, and you heard me say that yesterday when I gave some remarks at one of the sessions, that we need to fix the issue of our abundant non-associated gas, NAC, which is 50% of our resources. But when we were dealing with the PIB, as it was called at the time, we decided to pack it because we said we'll come back to it. I think we are now struggling to come back to it. But we had some good messages yesterday coming out of the NUPRC chief executive, essentially saying we have some progress underway and we should be getting to a place where we can have the right fiscal environment in a very short time to be able to explore and develop some of those abundant resources. So I'll park it there for now. Thank you, Charlotte.
Thank you, sir. Whilst we have just, please, you must. Once you have carefully spotted out a few words, and I'd like to go into the PIA, and of course NAG being packed, I would also like to put this question to the authority, Kalu. You know, you have to be fostering collaboration between agencies, industry players, and other stakeholders to streamline the regulatory processes and articulate the development of the Nigerian gas sector. What exactly should we be expecting from you?
Thank you very much for the question. If you may permit me, I'd like to first pivot back to your first question, which you were asking NNPC to provide a regulatory insight. Just to clarify that NNPC is an operator and not the regulator. And then when you then ask the same question to our sister regulatory agency, the upstream, to speak to CNG and autogas, again, those are gas derivatives that only the authority will be able to give a fuller explanation for. I thought I should give that. And if I can offer the explanation of what the authority is doing, I wouldn't like to bore us with historical highlights of what we've done. I will just mention between the last time we sat here last year and now, what it is that the authority has done to build more capacity and work with stakeholders. First of all, I think that Ed set the right tone for today, and I would like to continue on that optimistic picture. Within the last 12 months, the authority has continued to work to strengthen the capacity of the decade of gas, being the primary platform for bringing stakeholders in the value chain together, and also to drive the country in transitioning within the fuel supply space. The authority continues to headquarter the Secretariat of the DOG and providing all the resources that they need on ground so that these objectives are met. Secondly, during these last 12 months, the authority has deployed its greatest tool, which is its licensing regimes, to see that much optimization is done within the markets. In that period, we've granted licenses to the gas aggregation company, licenses for gas wholesale trading, licenses for gas trading as well, and we're in the process of completing our initial due diligence for the gas distribution license, which promises to be a last-mile major game changer within the country. There are other things we're working with stakeholders to see. If the Minister of Gas was here, he would acknowledge our efforts within the LPG space. We continue to produce locally much more than we consume domestically, and with operators, a number of them still exporting when the domestic demands are not yet met. The Minister and the authority are working towards creating the enabling environment for much domestication of gas, because with an increased supply, we hope to see a downward trend on the pricing of LPG. The authority, again, is working with the Standard Organization and the Council on Automotive Development to look at conversion. Everybody is saying autogas, CNG, but the experiences from other jurisdictions indicate that it is imperative for us to interrogate conversion, technology, and its sources. And so working with those regulatory agencies, we're looking at standards and what the engineering levels should also be. There's the cylinder as well, because with gas, not just availability, but affordability is also an issue. We've granted a number of, in the process of licensing, a number of cylinder producers within the FCT, even in particular. There are about 2 major producers who will be coming on stream very soon. And we're hoping that all these will drive down the space. Finally, let me speak to the CNG and all that you mentioned. Mr. President's administration came with a fresh impetus on how to ramp up the utilization of gas at the last mile, especially as an alternative to PMS and AGO that we see pricing going through the roof. So what have we done? We've sat down with a number of operators who have plans to develop mother stations and daughter stations. And we have a dedicated engineering team working with them and holding them through the regulatory step to make sure that all these things are achieved at the earliest opportunity. Madam, I can go on and on what we've been doing in the last 12 months, but let me just stop there and wait for further questions. Thank you very much.
Thank you very much for your guidance as well. Mr. Rene, you'll be next, please. With the policies that you've seen and how government is trying to ensure that we have a level playing out, especially for yourselves as an FLNG operator, what are you also seeing or what are you also expecting that will help in safeguarding the environmental protection and community interest?
Thank you very much for the opportunity to be on this panel. First and foremost, I believe the government has done a lot in encouraging investment from the private sector to develop our gas resource. The Decade of Gas is an instrument that has supported investors, that have given clarity on where the government wants to be in the next decade in the development of our gas resources. Also, as a follow-up to that, the government has passed the PIA, which has also encouraged the upstream operator to invest in the upstream, because if you want to develop your gas, someone needs to spend that money to bring the gas from the ground, and then where the midstream operator can participate, and then it flows down to the downstream. So it's all an integrated project. So you need the upstream, you need the midstream, you need the downstream, so that you can benefit the last mile, just like what the regulator was saying. And we're quite pleased that the current administration has put a lot of focus on gas. And when the president came in, less than 50 days in office, we had the opportunity to visit him with our team of investors. And he gave a clear directive and said, look, we believe that, like the Honorable Minister for Ghana said, Nigeria should take the lead in Africa and others will follow. And he said at that meeting that he's highly disappointed that we have a lot of offshore gas that is stranded. There's technology to make it work. And we believe this technology has been proven, and that's why we will support Nigeria to lead Africa in terms of the floating LNG technology. Currently in Africa, there are like 3 floating LNGs in the continent, and all the 3 floating LNGs are owned by foreigners. It's not that we don't have the capacity, the wherewithal to put the structure in place to develop such technology, but you need the enabler, which is the regulator, the government, and the framework. And we are pleased to say today that framework is in place. Like you're asking, the regulators are all working to achieve one goal, to achieve the Decade of Gas development. And that's why in the second quarter of this year, we'll announce the floating LNG FID for Nigeria. And we believe that by 2028, Nigeria will have our first floating LNG, indigenously owned Africa one. So, Honorable Minister from Energy Ghana, Nigeria is showing the way. We're leading the way because we believe that the only way to develop as an Africa, we must show to investors out there that we're serious and we're ready to attract that investment. And that's the reason we're putting the best foot forward. We're developing this project in line with international best practice. And we're pleased to say the regulators are supporting this project. The National Oil Company has taken a step further as an entity that is commercially driven. They've taken an equity on this project. They've taken a 20% equity. They've guaranteed the upstream part of it, which is the most significant part. Because if you put all this investment together and you don't have the feedstock, then you're going nowhere. Now, the government has taken a step forward.
Nigeria requires close to 2 million tons of LPG per annum. And what are we doing? We're only having 45% of that for Nigeria LNG. And the government says, look, we support this project, and we don't want you to export the LPG out of this project, domesticate it, bring that volume into the market. So at the end of the day, if we have a couple of these projects, Nigeria and the rest of Africa will be energy sufficient and independent, and that is the directive, and that is the way we're structuring it. And like you said, gas is huge investment, and it takes a lot to mature a gas project. If you are looking out to get certain volume in another 5 years, you need the planning to start from today. So we're very pleased to see that the regulators have done so well. Like the MD of Shell said, there need to be more backup in terms of, we have a lot of reserve, there must be clear paths to harness those reserves to the surface to enable other investors to tap into the gas revolution that is going on in Africa and Nigeria. And because the rest of Africa is waiting for Nigeria to, as an energy dependent from our resources. So we believe that we're going to do our best within the energy space, and we hope that with the support that we're getting from the government and the regulators and all the partners involved in the upstream, definitely we're going to see more development in the gas sector. And because the projects are viable, but you need someone to galvanize all the stakeholders to achieve the projects and to bring those gas that is required for the energy transition for the continent and the world. Thank you.
Thank you, Mr. Ernie. Whilst you were speaking passionately about the new phase for yourselves, I liked where you picked about the LPG, and that's where I'll be going to Felix now. As the LPG gas has emerged as a viable alternative fuel source, how is the Nigerian LPG Gas Association advocating for policies, regulations that promote the adoption of autogas and LPG as sustainable solutions for transportation and cooking needs?
Okay, thank you very much. My name is Felix Ekundayo, and I am the president of the Nigerian LPG Gas Association. So I'm glad the big boys got to speak first, so that we can now come in and tell you what it's like at the coalface. I'd like to thank the organizers, by the way, for putting me on the same panel as the true primary regulators in our industry. Whatever I did to offend you before, I will amend my ways, I can assure you. I want to speak to dispelling a myth, give some examples, and also offer a way forward. You've asked me to speak to autogas. But dispelling the myth is to speak to, I heard the phrase earlier, and I like it. We always pat ourselves on the back about resilience. We're very resilient people. But at the end of resilience is exhaustion. And I do believe that we are at the point of exhaustion. I have been in this industry 35 years, working and as a business owner. And there are two things I've learned. One, I have never come across an investor who chooses to go into a market where the primary competitive advantage is resilience. I have not seen it. They go where it is clear, efficient, and you get your returns out. The second thing, and I think I deserve a Nobel Prize for economics on this, I have finally figured out how to calculate the return on investment on resilience. And it is usually negative and at best zero. So that is dispelling the myth. Okay, break it down into what do our members see, right? And they're the ones required to drive the conversation and investment. Give you random examples. A member wants to start up an autogas facility in a state that desires to have autogas, buys land for X. The assessment for duties on X was 125%. How do you pay more than the value of land for the assessment? Then you are invited to negotiate. You have situations where new members come in and they say, it has taken me 6 years from when I retired to when I finally got my business going because of various regulatory hurdles. And it's not about the regulators sitting here. We've all done good work, but we need to do more work. We have other places where you have members who are developing, and in the middle of development, where they have all their permits, they get frivolous stop orders. It's just another road barrier. We can't move forward this way. We need to address this issue. We speak to the ease of doing business. I would rather start and frame it properly. We need to reduce the difficulty of doing business before we can now start to say, how do we even make it easier? What's the solution, in my view, and how do we move this thing forward? We have the opportunity to displace diesel from 20,000 base stations. We have the opportunity to convert millions of tricycles to gas. But without the pace of, first of all, streamlining regulation, so that when Aka was speaking, he spoke to a regulatory environment that may be more towards revenue generation than assisting business. We need to sit down with the players, the people at the coalface, to reduce the number of steps required in order to be able to deliver these solutions. That is a primary a requirement, so more stakeholder interfaces. Secondly, the speed at which the changes occur needs to improve, where conversations go up the value chain and come back to provide a solution. That also needs to improve, and I think those are two very primary and urgent issues if we are to realize the rollout of autogas. I will stop there. Thank you.
Thank you very much. As we've started this conversation on the autogas, I would like, Daniel, this would be for you, please. You know, your Techno Oil is actively involved in downstream. And of course, how is your company leveraging its expertise to promote the adoption of autogas and other clean energy solutions in Nigeria's transportation sector?
Okay, thank you. Very well, let me ride on the contributions made by our president, NLPGA president, and to say that, you know, to say that we're an integrated energy company. We've invested across the value chain in LPG specifically, because I was speaking specifically more on LPG. And to say, of course, presently we'll have a coastal depot, we'll have a cylinder manufacturing plant trying to bridge the gap in the entire LPG value chain. But basically, we are more interested in road to market. Road to market, trying to eliminate some of the bottlenecks in getting the LPG, the cylinder bottles across to Nigerians. And in that aspect, we will also want to appreciate the regulators for always being with us. Recently, we had an engagement with them where our import licenses were speedily approved, our depot licenses were speedily renewed, and we want to see more of that going forward. Speaking to these challenges, the federal government needs to also address infrastructural gaps. We need to collaborate to ensure that some of those gaps are tidied up. Security, road infrastructure. From the benefit of where I sat at our exhibition booth this few days ago, a whole lot of people come around and they said, why is the cost of this product going up every day? And in fact, some of them are even willing to invest. And they said they are even scared to approach some of the government agencies. And we said, no, that you need to approach them. And if you have issues, come and we'll find a way to resolve it. For example, one of them said she's a retiree and she has about 20 million in her kitty. And how does she go about that? How does she go about setting up a skid, an LPG space, an LPG retail shop and all that? And we said, go to this agency. And she said, no, they don't want to go to the agencies. They are afraid. They want a situation where the government can, you know, de-risk some of this, these bottlenecks and make it easier for them to do their business. And I also thank the organizers of this summit, because it gives us an opportunity to look at these issues to address them and resolve them amicably. Another thing I would also want to advocate is a way of seeing how we can also integrate some of these resolutions or some of this safety usage of LPG, the safety and all that into the senior secondary school curriculum, because that has always been our focus, to create a generation where they will not be averse to using gas. They will grow into have a generation that they will be willing to use it safely and also to engender investment. And that is even what we are doing in our own space. We've started that with some number of schools. We're also trying to increase adoption too. Recently, we had a partnership with UK8 and USAID, where we were able to distribute about 7,000 LPG gas stoves to some rural women in Lagos, in Imo State, and also in Ebonyi State. And we want to also urge the government to see how we can partner with us to scale this. Then lastly, speaking about trying to also address some of these bottlenecks, we don't need to really reinvent the wheel. 2 years ago, we won a delegation of the Nigerian Alliance for Clean Cook Stove in Ghana. And where you see some of these cylinder bottles, they have a QR code around it, and you just scan the code. You bring your cylinder, you scan the code, and you don't even need to buy the whole cylinder, to pay fully. It enables you to pay incrementally. It enables, it's a kind of corporate cylinder ownership model, which of course we've been advocating over the years. And Ghana is already doing something on that. And if they are, then we too, we should be able to do that and even go beyond them. Thank you.
Thank you, Daniel, for that sales speech, especially to the Ghanaian government. Thank you. Alex, with the measures that Owando is taking to ensure the sustainability and resilience of its gas supply chains, particularly in light with the revolving market dynamics and, of course, your regulatory requirements, how are you positioning with your integration to gas-to-power solutions into your operations?
Thank you very much. I think it's been one of probably the most exciting sessions I've attended. Thank you, Honorable Minister. These anecdotes remind you a lot about what you don't see about yourself. And I think as Nigerians, we need to start to reflect. There's enough intellect and horsepower. We've heard it. From the first three speakers, everyone had a dedicated, unified plan, in some cases partially executed, to show that what to do is not our issue. We think so we don't die. It's a very basic principle. We think, we create avatars in our heads, we extinguish the avatars that don't make sense, and then in life we act out the one we think that makes sense. And I think as a country, we're getting to that point where we need to collectively start to reason these responsibilities. And I use that word deliberately. We have a responsibility to ensure that every Nigerian has power. Not a responsibility to feed the coffers of foreign companies. I'm not saying we shouldn't do the latter, I'm just speaking to what we have a responsibility to doing. Now, when you look at that, that's simply the approach that Owando takes. Very quick history, literally 30 seconds. Through an acquisition of Unipetrol and Ajib Downstream, we created Owando, built the largest downstream company in 4 years with 500 filling stations across the country. 1 in every 5 vehicles filled with petrol in Nigeria was filled by an Owando filling station. We divested from that business into the midstream. We built almost 300 kilometers of pipeline, taking gas to factories, the likes of Nigerian breweries, Nestle, locally in Nigeria, the Lagos gas pipeline that rolls all the way around and has that just ended up close to on Amadu Bello right now, that was a project that was done by now Accela, formerly Owando Gas and Power. In the upstream, we've done exactly the same thing. The point I'm making to you is, as of today, we're part of the NAOC JV that supplies gas to the Blackstad Okpai 1 power plant. We also have Indorama and all the other major gas off-takers that we feed gas to. That local value add is entrenched in our own DNA, in the sense that whatever we build, we ensure the first beneficiaries are Nigerians. And this must be the way we approach not just the gas development, but a lot of the things we've spoken about over the past few days. I want to take a last final minute to just speak about the point of ensuring that these projects get done. Each minister that has come over the last 4 administrations has given us a date for the completion of OBOB. There's a worried comedian that will say, "Me on a stopper." We can't move gas from east to west, 900 square kilometers, or 900,000 square kilometers of a country. So these are the fundamental problems we need to address. Pace. And I think one of the panelists spoke to that. How do we move things forward? In other parts of the world, and we're just having a quick chat before we came on, we look at our counterparts that do these jobs that we all do. They close by 3 o'clock. They are in beaches, Formula 1 races, and various other things. None of us get any sleep. So, the point here is really the fact that we need to be, 1, Nigeria-centric, 2, understand what our responsibility is. And there is a clear dichotomy between where the capital is coming from and where the capital has to return to. And that speaks directly to the Energy Bank and Africa taking ownership of that development. We see today in Silicon Valley a lot of American millionaires willing to back local American companies. But we don't see the same in Africa. All our billionaires want to go and put our money on that side as well. So we need to come back home and realize that if you don't know, Honorable Minister, thank you for reminding us about what we are, but if you don't know, this is where the value is. It's just that you have been convinced and engineered over time to believe that you are the beggar of value, not the owner of value. Thank you.
Thank you, Alex. Honorable Minister, I think you should be coming more often so that you can give us that, exactly, that sugar rush to keep us going. Thank you, sir. Thank you, Alex. Mr. Kobo, somebody has actually sent a message that I think we should talk about. And it's basically saying, how can the IOCs get gas to LNG despite the challenges?
Alex was just saying to me which of the challenges we're talking about.
Pick anyone, sir, but there was a stylish way of dropping the first major, but I just wanted you to just give a broad...
I think this has been one of the existential challenges that we face in the export gas market. Like I said earlier, there are 4 suppliers to 4 suppliers, Shell, Total, and E.N.I., majorly, Ajib, where Alex will remind me they are part of that venture as well. There was a year, 2 years ago, where the main line that actually underscores that gas supply, the Trans-Niger pipeline, the security issues around it became so bad that we had to shut down that line for a year. That was the lowest of the lows. I did say yesterday that we are climbing out, I think, the EVP upstream for NNPC underscored that point. at some point, it was only Total. I shouldn't be saying that about my competitor. But I had to say it was only Total that managed to keep its supply obligations. We came down at some point. We came down at some point to almost half of our supply. We are contracted to supply some 1.8 BCF of gas. That's over 50% of the total. So even with Total doing its best, it was always going to be difficult. And Ajib was also struggling. And these were all down to just issues of vandalization of our pipeline systems. Terrible. So it was one of my most difficult days. Actually, I was on this panel the day we took the decision. I got a call and I was sitting next to the then GMD, now GCU. And I told him we are taking TMP down on a panel. Because what happened, we got to a level where it's primarily a crude line, but you also have to evacuate condensate. And once you can't evacuate your condensate, your gas goes down. Our reconciliation factor, which is essentially what you put in versus what comes out on the other end, is like a percentage. You expect to get it in the high 90s in a normal day. At some point, it came down to 10%. So 90% of the thing was that you put in a line didn't get there. So, but even from a basic responsibility perspective, we couldn't continue to run that line. So we had to take it down. And that had a big, big impact on supply to LNG. I said at the beginning that I have seen a lot in this industry in my time. As Alex just said, we've had promises and promises. We have all complained as leaders in this industry. I said at the beginning that things are turning for the better. It doesn't mean we are there yet. So in January, we supplied probably the highest volumes to Nigeria LNG in 3 years. We were able to supply something like 1.7 BCF. 2 years ago, we were struggling to supply 900. I'm sure that's where the question from the floor came from, which is that the last we had were on the ground. But this month, the problems are back again. So it's the business. My folks in Shell know, many of them are in the audience. I am eternal optimist. I try to preach resilience. But the statement from my colleague in LPG on this resilience almost becoming something else, it actually does resonate with me. This current government give a lot of credence to some of the key officials in the security agencies, the National Security Advisor. They have paid the kind of attention to security in the Delta that we have not seen in a long time. I say it because I deal with it on a day-to-day basis. I experience it. And you see the direct impact in terms of production. But my biggest problem is that if we are not careful, we rest on our oars. And then it's so quick. I was talking with my team on Monday. One of our most important lines, which comes out of our Soku gas plant, which supplies a significant part of gas to LNG. We woke up one day and saw seven theft points on that line. So we have had to take down that line. We canceled the optimism, the positivism that I frankly was living with in January. If we're not careful, in February it's already down. So long and short is that I see all the signals that we are on the way to improving things substantially and supplying to a DCQ, not just one company, but all companies. I just don't want to talk about Ajib because I'm not mandated to speak for them. But if my colleague from Ajib was here, he will not be that optimistic just because of the kind of problems they have faced on their pipeline system. So we are looking up as a country, but it is just so important that we sustain this momentum that we have seen. I want to get to my 1.8 BCF a day, which is my contracted quantities to Nigerian LNG, and I want it to stay there. Thanks.
Thank you so much. Thank you for that elaborate explanation. Thank you, sir. I always like to keep to time, and I think I would take 1 minute on the theme and, of course, on our topic from Felix to Daniel. Thank you, Felix.
Okay, thank you very much. I'll make this very quick. Given that I have 1 minute, there are two issues of national importance I wish to speak to. The Honorable Minister of Energy for Ghana spoke very well. He omitted something in his conversation, and I'm asking for a friend, sir. Do Ghanaians use gas or firewood to cook jollof? Secondly, the more important aspect of my closing remark is that, look, auto gas LPG, will enable us drive a lot of fuel displacement, a lot of balance of payment issues. We need to focus on auto gas LPG with the utmost priority at all levels, not just for trucks, not for cars, down to petrol generators, down to keke napeps. This for us is a way of doubling or tripling our current LPG usage in Nigeria. Thank you.
Thank you, folks. Sir.
Okay, thank you so much, everyone. I think as the regulator in the upstream space, we'll continue to work with all the operators, all the stakeholders to ensure that we have an industry that we are proud of. We understand that we are not there yet, but we believe that it's work in progress. But I think we all need to work collaboratively to get to where we want to go to. We'll continue to enable our business in every way we can. Thank you so much.
Thank you, sir. Mr. Ronnie?
Thank you so much for the opportunity to be on this panel. I believe that this energy that the industry is achieving today, driven by the Minister for Petroleum and the able Minister for State, Petroleum and Gas, and Petroleum himself, we believe if we continue with this momentum, just like what the MD Shell just said, we keep our eyes on the ball, we'll definitely achieve the decade of gas objective, which is to bring gas to the last mile of the Nigeria home. Gas is our transition fuel, and we have it in abundance, and the investment is out there, so we just need the focus to achieve that. Thank you.
Thank you. Thank you. Mr. Kalu?
So when I spoke earlier, I tried to share with us things that the authority had done in the last 12 months when we were last on this podium. But let me quickly just flag for the industry 2 or 3 things that are most critical, which the authority is at the threshold of unveiling in the near term being in a few days. We've just concluded the first revision of the network code, and in a few days we'll be unveiling that. I thought I should get a hand clap for this.
Certainly.
Secondly, most critical to the strategic industries are the gas-based price. Again, the PIA puts 1st April as a terminal date annually for us. In a few days, again, the authority will be unveiling that. Thirdly, Mr. President commendably reconstituted the MDGIF, which is our greatest tool for seeing that the right investments are made infrastructure-wise for gas. That council is poised to begin to operationalize disbursements and all, and they're looking at all the frameworks that need to drive that process. But I must also add the caveat I made yesterday when I spoke, that with the fund is only targeted at de-risking the value chain between the mid and downstream.
Yes.
Ultimately, our sister agency, the Upstream Commission, will still have to see that the commitments by operators to ramp up production, evacuate those so that the midstream can begin to process as well and transport them out are met. With those, I think that the authority is ready to move this gas sector to the next level. Thank you very much.
Thank you, sir.
Thank you again. Thanks again. I will continue my pitch for the decade of gas framework,
yes,
because it brings all of us together: the regulators, the producers, ministers, everyone in government, and we articulate all our issues there. It's just raised a couple right now, which have been extensively discussed there. I really want to make a pitch that we keep faith with that process. It is working, and we should just make sure we keep the faith and don't be tempted again to start getting creative around it and create a bit more problems. Thank you very much.
Thank you, sir. Alex?
Yes, I think for me it's just for us to take on that sense of responsibility. I called for yesterday for a higher order of ourselves to literally lean into what we have to do with a bit more pace, a bit more certainty and collaboration. But most importantly with gas, when we speak about gas, we have to have the entire value chain in mind, because we talk about some things that when you're upstream, you sort of think it's a pipe dream when you're looking downstream, right? So we need to just connect those pieces. And the decade of gas gives us that opportunity to, yes, focus on where the resource is coming from, but also start to embed some of this downstream obligations that impact the Nigerian people. The final thing is I'm offended because my older brother here didn't call me soon to be partner supplier. As,
Daniel. Okay, thank you very much. So my closing remarks is today a cylinder bottom sells for between 40 and 45,000, and you all know how much the minimum wage is. So we're calling for more collaboration, and collaboration to save our women, to save our children, to save our environment. Thank you very much.
Thank you very much. This has been a fantastic panel, and of course the audience, for me, I think the closing note is with the decade of gas, let's keep being focused, let's be accountable, and let's make gas our own. Thank you.
Thank you. Just give us a moment. Let's present to you. Your Excellencies, please, I would ask you to kindly present this plaque to those our panelists. You know, they've asked you to be coming every year so that the sugar rush will keep coming. So help us. Please give Your Excellency a round of applause. Thank you very much. Let me begin first off from the far right, my far right. Let me begin with the representative of Ms. Nkechi Obi. Representative of Ms. Nkechi Obi, yes. Mrs. Nkechi Obi, thank you. Where's Your Excellency now? Oh, Your Excellency, please, this way, sir. Sorry, forgive me. Oh my God, forgive me. Please, to him. Thank you very much. Let me have the next one. The next one is for Alex. Let me have for Alex. Yes, Dr. Irune. Dr. Irune, thank you for sharing your thoughts. Thank you so much. Thank you for sharing your thoughts. Thank you so much. All righty. Thank you very much. Dr. Alex, thank you. And then somebody be here now. The next one is for Mr. Osage. Mr. Osage Okumbo. Following that, I'd like to have the one for... Yeah, you're going to take a group photograph. Please don't go yet. Don't go when we give you your plaque. Don't go. That's Mr. Julius Roney now. I hope I'm not missing anybody. Yes, Mr. Julius Roney. I'd like to have for Mr. Amadosu. Yes, Mr. Felix Ekundayo. Mr. Felix Ekundayo. Chariots, yes. Thank you. I'd like to now invite the other two previous speakers. Let me begin with Mr. Ed Ubong. Mr. Ed Ubong, please step forward, sir. Mr. Ed Ubong, thank you so much for setting for Mr. Ed Ubong. And Mr. Akachi Nwokedi, thank you so much. This is for Mr. Akechi. Oh, I thought so. This is for NMDPRA now. Yes, NMD. Forgive me, Mr. Okoha. Ukogo, you know you're my big brother, so. You want to That's between me and him. Don't bother what I said. No, don't go, sir. You're taking picture. It's between me and him. Don't bother what I said. It's between two of us. It's between two of us. I spoke in tongues. How can you understand? Please, Your Excellency, you take photo with them, please, sir. Permanent Secretary, sir, please, can you come and join the photograph? Thank you very much, Your Excellency. Please, yes. Please take. Honorable Deputy Minister, sir. Mr. Mensah, if you can also get in this picture, we'll appreciate it. Let's document your... Give the panel another round of applause. Give the panel another round of applause. Thank you very much. Thank you. Thank you very much. Please give them one more round of applause. Yes. Okay, so we are going to just take a stretch break, and that is just stand, move your body around a bit. Now we're going to take a stretch break and immediately go over to the next panel. We're taking that stretch break and we're going over to the very next panel. The very next panel is standing by, so we're not done. Well done, sir. Thank you so much. Thank you. We're not done. Please, photographer, Your Excellency. Thank you, sir. Thank you. Dr. Prempe, sir. Dr. Prempe, Your Excellency. Ladies and gentlemen. Photographers, come. Please, Your Excellency. I don't see you every day. Let me take this quick picture. Please, sorry, one second. Let me take this picture. That's my senior colleague. Thank you, sir. Thank you so much. Thank you. You are inspiring. Well done, sir. So we're moving over to the very next panel. Thank you very much. Just a stretch break. A stretch break typically is just you stand up, move your body around the bit, and then take your seat. And we'll carry on to the next panel. Please, let's take our seats. Thank you very much. Please take your seats. Thank you very much. The VIPs can go to the VIP networking room and do the networking as we get set for the next panel. Thank you very much. Please take your seats. Thank you very much. Thank you. Can we allow our dignitaries take their seats? Thank you very much. Thank you. Let's allow them take their seats. Thank you. Please take your seats. Thank you. Dr. Shindi. Yes, sir. Hey. How are you, ma'am? So what's the next program now? It's another panel we're going into now. Yes, sir. Please take your seats. Please take your seats. Thank you very much. Thank you very much. Please take your seats. Thank you very much. Please take your seats. Thank you very much. We're rolling over. Thank you, thank you, thank you, thank you, thank you, thank you. Please take your seats. Dr. Amaikuru the Great, I greet you. Please take your seats. Thank you very much. We're rolling over to the next session. Thank you, thank you, thank you. Please take your seats. Please take your seats. Please take your seats. Please take your seats. Thank you, thank you. All right. To the next session I go now. To the very next session I go. We're still dealing with gas. Please, all those by the entrance door at the back of the hall, kindly take your seats, please. Very kindly take your seats, please. Thank you very much. Thank you, thank you, thank you, thank you. Kunle, can we get the panel into the room, please? Thank you very much. Can we allow Mr. Edubong take his seat? Thank you very much. Thank you, thank you, thank you, thank you. We're still dealing with gas. Thank you, thank you, thank you. Can we allow PNGA take his seat, please? Thank you very much. Okay. What a session we've had since morning. We're still dealing with gas, and this time we're looking at a conversation with stakeholders across the value chain again. We're deepening the conversation. We've looked pretty much at regulators and producers. Just one person in the previous panel is at the downstream side, or two of them, I think, the downstream side of the value chain. We'll listen to a bit more of them. Some service companies who provide a service that produces the gas. Kunle, can we get them in the room, please? I think one of the biggest setbacks that we have as a people is we did not start on time in building gas. We did not start on time to build a gas infrastructure. Once upon a time, it was said that this country was so rich, they were wondering what to do with the money. I wish someone had mentioned to them, build gas infrastructure, you will see gas. But we're here now. We're making steady progress with building it now, constructing them. Much more needs to be done. When we speak of CNG cars, some people have invested by buying CNG-powered cars, but the challenge they now have is the paucity of stations that are supplying CNG to cars across the country. I think that is another value or another opportunity for investment in the country. So, ladies and gentlemen, we welcome you to this panel, and the panelists are set to take center stage. Again, we'll take a very, very short remark this time, and after the remark, we will then begin the panel. So all of them will come up together because the keynote speaker is also on the panel. The keynote speaker is also on the panel, so they will all come on stage together. Technical music, please. All right. Thank you very much. So let me begin by welcoming to the panel. Let me begin by welcoming the Chairman, Group Chief Executive Officer of Pana Holdings Limited. He's on the panel. Let's welcome Mr. Dare Akobo. Mr. Akobo, you are welcome to your seat on the panel. Please, this way. Yes, sir. Come this way. Right here. There's a staircase there. Okay, joining Mr. Akobo on the panel, I'd like to now welcome Mr. Nuhu Yakub. He's the Managing Director of Banagas. You're welcome. Please give me a round of applause. He's on our panel. Joining them is the Group Managing Director of Oil Data Incorporated. Over here, sir. The Group Managing Director of Oil Data Incorporated. I'd like to welcome Mr. Emeka Ene. He's on the panel. Let's give him a warm applause. Thank you very much. Joining them on the panel is the Head Commercial Research and Strategy, Nigeria LNG Limited, Mr. Chima Mba Kalo. Chima, you are welcome. Thank you for joining us. Managing Partner, the Firma Adversary, is on the panel. Let's welcome Ms. Chinenye Owanaka. Ms. Owanaka, you're welcome. Let's give them a round of applause. Thank you very much. Joining them is Engineer Dr. Emeka Okwosa, CON, Chairman, Group Chief Executive Officer of OilServe Limited, represented by Managing Director at OilServe, Nana Anyango. You're welcome. I'd like to now welcome the moderator for our panel. He is the Head Assets and Investment Management and NNPC Gas and Power Investment Services and the Chairman, Society of Petroleum Engineers Nigerian Council. Let's welcome Mr. Salauddin Tahil. You're welcome. Over here, sir. To kickstart the panel, after which he will take his seat on the panel, is the Executive Director, New Energy for Seplats. Let's welcome Mr. Effiong Okon, or Ga Effie. You're speaking that way, sir. That's your lectern. Yes.
All right, let's see. So are my slides on? Just checking. Richmond, I'll have about just 3-4 slides. That's it. Okay, I didn't know how to clip some. Thank you. If I want to move it, just slip. All right, good afternoon. Is it afternoon or? It's good afternoon, everyone. Sorry, I'm not in a very good state. I left the airport left my home, is it 5 a.m. this morning, got to the airport 6 o'clock, and there was no light at the airport for 2 hours. We're all stranded outside the airport waiting to catch the 6:30 flight. So you can imagine, but it's okay. It is well. So I'd like to stand on the existing protocol. So good afternoon again one more time, distinguished ladies and gentlemen. I've been asked to run through the keynote. I'll keep it very short. We're tight for time. First and foremost, I want to say on behalf of Seplat Energy PLC, we'd like to thank the organizers of this event, N.I.E.S. It takes a lot to put all this sort of program together. We really do appreciate giving us this slot to give a keynote speech. So thank you very much, N.I.E.S. So what am I going to say? So I'm tired of, let's all try to be positive about our country. We tend to be too negative. So I'm not a politician, but we got to be hopeful. Nigeria is the only country we have. So what I'll run through is just set the scene, and then we'll have this wonderful panel to now go into some kind of deep dive session. So first is the case for gas for Nigeria. If you look at what gas brings to the table, whether it's power, building materials, clean cooking. These days we talk about access to energy, fertilizer, CNG, LNG. So there's a whole wide range of why we strongly believe gas will have a very strong investment case for gas. And if you look at Seplat today, we've actually taken a lot of very bold decisions and making huge investment in this space. Now, in terms of the value, we still struggle with, Nigeria is one of the energy poverty capital of the world. There's an issue around energy reliability, affordability, and sustainability as well. It's a big challenge for us when you look at the energy value chain. There's huge infrastructural gap, whether it's housing or infrastructure to move materials around. But there's no commercially viable substitute, and that's where the gas still remains very critical, whether you're looking at cement, glass, steel, all these industries that require gas, either as feedstock or as fuel to power furnaces, for example, in the case of steel industry. Lots of deaths per year we don't actually recognize from just people cooking with biomass. And we have a massive population. I think Seplat have always talked about for every 4 babies born, one is a Nigerian, if I remember that sort of. And we're looking at about 400 million people by 2050. That's the latest population forecast. So growing population. We also want to decarbonize our environment in line with climate change, Paris Protocol. So trying to reduce reliance on petrol, transportation. Generally, if you look at a lot of decarbonization strategies today globally, the transportation sector is one which can actually decarbonize easily with EV and all that. There are challenges with EV these days. And above all this, we also have to fund our exports and then also focus on sustainability, which has become quite critical. Now, what do we see in terms of forecast for gas going forward globally, whether you're in Africa or Europe or Middle East? The demand for gas is quite massive. Again, depends on what scenario you're looking at. In the stated policy scenarios, you see gas growing still over the next 30 years. And then in the net zero emission scenario where you then you reduce reliance on heavy carbon fuel, you then see gas demand going down. This is according to the latest IEA forecast. Whether you look at Europe, that's really desperate to get gas post the Ukraine invasion, or even the US that's turned to a major net exporter of gas in spite of Joe Biden's temporary ban on LNG export facilities being built. But the demand is quite massive. And if you then look at what IEA shows in terms of gas demand forecasts, the major growth for gas is going to come from Egypt, Nigeria, and Mozambique. Those are the hubs. If you look at all the FIDs taken so far, or FIDs in the portfolio, Nigeria, Egypt, Mozambique will drive that growth in gas in the next decade. And then if you look at the Sustainable Africa scenario, you see Africa playing a major role in terms of its gas resources, monetizing that gas resources in spite of all the challenges, and Nigeria fits nicely into that bucket. And my last slide is, so where do we see opportunities and not challenges? If you look at it from molecules to electrons to money, there's a whole wide range of value chain. And like the panel will run through later, whether you sit on the E&P side, we always talk about Nigeria sitting on 200 TCF of gas for development and 500 TCF exploration potential. So huge. For gas processing, I think we just came out of a chat now. My friend Akobo was talking about this challenge with NEPRC and NMDPRA. The point is, PIA gives us very robust fiscals if you want to invest in midstream business, but we still have the challenge around how do you meter that gas between the upstream and the midstream side of the business, because there's much lower taxes and much lower royalties on the midstream side compared to the upstream. Lots of infrastructure development today. I think Tahir was just talking about what these mega projects NNPC is working on, trying to cross River Niger, OB3. That's an example of how this is all coming together. The massive investment opportunity there as well. LPG, CNG, LNG, the new one with the new government trying to drive gas penetration. There's a whole lot of interest now to invest in how do you get gas to the last mile. So beyond the NGIC infrastructure corridor, there are a lot of customers, a lot of consumers who are far, far away from those infrastructures. How do you get gas in? And that's where all this virtual pipeline gas, LPG, CNG, all them comes into play. Power generation, I don't want to complain. We know the deficit, but again, big area to drive decarbonization as we shift away from coal and diesel. You're pretty much helping with sustainability. So those are very key drivers in terms of looking at investment. National grid, we all know the issues there, another huge potential for smart grid investment. Local distribution, we have lots of companies coming to us in Seplat to say, how can we support LPG? How can we support
CNG investment, even though there's quite a number of small scale and quite fragmented. Financing is another tough one. We all understand what it means to go out and raise capital. Double digit is quite challenging these days to be able to track capital to this sector of the economy in terms of the energy transition challenges. And the last one is around billion. We've been looking at investing in power, and one of the challenges in power is the tariff issue being subsidized, ATC and C losses of over 30–40%. How do you make an investment case for that? A bit of opportunity in there. And lastly, how do you also get paid if you sell power to last mile? So how do you get paid when there are no meters installed? So for us, 5 minutes. So I would say welcome to this panel session and have a productive session. Thank you very much.
Okay. Yeah, thank you so much, Effie, for that presentation. I was actually looking around, looking for Richmond to get the cue on starting, but obviously, I think we have to set the ball rolling. Richmond, thank you, sir. Yeah, so thank you so much, Effie, once again. Ladies and gentlemen, the session today is on gas. Gas. And people wonder, gas, what's all this talk about gas? But I can assure you, from the morning session, a lot of those of us that are not converted yet, I'm sure would start, at least you're by that doorstep. Gas is the future, not only in Nigeria, globally. And it's very evident. Countries investing heavily in gas. And that's why we're here today, to discuss about that gas. The theme for today is From Blueprint to Reality, Navigating Nigeria's Gas Decade and Balanced Narrative on Energy Transitions. Blueprint to Reality. I think it says it all. Have we been talking, and just sitting on the drawing board, going around without moving forward? You have a very powerful panel here today, ladies and gentlemen. And I can assure you, after the 55 minutes, some of us would end up in the bedroom, not at the doorstep. Before we start, permit me to ask each of our discussants today, our panelists rather, to quickly introduce themselves and discuss around the theme. Just 2 minutes. We only have 55 minutes and we have to stick to that time. So each panelist will have 2 minutes. Introduce yourself and talk about the theme. I would remind you, From Blueprint to Reality, Navigating Nigeria's Gas Decade and Balanced Narrative on Energy Transitions. Effie, I hate to put you on the spot, but I think you would be the first to open this.
Hello. Okay, thank you. Thank you very much, Tahir. And so let me kick off then. So my name is F. Young Okon. People call me Effie. I've been in the industry for like 33 years. I worked for Shell 28 years, joined Seplat 2018. So I've been in Seplat my second life, past 5–6 years. So in terms of the top, I mean, gas, like you rightly mentioned, is a big, actually gas came into big time play, especially after the Ukraine invasion, right, by Russia. Before then, everybody was running away from oil and gas industry because of the issue around climate change. And then today, where are we? There's a big race to get gas to the market. Qataris are doubling their LNG export capacity from 77 million tons per annum to almost 120. You look at all the gas big projects in Mozambique, from Capo de Vergado, so many projects around the axis. Nigeria as well, we're also trying to push, Trend 7. And then I'm happy Ed is here, a decade of gas. We meet almost every month, sponsors, steering committee, seeing how do we add additional 3–4 million scf of gas per day by 2030. So coming back to your point, I think from blueprint to reality, yes, I do agree sometimes it's kind of frustrating. Nigeria should be like 10 trains of LNG today. We should be like 10 BCF of gas, domestic capacity. But again, I used to have a boss those days that comes to town hall, one slide, and says the same message every time. There's no wrong in all still talking about the same issues over and over. At some point, it will sink into whether government, politicians, or whosoever. And to be fair, we've made quite a lot of progress. If you go back, I'll say 10 years from now, if you look at where we are today with all the massive investment government has made in infrastructure, the investment we have made as well. If you look at Seplat today, we're doing roughly about 300 million scof of gas into the domestic market. We'll have, as the North comes on stream, with our partners, by the way, this year, additional 300, and then Saplet, 100. So nudging towards almost 800 million scof of gas into the market this year. And then we'll bring in LPG to support the economy, access to energy, decarbonization. So if I take back and say, let's do a scorecard check, I'll say, yes, we're not in El Dorado yet, but we have made quite some progress on all fronts. Regulation has changed. Lots of incentive now in the PIA to invest in midstream, low taxes, low royalties. Government is doing its part in terms of infrastructure. And it's time for us to just try and get on board and see how we address all the issues.
2 minutes.
Thank you.
Thank you. Thank you. All right. Emeka, you're next.
You want me to go on?
Yep, please.
All right, so my name is Nana. I work for AllServe. I'm representing the chairman and CEO of AllServe, Sebeka Okwosa. Overall, around 20 years, working across 15 different countries, and finally coming back to Nigeria to sort of support our growth and our development of the energy industry. Let me begin by saying something a Japanese person said to me a couple of years back. He said there is a fundamental difference between you in Africa and those of us who are Asians. And this is one of the reasons why I came back to Nigeria anyway. He said, in Asia, we say very little, but we do a lot. In Africa, you say a lot, but you do very little. So I changed my trajectory and came home to make sure that we can begin to change that narrative. And that narrative is the African narrative. The reality is that our pronunciations, unless it is backed up with very, very clear frameworks, plans, and actions, would never translate to anything. If we want to transform our nation, if we want to be able to harness our gas capacity, our energy, address our energy issues, it is going to take a lot of hard work. And this is the hard work that sometimes, and I've been now with AllServe for getting to a year, it is the one big question I ask. Is Nigeria really ready for the hard work required to achieve everything that we have promised? And so when we think about our energy capacity, the decisions that we make, I'm sure I've not spoken up to 1 minute, but that's fine. But the point I'm here to reiterate is that although AllServe has maybe deployed about 105 oil and gas projects in Nigeria, and we are active players in gas the gas transmission lines and the distribution lines, I think that we should have been targeting about 1,000 or more projects to be able to move from just mining our resources for exports to be able to translating that to value for us as a country. Thank you.
Thank you so much, Nana. Yeah, very passionate. Chine, I think the floor is yours now.
Okay, thank you so much. Good afternoon, distinguished ladies and gentlemen. My name is Chine Wanaka. I'm a lawyer, and I'm providing some gender balance on this panel. So, yes, I'm the founder of the FEMA Advisory, but I like to describe myself as a nation builder. I'm very passionate about growth, development, and poverty reduction. The work we do cuts across law, policy, government relations. We advise global clients like Apple, the tech company, government agencies like Sovereign Wealth Fund, amongst other government agencies across Nigeria and the continent. And on this topic, Decade of Gas, I think for me, gas is something I'm very passionate about, energy and technology, those two sectors. And looking at our country where we are at the moment, if we had actually implemented the blueprints we had from the gas master plan, from the, even right now we have an energy transition plan, we have the PIA, we have so many policies and regulations. The challenge is always implementation. Implementation is hard. And why we fail to implement is because we don't have the right people in the right seats sometimes, or you have the capability traps where the agencies or the civil service or other stakeholders who are involved are not really able to drive that process of implementation. And so I'm hoping that on this panel we're able to unpack some of the challenges and also recommend solutions, because this has to be private sector led. Everyone in this room and across board is a key player in ensuring that this moves from blueprints to reality. Thank you.
Yeah, thank you so much, Chinyenge. I like what you said about private sector, because you would hear a lot of that in the course of this discussion, I believe. Emeka?
Chima is next.
Chima.
So,
Sorry, Chima.
That's fine.
Line of sight.
Hi, everyone. I'm Chimamba. I have over 20 years experience in the industry, oil and gas. And here representing Ufomo Otomero, who is the Commercial General Manager for Nigeria LNG Limited. It's an interesting topic we speak to today, and indeed, the decade of gas is one that has brought huge opportunity for the nation itself to harness and commercialize its resources. But one thing to mention, and we need to be aware of, is the fact that the energy centers and demand centers is shifting gradually, with, of course, ramp of behavioral changes in typical centers that consume quite a lot of the energy that we export. Nigeria LNG is into exportation of natural gas. And that shift is bringing, of course, the global south into the picture a lot. There's a lot that is hinged on population and gross domestic products, GDP. And both combined is pointing to, by 2050, a huge shift in where the energy demand centers are going to be, and it's going to be more in the global south. So Asia Pacific, and then, of course, Africa being in the middle of it as well. So what Nigeria then does about what her gas resources are is hinged on three primary things. The first one is realizing that the opportunities are there in the decade of gas. However, you do not have all the time in the world to wait to do that. There's a limitation on the time, because guess what? The renewable energy drive is ramping up at a massive state. Over this past 10 years, natural gas has risen by 2% per year, the utilization of natural gas. However, in the next period, up to 2050, it's projected to rise by about 0.4% only for that period. And it is the only fossil fuel that will be rising within that period. Others are going to be going down. So there is that shift that is happening. And in that sense, the earlier you went into the market and got the value you need to get over your natural gas, the better. The second thing is to say that for natural gas to then be the transition fuel it is and for Africa to benefit from it, there is necessity to make sure that it is decarbonized. The regulations that we're looking at and we're speaking to in energy transition is hinged on a global point of view of making sure that we reduce global warming. And it is everybody's world. It is not European world.
2 minutes.
So we need to bear in mind that that is a threshold that we need to focus on and make sure that it is decarbonized and it is available to people. And the final point, of course, is that LNG itself is flexible and has been proven with what we experienced with Europe having the challenges they had, the energy crisis they had in 2022, and how LNG sprung in to make it work. It will be a catalyst still to drive this. Its growth is not going to be astronomical as respect, but riding on gas, it will be crucial to help really drive this decade of gas down. And Nigeria LNG has been in the middle of this from the onset and will continue to then push. Thank you, everyone.
Thank you so much. And I like another catchphrase here, window of opportunity. I think that's something we should take note of during the course of this discussion. Window of opportunity. So Emeka, it's your floor.
Thank you very much. The only problem about windows is that you tend to jump through windows illegally. I think it's better to knock on the door and open them. Gas is not oil. And I think this is the challenge that we face. We tend to think, and we've taken more than 60 years experience in the oil business upstream into the gas business. And I think that's part of the challenge. You know, right now, gas, the talk about gas is everywhere. And we've seen that, for example, even with the flare-out bids. A lot of people jumping into the gas space, thinking that this is just an oil block. But the gas business is a business of 1,000 handshakes. We have to understand that end to end, a gas contract, 5 years, 10 years, or 15, or even 20 years, requires that you're able to have security of supply throughout that period at a certain volume. And that to achieve that, you have to do a lot of talking. So in that respect, I think we are well suited for the gas business in Africa because we do a lot of talking. And I think you need to do that to effectively achieve anything in gas. The third thing, of course, is that gas is a major enabler because wherever gas goes, economic development follows. And I think I'll have an opportunity to give some key thoughts later on. Thank you very much.
Thank you so much, Emeka. Yes, knocking on the door. I like that. So, Nu.
Yes, thank you very much, ladies and gentlemen. I think this year's theme, navigating, the larger theme, right? Navigating the new energy world order, security, transition, and finance is very apt as it dovetails into this session's theme. I think it reminds us that of the need to take firm seat at the global energy transition discussion roundtables globally. We can no longer afford to be reactionary, or rather charge the agenda the way it suits us. And I hear from that previous speakers in the course of this conference, there have been some serious resolutions taken, perhaps some serious pronouncements were made to that effect. And to that effect, it is important that we begin to educate our people, Nigerians, to take proper ownership of our gas resources. Nigerians, we here in this room are talking to ourselves, and the larger majority of the audience here today, for example, already understand the larger issues about gas, but the majority of Nigerians out there don't really know the issues about gas. So we have to be able to teach our people how to drive gas-intensive demand applications, because it is with that will begin to open up the frontiers, open up opportunities from the big to medium to small. There's no reason why every community in this country should not have some functional gas applicable project going on, whether it's fired by natural gas or LPG, or other forms of gas, all right? And then it is also important that so with that sensitization, to remind ourselves that there have been series of gas policies. We call it the National Gas Policy, as it has dovetails now into the PIA, and of course to see how we can streamline them, all right, to our best interest. And lastly, and this is very important, we need to begin to call out ourselves, call out the showstoppers. Why have we continued to be this slow? Sometimes in the audience are the showstoppers. In the previous session, it was spoken about the OBOB, or is it the OPOB, or which of these projects? They have been in the works for how long, all right? But who are the showstoppers? So we have to begin to call out ourselves as to knowing who the showstoppers are, and let us begin to knock some heads. Thank you.
Thank you so much, Nuhu. And I think it's, in fact, that is an area under the gas industry that really needs a lot of attention. When you're talking about the communities, we're talking about clean energy, but you're just getting at the peripherals. It needs to go down to the roots, as you said, Nuhu, and we have to find ways towards achieving that objective. That is part of the blueprint, and that is what I'm hopeful that in the course of this discussion, we would, dwell on. Thank you, Nuhu. Dari, the floor is yours.
Ladies and gentlemen, all protocols duly observed. I'm the last, but I will make it very simple. and just to announce that I have a prize for the question I will pose to all of you. The team is, my name is Daira Kobo. I'm the chairman of Pana Holdings, ex-Total, ex-General Electric. I was the first African employee for implementing flare gas in the world. So I have a lot of experience. I've worked in Qatar, Egypt, Equatorial Guinea, and so many places. But the theme of today is from blueprint to reality. And I'll ask a question. What is the definition of a journey? That is a Chinese proverb that says, a journey of 1,000 miles. If somebody can tell me what is the true definition of journey, I have a package for you. I want my staff to get up with that envelope. You're going to win that envelope. It comes with some money. Please get up. But just to let you know that the journey of 1,000 miles does not begin with a step anymore. The journey of 1,000 miles begins with the right mind. And I'm happy to have Ed here because he demystified the gas, decade of gas. It was very illusionary. So the journey of 1,000 miles begins with the mind, with the right attitude, and the right step in the right direction. So it becomes, in physics, it becomes like a vector quantity. The problem is that planning is important, but most important is a plan in a plan. And I'm very sure that today, with that theme, we should be able to demystify and be able to understand why we are failing as a country. It's all about connectivity. Thank you so much.
Wow. Thank you so much, Dari. Ladies and gentlemen, I'm sure you're getting your money's worth. We're redefining proverbs. Proverbs that existed centuries ago. Today, here in N.I.E.S, on this day, we're redefining it. Thank you so much. So we'll quickly run through the program for the day, the meat of the day. FE, again, I put you on the spot. Seplat Energies. Are you walking the talk? Changing the name Seplat to Seplat Energies. We believe it's all about sustainability. So is Seplat Energies walking the talk? Your operations, your dealings. We'd love to know. A role model in the industry, tell us. How do you do it? How should it be done?
Okay, thanks a lot, Tari. I think for me it's about outcomes, right? So we're a public listed company, so we publish our results every quarter, and we have a capital market day every July, every 2-3 years. So I hope you can all grab a copy of our report. And I think we're issuing a report, is it today, right? Yes. So coming back to your question, I think if you look at how are we implementing sustainability, it starts from the boards and your strategy. So 2020, we worked on a new strategy for the company, and that was launched, which is how we changed from Seplat Petroleum to Seplat Energy. Our new strategy is underpinned by how do we deliver a sustainable business, how do we drive energy transition. So and it's underpinned by 3 elements. One is to drive social investment. Without the right social investment, you really cannot operate in the Niger Delta, which is why we've been there for 12 years so far and been very successful. There's been no invasion by the community by virtue of all investment we make in the community, in health, in education, and all sorts. There's also the second bit around environmental care and reporting. Our industry is not really bad. The problem is the impact of our industry to the environment. That's what's bad. So how do we keep the oil and gas in pipeline? So we're putting more time on environmental care reporting. And also without cash, you really can't invest. So we have to deliver value, maximize value to our shareholders. So that's the third element. And we have these 3 pillars, upstream, midstream gas, and also the new energy pillar. So those are the 3 sort of pillars, how we're driving sustainability. So our board approved a new framework for our scorecard. So 27% of our scorecard is tied to sustainability, ESG, safety. And also, if you look at the investment we're making today in terms of capital allocation, we're pushing lots of money into the midstream business. You've got to realize that if you look at upstream, midstream gas, and new energy, the truth is the highest return on investment still comes from oil. If you look at our business today in terms of revenue, about 70-80% comes from oil, 20% gas, and then we're now looking at 5-10% out of renewable energy. So oil is still a big cash cow. If you look at return on average capital employed, it's still quite high on the oil side, double digits, 20-25%. Gas is still roughly around 10-15%. And that's a challenge in renewable energy because return on average capital is still quite low, by single digits. So we're also decarbonizing our business. So end of routine flaring across all facilities. So we will not flare gas again in every separate site by end of the year, early next year. So we're ahead of the World Bank ZRR commitment, which is by 2030, there should be no routine flaring again in our industry. There's a whole lot of investment we're making around how do you drive sustainability. We're looking at investment in renewable energy as well. It's quite tough. Solar is still a bit of a challenge because Nigeria grid doesn't work. So you cannot go into solar at scale. When I say scale, we want to invest in 500 megawatts of power or 1,000 megawatts, so you can then distribute that. But the problem is with mini grid solution, it's quite very fragmented, and it's hard to make a very strong business case. But we're looking at it very closely in terms of how do you decarbonize that entire business. And there's a whole lot happening even in hydrogen. A lot of turbo machinery now you can power turbo machinery with both gas and energy with very low NOx emissions. So there's a whole development in that space. So for us, those are some of the ideas, initiatives we're driving through. If you look at our reports, you see our capital allocation, you see our revenue, you see our investment strategy on the horizon going forward, and we strongly believe that you can actually make a good business case by hitting your outcomes on the fossil fuel side, decarbonize that sector, and move some of that profit into the new energy space. And I think from what we see in Decade of Gas, we see that attraction now to say, guys, it's time for us to really go into leverage on the work which I think Ed and team are doing around all the issues from the gas master plan to de-risking issue around areas, infrastructure, gas price and all that. So I think it's the right time to really, leverage on all the good stuff happening. Thank you.
Yeah, thank you so much, Effie. No doubt, there is a deliberate move by Saplat Energies towards gas. Gas flare by end 2024. Wow. So we'll hold you to your words. We would check back by December 31st, 2024 to confirm. Dari, it's your turn now. Yeah, so, we were discussing before we came on stage about, hydrocarbon accounting and so on and so forth. All these, efforts put in place to ensure that there is value returning to the investor. Of course, without value returning to the investor, you cannot, embark on your projects, and complete them in a timely, fashion. We're talking about blueprint to reality. So what would you suggest? How would you suggest? We have the government, we have the public sector, the private sector, we have the investors. How can we collaborate towards ensuring that we not only complete our projects effectively, that's our gas projects, but efficiently and timely to ensure that we get value return for a continuous expansion of those desired facilities to monetize our gas?
Thank you so much. I think it's a lot of questions in one, or a lot of solutions in one question. But let's look at the definition of value. Value is a number. I think the very first thing is to realize that we are in a state of complexity. And when there is unknown, it becomes what I call industry clock speed. The very first thing to be done, and this is directly to Ed, is how do we see Nigeria as a hardware and a software? So we have the resources, but we need the software to be able to plug in to play the hardware. So there is need for us to to datarize. We need a data refinery. I'm happy to tell you that we are creating the first data refinery in the country. So we have condensate refinery, we have all sorts of refineries. This is a time that we need to take into position what we call the fourth industrial revolution, which is data refinery. And data refinery is all about data governance, data acquisition, data display, and data democratization. You cannot develop this country without understanding the data. So we have political data, but we also need to have resource data. We have democracy, but we need to also have democracy of resources. And to democratize resources, you need to understand the clusters where these industries will be plugged in. When my good friend Basi was presenting, I got a new thing about what he said about molecules, electrons, and money. And he talked about finance, metering, collection. So we need to start to map wherever we have the political numbers, also where we have the people. So we can group industry clusters around those people so that they don't continue to break their firewood, burn the firewood, and use. Talking about finance, where are you getting finance and where are the finances going? It's important. There is a calculated attempt by the financial industry to steal the show, and we must stop it. I want to ask technology people, because we need to be innovative. You can't develop a nation without technology. It is the excess technology that you deploy that will give you economic wealth. If you go back to history, Germany is a late industrial revolution country. But how did they learn? Even Russia, how their president came to Netherlands to get trained as a carpenter, as an imposter. Therefore, we need to understand the finance, where it is coming and where the finances are going. We need few set of people. We need the Minister of Petroleum, yes, resources, gas, oil, but we need the Minister of Technology. We need the Minister of Education. Our students are no longer learning. Everybody is going towards electronics, digital solutions here and there, but we need to learn the hard way. We also need to talk about collection. Okay, I hear that you are talking about legacy debt. Legacy debt is coming because there is no truth table. The industry requires a truth table and accountability. From the source of production, thankfully, I'll be very happy to tell you that, our company de-risks the asset in the north. Because why I wrote to the President of the Federal Republic of Nigeria 2017, and I told the President I have a technology to do this. Today, proudly, we have 20% of that technology in Canada. We just finished a job in Turkey. We need to adopt technology, new technologies, in a way that we can continue to know where these oil or gas resources are. They are there around the north. Because the traditional technology could not find them, does not mean that they don't exist. So to shorten that infrastructural gap, we need to get new ways of doing things, and measurement is very key. Of course, thankfully, the Petroleum Ministry, also with Komalafe, I want to thank him because they've just rolled out a new metering philosophy, metering policy that talks about metering architecture, metering deployment, talking about classes of measurement, and also finally talking about dispute resolution. You can't resolve metering problem with lawyers speaking grammar. No, it has to be purely arithmetic. You have to deploy the Gay-Lussac law, the Charles law of diffusion, and also sort of thing to be able to talk about the reality of the problem. Thank you so much.
So not only are we, redefining proverbs, we're also bringing up new terminologies. Data refinery. Well, that sticks, and I'm sure I'll take it to the bank. I'll spread the gospel when I go back to NNPC Towers. Thank you so much for that contribution. Very, very important. I like the way you just dove right into technology. And of course we know automation, very, very critical. So it brings me to the next panelist, Emeka. I know you love this topic because you have actually, pioneered innovation from oil data, right? From well logging, today you're into gas, so obviously that, transition must have, involved a lot of innovation, automation. Would love to hear from you. You know, how can we actually use that innovation, automation, technology, you know, to deliver the blueprint to reality?
Thank you very much, Salahuddin. I think for us to remember this conversation after this meeting, it's just before lunch, so I decided to put out a few key thoughts. There are 5 reasons why natural gas infrastructure in Nigeria is like an onion. Are you all with me? Okay, great. Now, you know, gas infrastructure is an onion because you peel it layer by layer, but tears will flow when peeling it. If you're in the gas business, you can feel me. You really have to be ready to shed tears. And what do we pick up from this? That the infrastructure development strategy around gas has to be end to end. In other words, you have to connect the gas to the market and not have stranded gas. Very important. These are just key thoughts. Now, once we can get the technology going, and if you look at the gas value chain, you can tell straight away that when E&P upstream starts and stops with produce and sell your oil, but to get gas to the market, you're going to jump through many hoops. And if you look very closely at the gas infrastructure map for China, it looks like an onion. The one for Europe looks like a very fat onion. The one for the US looks like an onion. Well, the one for Nigeria looks like maybe a cassava root, but it's becoming an onion. I think it's important because you cannot sell onions without talking to one another. Therefore, open access is critical for our business to work. There must be the willing buyer, willing seller. The network code needs to function if we're going to connect gas to the market. You cannot sell onions without talking to one another. So investing in gas is like some of our wallets. It's like an onion, because if you open it, it will make you cry. And for that reason, gas infrastructure de-risks gas-intensive projects in a very significant way. And I'll show you from a slide from 2017. This is the Nigerian gas infrastructure. Now, if you can squint, but if you just look at it for 1 minute or 1 second, you will see that all the triangles there are power plants. All along the line are power plants, cement plants, industrial parks, all the way. So gas enables you to de-risk your projects. So, you know, eating suya without onions is like building gas infrastructure without any gas to put inside. For those suya spot visitors, you understand what I mean. If they don't put suya inside, onions inside that suya, it can never taste the same. What does this all mean? That interconnectivity guarantees the security of supply. This is how to make the gas business work. And this is the case study that Salahuddin you referred to.
Yes.
Right?
So if we could just quickly speed up on...
Yes, these are my last 2 or 3 slides. I'm done. Yeah? Just try to make sure we remember things by the time we go for lunch. The Kwale Gas Gathering Hub, essentially located in Kwale, 300 million scoff, allows today all the stranded gas producers in the area to put their gas to the market by creating a hub. And these connectivity hubs is very, very essential if our gas is going to get to market. At the last count on the website of the Nigerian Gas Flare Commercialization Scheme, there are 145 flare sites scattered all over the Niger Delta. We need to have gathering hubs that bring them all together. So since I've been giving the red, when orange tastes like onion, the knife takes the blame. You all know what I mean? Okay. But you see, we fail to understand that it's the person who gave us the knife that should be questioned. And if you look at this slide again without squinting, this is Europe and the US. You can talk about Japan, you can talk about South Korea, you can talk about China. The moment regulators created an open market for gas, the gas volumes increased and the impacts increased on the economy. It's almost a direct correlation. So it's very important that we look at our regulators, those who are holding the knife, and not blame the practitioners for making orange taste like onion.
Yeah, thank you so much.
This is my last slide. Don't worry, it's my last slide. Please. You know, a woman, or indeed a man, always has half an onion left over, no matter the size of the onion, the dish, or the woman or man. I just found out that they never finish the onion. There's always 1/4 of an onion left behind for the next pot of soup. Ladies and gentlemen, gas infrastructure is an enabler of development. Therefore, know your onions. Thank you very much.
Yeah. So, thank you so much, Emeka. And I can clearly tell you I was part of this story. And just briefly, just to make you understand what pipelines can do, gas infrastructure. When the OB3 line was conceived, it was supposed to offtake gas from the OBOB CPF. That did not happen. Today we have a challenge, and I'm sure it was discussed here, 2 kilometers, just to connect KP 15 to 17. We were in a dilemma, actually, and we were thinking, we were supposed to offtake gas from Naok and Total. So how would that gas flow to Oben? That connection is not there, but God willing, it will happen very soon, and just keep your ears open to that. But today, we have over 200 million scf of gas flowing through OB3 line from KP17 all the way down, and Emeka's manifold actually made it happen. So you had marginal field operators connecting, right, into that manifold. In Nigeria, today we have a pillar, platform, chorus, just flowing in gas volumes, AHL, flowing gas volumes to the market. So ladies and gentlemen, what he said is actually right. Today, if we have the right infrastructure, the people will come, the gas will flow, the off-takers would come. So we need to think in that light. I just needed to, put that perspective. Yeah, and our own onions. And hopefully, Emeka, the Nigerian onion is coming. It is coming. I see Ed here also smiling. I know there are also players in this, and it will happen. So 2 things. Chinyere, I will just ask you to hold on there. I would want to listen to Nana because there are two aspects about the infrastructure and regulation. So Nana, I'll ask you to speak first on infrastructure. Is it achievable? What are we doing? How soon can we get that infrastructure? And then Chinyere, you will come in on the regulation. What regulation do we need to ensure that we bring in those investors, to ensure that those pipelines are laid in time, to ensure that the gas volumes get to the bottom, the most downtrodden in the industry, rather in our nation. So Nena, the floor is yours, please.
All right, thank you so much. Is it possible for us to develop the infrastructure? So Oilserv is an EPC IC company, so our job is to build these pipelines, right? We started off with a model where the owner develops, we work with the owner to develop a concept, and then they fund and we build. But then we realized that fundamentally some of the businesses across Nigeria have issues around their financial fundamentals, which makes it very difficult for them to be able to access capital to be able to develop these projects, right? So what we began to do was think ahead and say, well, how do we ensure that we can co-develop these facilities and pipelines, but also how do we co-fund these facilities and pipelines such that we can then remove a lot of the pressure that is currently on the owners of these infrastructure. And that has defined the new mindset as well as the new strategy for the business going forward, because we suddenly realized that our financial fundamentals were stronger and therefore we could go to market. So I mean, I spent a lot of time in Asia when governments were busy talking to state-owned enterprises and governments to get money. I realized that actually where the pool of cash was not on those people. The pool of cash was on the tier 2 to tier 3 people who are small to medium scale investors who are willing to take a risk. So being able to access those people, being able to have clear conversations around them, being able to show that these investments are tangible and can actually translate to value. So while governments were struggling, I was able to access money. So the point is, we're replicating the same model for also. The idea is Africa's infrastructure is possible. Sometimes we may just be talking to the wrong lenders. Secondly, when it comes to the development of this infrastructure, like I mentioned, yes, they are capital intensive, but we're beginning to see increased capacity amongst local EPC companies to be able to deliver this infrastructure, right? So of course, there's the issue around funding, but we're seeing increased capacity. Now, that increased capacity must be able to do 3 things. Number one, it has to take into account that Nigeria does not exist separate from the global environment. We must realize that we are one country in a global environment, and we are intensely competing with every other country for access to technology, adoption of technology, and access to finance. We do not exist in a bubble, and this is something we must realize. Secondly, once we have gone through the phase of understanding this, we then must say, what partnerships can we form locally and internationally to give us access to the technology we need to build infrastructure that we want? Because we don't really, maybe 10, 15% of the technology may emerge from Nigeria, but 85% of the technology is actually going to be imported. So we need to ensure that we are building the right partnerships to be able to access that technology and then adopt it locally and localize. And finally, so once you have finance, technology, the third most important is to begin to then invest in people. Because the future of our country, sorry to say, it's not gas. The future of Nigeria is its people. Thank you.
Wow, very, very powerful. Finance, technology, and human resource. And Nigeria has 2 of the 3 in abundance. We have almost 300 TCF of gas. Well, 208. I just love approximating. I like that tune, 300. But we're getting there. And over 200 million Nigerians. So what we need is financing. And like you rightly said, financing is getting tighter. And I'm also, I couldn't help but note that you said local capacity is growing. It just indicates that something is going right. Regulation. Let's hear from you, Chinye. The frameworks, what are we doing? What should we do to make it right, to bring in those investors?
To bring in investors. Thank you. That's a very good question. As a lawyer and a policy implementation expert, right? When I look at Nigeria, look at the landscape, the regulatory landscape, the policy landscape, starting from that, because there are policies give rise to laws, laws give rise to regulations and all that. There's a tension, there's a contradiction somewhere, because on one hand, we say decade of gas, for instance, we say gas is our transition fuel, right? Someone even mentioned that, I think yesterday, the minister or someone said that gas is not a transition fuel, it's actually our destination fuel. The point I'm trying to make is that if a country doesn't have a broad a grand vision and plan, it's going to be very difficult to know where our destinations are or where we're trying to get to and what are the milestones that we're trying to hit. So now, someone made a very good point about the fourth industrial revolution. Nigeria is poor because we haven't industrialized. Africa is poor because we haven't industrialized, right? And so if we want to industrialize, we need power, we need energy, right? And at the same time, the rest of the world that has developed, they're transitioning. And we signed the Paris Agreement, we've signed a lot of the international treaties. We need to choose what we want to do as a nation. Do we want to quickly industrialize because we know that we're running out of time? In fact, let me just give a quick example. I was in Morocco 2 months ago by the invitation of the King of Morocco, and there was a session we went to talking about industrialization. I'm so passionate about it because that's why we're where we are as a nation. We're consuming, we're not exporting, we can't get effects because we're not, And the point about industrialization in Africa came up. I was so excited, I raised my hand. I said, I'm from Nigeria. I advise, policymakers in Nigeria, what can we do as a nation to industrialize, to use our gas, to use, the way China and other Asian countries did. And they literally laughed at me. They were like, sorry, it's too late, the world has moved on. You're never going to be able to industrialize in time. Other nations are doing it more efficiently, cheaper. The funds are not there. Basically, they just painted a very bleak scenario, and I left that interaction, the particular session I was in, I was so disappointed. However, when I came back to Nigeria, I was like, you know what? It's our nation. We need to articulate what we want to do. So my point is, we have a Climate Change Act. We have the PIA. We have a lot of policy documents and regulations, but there's no coordination. There's no vision as to where we're trying to go to as a nation so that we can quickly rally everyone and build elite consensus. Nations don't develop if there's no elite consensus. And that's why I talked about the fact that everybody in this room is very important. I'll give you a very quick law that I'm really, really passionate about, which is the local content law in Nigeria. That's a law that has raised billionaires. A nation cannot develop without wealth creation. And so we need to go back to the drawing board and articulate, do we want gas to be our destination? Do we want to use, some countries are still using coal, what do we want to achieve in the short term to medium term? And then the second point as a lawyer is the rule of law, enforcement of contracts, access to justice. That's one of the things that has stalled this sector from really leapfrogging and getting to where it's supposed to be. If you have laws and you cannot enforce it, what's the point of the laws? So we have to talk about our judiciary. I know a lot of the investors that are supposed to bring this money do not want to come to Nigeria because of corruption. And when I talk to policymakers, they say, no, corruption is not a problem. Every country has corruption. But no, I've had people who have funds in billions of dollars who have said, look, I don't want to go to jail because of a corrupt government official in Nigeria, or because they hear these stories. And so I don't think that our issues are regulations per se or laws, like I mentioned. We have some of those, but one, it's not coordinated, right? We're very used to copy and paste. We're very used to borrowing what has worked in one country and one country. We're not looking at the data-driven, evidence-based approach, looking at our context, looking at our communities. You talked about inclusion here. A lot of the communities that have energy are energy poor. They don't have power. So we need projects like the Geometric Project. We need out-of-the-box thinking, but we need a very safe regulatory environment where people can enforce their contracts, and we can have the rule of law prevail. So that's my response to that question about the regulations.
Well, thank you so much, Chinenye. You were out there just saying your mind, and you said something about laws. We have them. How do we enforce them? You're talking about success stories. And I think, of course, no society can function without enforcement of the law. No story can be a successful story without working through the moral confines. Thank you, Chinenye, and that takes me to our golden goose. Chuma, I know you know I'm coming to you. I can see that smile. I can't see it actually, but I can feel it. Tell us, Nigerian LNG, what are you doing? Trains 1, 2, 3, 4, 5, 6. We're working on 7. 2026, we're already talking about 8. You're doing something right to expand that fast. And before you come in, I would actually, admit, I came into this industry when we had trains 1 and 2. And, in no time, we have 6 trains. We're taking over 3 billion standard cubic feet of gas. That is the success story, ladies and gentlemen. Nigerian LNG actually helped us to drive down those flares. When I came in, I remember seeing data of about 70 to almost 80% gas being flared. Today we flare less than 10 million standard cubic feet of gas. And I mentioned this 2 days ago. I was in a workshop, and it was in the UK. And, yes, they read the papers, they follow the data. And they would say, Nigeria, your gas flaring, and so on. And I stood up and said, come guys, look at this. When I joined the industry, we were flaring about 80% of what we produce. I'm now in about, 22 years and running in the industry. And we're flaring less than 10. Can you tell me a success story similar, to Nigeria globally? And I can tell you, no one could. They admitted at the end of the day that, yes, you guys are actually doing something on gas. And we're monitoring. And I believe we can do it. These are the kind of sessions we can sit down, brainstorm, discuss. But then actualization, very important. Very, very. So, Chuma, let's hear your success story. What are you doing? What are you doing right? What do we hope to gain? Sustainability, LNG. Let's hear from you.
Thank you very much. I almost said I would just take a bow and leave after that, because that really says pretty much a whole lot about energy itself. But let me speak on a few things. You cannot really succeed without being competitive. And our vision as a company has been to have a globally competitive LNG company that, of course, is delivering LNG all over the world where it's needed, but helping to build a better Nigeria, because our eyes is always in Nigeria. And over the years, what we've done is, stretching out the arm, putting up the industry, the LPG sector, the LPG, the work we did in that space, the advocacy with the government on very different fronts. All those point to putting Nigeria on the map out there. We have fleets of vessels. There are 21 of them right now, because we're on a path towards renewing our fleet to make sure that we stay competitive in the business. And we've had to let go of 2 of the old steam vessels that we have so that we can bring in others. There are 2 new ones coming in. One is coming in towards the middle of this year that will enable us to cut down on our cost. And all those, in delivering all this, we're putting Nigeria on the map at every point. Our fleet is really run by predominantly Nigerians, almost 100%. And our management has also grown as well, Nigerianization, giving us, that flair of having almost all Nigerians running everything else in our system. It remains a success story that all of us are proud of, because you couldn't have done it alone. But competition typically will be defined as having value, function, and risk as part of it. But I like how our MD, Dr. Philip Mshabila, put it at the beginning of this year to all of us, to say, remaining competitive will require three things: upping your revenue, reducing carbon, and reducing your cost. In upping our revenue, what we're doing now in LNG, of course, like we said, and I'm sure you read in the news recently, our drive towards getting the 7th train up and running to ramp up our profile and take us from being the 6th in the world to the 4th of exporting nations is on course and is not being deterred by anything. There are challenges on the way, of course, and of course we call on all the sources we can, but we stay focused and we're on it. And just last week or so, it was reported in the news that the largest main cryogenic unit in the world has been installed in our facility in Bonny right now to make sure that dream is realized by 2026 as we plan it. And it is there, seated. Now, we are also then, apart from having 27 come in, we are pushing hard on
other remarketing activities that we would have. As a company, we have sold our volumes over years, but as their term of contract comes to an end, we have to go out to the market and remarket. And like we've been putting on the table, the market is shifting, demand centers is shifting. Europe is not going to be increasing their gas supplies. In fact, they're going to drop significantly leading up to 2050. Japan, Korea, the rest of them, last year alone, some of them had 16% drop in their consumption. Those were the nations that gave us the drive to divert our cargoes from Europe when there was not a lot of value to some other places and make massive gains for Nigeria, which, by the way, is a major shareholder in our company, and the numbers are out there on what we have been able to bring in for Nigeria. However, in doing that, our focus then has to be to where the markets are. Asia Pacific. You can't do without China. There's a lot of plans on what they're going to do. They're ramping up their electronic vehicle outputs and renewable outputs. However, apart from that, there's a massive drive as well in their own centers, even for gas steel. Then the rest of Asia Pacific is also there. And like we've highlighted already, today, the global energy demand, Africa is sitting around, or the global south, not just Africa alone, so including Asia Pacific, is sitting around 40% of that demand. The expectation is that with energy transition, which is part of what the subject is we're discussing today, which is ramping up rapidly, and the world recognizes that it must be secure, it must be affordable, but it must be inclusive, because you cannot do it. It's not the way they did globalization in the past, where you just left a certain block out. You need to make sure every part is included. And the global north recognizes that Africa is crucial for this. So NLNG continues to drive that space to make sure that we put those volumes out there. We are also then looking at cutting down on our carbon and keeping our costs down. And there's a retinue of things we're doing in that space. Like we said already, we're renewing our fleet of vessels. We're working towards an ambitious plan, 2040, the target, to make sure that we have net zero operations in our activities. And that is seen as very ambitious in the whole industry. Wow. There are a few countries like that, a few companies like that have put that together. So pushing that drive plays the example for the rest of us to see as Nigeria. And as we decarbonize the space, we recognize, of course, regulations are ramping up. There are quite a lot of them. It will not only be for us as well, but as Africa grows in that space, the other nations as well are also putting on regulations in their spaces. And the world needs gas, not just us alone, and we have to take the gas to those people. So we must make sure we're competitive in so doing.
Well, thank you so much. Ladies and gentlemen, you can see the passion. You can see the passion in Chima's voice. And, you know, that comes with success. When you're very successful, you want to beat your chest around. We're running short of time, you know, and I really want us to take this part, very critical aspect. We're talking about financing. We're talking about infrastructure. We're talking about export gas, you know. But then how about our ordinary people? I'm from Gire in Adamawa State. How about that last person in Gire? All this talk about financing gas, driving technology, innovation, power, what's his measure? How would he feel, you know, that gas, the gas that we all claim to say that we're leaders, you know, we have gas reserves. How can that person feel it? Mr. Nuhu, I think would love to hear your own view on this and how it can actually be achieved.
Thank you. I'm going to be wearing my gas and power industry operator hat and my policy advocacy hat on this one. And I'll apply, and I'll take on the auto gas sector, you know, as to illustrate my points. It is Chimamanda Adichie who reminded us of the dangers of the single story as a narrative. Today, the auto gas narrative is somewhat trapped in that single story, where we are, even in the caption, you hear, where are we on CNG auto gas? Forgetting that for proper adoption, and in other climes that have adopted auto gas as a strategy, the starting point usually should be with LPG. And rightly so. And I'm going to illustrate. You climes like India and other climes that have done it very successfully. In Nigeria today, we have, according to NNDPRA statistics, over 33,000 refueling stations, petrol refueling stations, out of which 20% of them, which is about 6,600 stations, are fitted with LPG auto gas stations, facilities, as add-ons. As opposed to, in Nigeria today, we have less than 25 CNG mother stations, and even less, maybe 20 or thereabout, daughter stations. I would like to be corrected. Now, whereas in the medium, long term, the CNG portends a cheaper fuel for auto gas, but it is not the fastest for adoption. And that's the reason why, in spite of the government promises, we're not seeing the auto gas buses or CNG buses on the streets because of the danger that we fell into the single story. Now, my take on this would be that there has to be incentives. We have to incentivize regulatory waivers. For example, licensing fees or permits to locations that are willing to adopt the add-on, whether it's CNG add-on or LPG add-on, all right, to fast-track adoption and conversion, switching to auto gas, or infrastructure development for auto gas filling. Equally important also, as I've noted here, is auto gas conversion kits. For example, auto gas conversion kits and auto gas infrastructure already enjoy a lot of very robust policy fiscal incentives. Last year, the federal government rolled out, import duty rebates, all right, and all that to encourage gas infrastructure development, and so that is going very, very well. But the monetary challenges vis-a-vis foreign exchange volatility is not helpful until we find stability in our foreign exchange regime. Is not going to be enabling us to bring in as much conversion kits or even start up production and manufacturing as we intend to.
Yeah, so we need to quickly round up.
Oh, yes, sir, just please, this is very important, so let's make it right. And then awareness sensitization, I can't overemphasize that. And then, now I'm discussing this from the two perspectives, which demand and supply perspectives. So, touching on demand perspectives or the points I made earlier, all right, including even awareness sensitization, fiscal regimes that I spoke about. And on the supply side, we heard just yesterday, the NLNG has announced 1.5 million tons of LPG, ramp up production of LPG. Am I correct? I read it in the news today. They announced it yesterday, which is great news. But we need to do more. The other IOCs need to ramp up or need to free up more molecules for the market. Between ExxonMobil, Chevron, and perhaps we'll be able to get 1 million tons. And also between between annual gas, surplus annual gas, KHNL, Greenville, maybe another 1 million tons. And then that together gives us maybe about 3.5 million tons, all right? And then still, it's not adequate because the projection, if you just a mere switch of 20% of Nigerian vehicles, 11 million vehicles or thereabout we have in Nigeria to auto gas, portends is 1.3 million tons per annum demand, auto gas, LPG auto gas alone. Which means if you add the totality of our demand projections for cooking gas and auto gas together, we're looking at a demand projection of about 6.5 million tons. We don't have that volume, all right? So that needs to be worked on. And then going down to the LPG, CNG, auto gas, I think the policy side is robust and fantastic right now, and then the incentives are very robust and good, save for, again, the issues of financing, all right? Foreign exchange issues and financing, particularly equity, the equity side of financing, because there has to be more equity play in driving financing for the sector now, as opposed to what we have today, where we have a very, very shallow debt side. Thank you.
Wow, thank you so much, Nuhu. And you can also see the passion in Nuhu's voice. Ladies and gentlemen, that's just the fact of it. We can gather around, have coffee, take cakes, cookies, discuss. But the bottom line is, do our actions, do they speak? Can they be felt physically? And only the common man can give you that feedback. The person on the street. We can't give each other. We're all here, we're executives, we're staff, we go back to our offices, we discuss, and so on and so forth. But the ordinary man is out there, and he wants to see that benefit. He wants to have, an enriched life. And we have those resources, ladies and gentlemen. We have it. We have the human resource. And clearly you could hear from this array of panelists, the different perspectives, the different views. At the end of the day, they all converge. What matters most? We need to come together, think out of the box, play our own role, and ensure that it is physically actualized from blueprint to reality. I will finally close by saying, because everyone here has been talking about, SEPLAT, oil serve. Then, Richmond, give me the permission to speak about NNPC Limited. So, no, I'm not saying much. I'm just giving a minute, sir. Just a minute. Yeah, NNPC Limited is actually doing a lot. And you know why I'm saying this? Because of the LPG you spoke about. Right now, for any investor that comes in to partner with NNPC Limited, any LPG byproduct must be delivered in country. Otherwise, we would stand aloof. Because we understand and we recognize the fact that we need to grow our in-country capacity. It's the ordinary person that needs to be taken care of. He needs to get that apple. And those are the steps we're taking, just to add to what you said on the LPG, sir. So thank you so much, ladies and gentlemen. You've been a wonderful audience. Richmond, I'm sure there will be questions from the crowd, or do we put that on hold and answer because of time? I think you guys have been a wonderful panel, and I look forward to having such an opportunity again. Richmond, the floor is yours.
All right, thank you. Just remain seated. Give them a round of applause. Thank you very much. Just to quickly inform you that this event is a CPDA certified event, and that is, of course, a beautiful thing. The certificates you're getting is signed by both ministers and the permanent secretary. So to get your certificate at the end of the event today or tomorrow, if you prefer, you go to the information desk there. There's a self-help system set up for you there. Just follow the prompt and then you get your certificate printed. Let me also inform us that tonight's dinner is the NUPRC Chief Executive dinner, and everyone with a VIP badge is invited to that dinner. And if you don't have a VIP badge, if you have an invite, you are also welcome to the dinner. Now, we've come to the end of this panel session, but I have a small dilemma. I have one panel to go for the whole of today after lunch. Or should we just go ahead with the panel now and then eat lunch and go home? Should we do that? Do the panel now, then eat lunch and go home. Thank you very much. Now, let's give this panel a round of applause and give them their plaques. Thank you. Director, Decade of Gas, please, sir. Okay, you present the plaques to them for me. Thank you very much. Let me have the plaques. Let me have the plaques. Thank you. Thank you, distinguished delegates. Thank you for your cooperation. Thank you. We want to thank Mr. Emeka Ene. We want to thank Mr. Emeka Ene. Okay, please. Thank you very much. For Mr. Emeka Ene, yes. Thank you, Mr. Nuhu Yakub. I promise you the next session will be very short. I promise you. It'll be short and we're done. And we'll go for lunch. Thank you very much for your understanding. Ms. Uwanaka, you're next. Thank you very much for your insights. Ms. Uwanaka, you are next. Thank you for your insights. Chairman, Group Chief Executive Officer of Pana Holdings, Mr. Dare Akobo. Thank you very much. Thank you, thank you, thank you. Okay, I'm being directed to say that we'll break for lunch after now and come back. That's okay. Mr. Salahuddin Tahil. Chima representing Mr. Ofoma Otamawo, NLNG. Okay. Huh? Dr. Emeka Okwosa. Dr. Emeka Okwosa. Where's Emeka? Okay, and now Mr. Roger Brown, represented by Mr. Effie Okon. Represented by Mr. Effie Okon. And of course, Seplat don't go yet. You were not in the room when you were giving the award of Gas Infrastructure Project of the Year. So Director, no, okay, if you hold on, please receive this one. This is award Seplat won on Tuesday evening as Gas Infrastructure Company of the Year 2023. So congratulations. Congratulations. So the consensus agreement is that, please, group photograph. Oga Ed, group photograph. The agreement is that we do this session and then break for lunch, correct? Those in favor say aye. Those against say nay. The ayes have it. All right, thank you. So please just remain seated. It's going to be a short one. Now, this is a cue to all those on the panel. Kindly keep your photographers real quick, please. We're pressed for time. Kindly keep your comments short. Keep your presentation short. Keep your comments short so that we can just speed through the panel and get you to lunch as quickly as possible. Please, we beg you. Thank you for your cooperation. We do not take it for granted at all, at all. Photographers, I beg, now do quick now, I beg. And please, once they leave the stage, do not walk up to them in front of the room, please. Allow them sit down or proceed to the VIP room. Do not walk up to them. Auntie, come out first. Come out. Are we good? Photographers, thank you. Come on, guys, now. Now 2 hours picture be this. You don't do now. Thank you all. Thank you very much. Thank you, Malga. Thank you. Thank you very much. Thank you. All right, please take your seats. We're moving on to panel session 10, African content and opportunities. Please take your seat. I said nobody should walk up to them on stage or in front of the stage. Please allow them sit down, please. Please allow Mr. Tahi sit down. Allow Oganu sit down. Oga, well done, sir. Please allow Mr. N.I.E.S sit down. Allow Mr. N.I.E.S sit down. Engineer, please. Allow them sit down. Hadiza, please take your seat. Thank you very much. Allow Chinenye sit down, please. Can we please allow Nana, please take your seat. Allow Ogefi take his seat, please. Ogefi, please take your seat, Ogefi. Please, sir. Please, thank you. Please take your seat. Thank you very much. Chima, thank you so much. Thank you. Please take your seat. Nana, please take your seat. Thank you so much. Please, allow Mr. N take his seat, please. Thank you. Oga George, thank you. Please take your seat. Alaji Mohammed, please. Can we allow Oga Dare Akobo take his seat? Chairman, sir, please take your seat, sir. Thank you. Please take your seats. Thank you very much. Please, I need the front of the room to be settled down like right now. Can we allow Oga Tahi take the front chair? They just sit down the front there, the sofa, VIP. Please sit, sir. Please, thank you. Please sit. Thank you very much. Thank you. Nana, please take your seats. Thank you very much. Thank you very much. Please. Hi, Chief Effie. Thank you, sir. Please take your seats. Please, thank you. Thank you all very much. Thank you all very much. Thank you all very much. Thank you, thank you, thank you. Straight to the panel. Two quick, very quick presentations, and then three actually. 3 quick presentations, and then a short panel conversation, and we're out of here. Let's begin the conversation by welcoming to the lectern on my right, the chairman of the Petroleum Technology Association of Nigeria and the chairman of Zetadel Group. Let's welcome Mr. Nicholas Odinowe. Please, sir, give me a round of applause as he makes his way. Let's try and keep it short, please. Let's try and keep every remark, every contribution short. Greatly appreciated. I make the sacrifice of standing around not too far. Once I come on here, your time is up. Thank you very much. Chairman, just hold on 1 second. Can we have those by the door either take their seats or just kindly, let's not create the distraction that is, please, those by the door, please take your seats or just take the networking to the foyer. Thank you very much. Thank you very much. Thank you. Thank you kindly. Chairman Petan, over to you.
Good afternoon, everybody. I know that we are all hungry, but because we are agreed that we are going to sit through this, eat our food, go back to our rooms and prepare for the dinner, so let's just give ourselves a little time to digest what we are saying, because in this hall, we are all local content compliant. Good afternoon once again, distinguished guests, colleagues, stakeholders in African energy sector. Today, we gather here to discuss the crucial topic of creating a sustainable, forward-looking approach to Africa energy sector. As chairman of PETAN, that predates the Logic Act 2010, and having traveled and traversed the whole of Africa in the last 2 years, I am honored to welcome you all to this important conversation. We are proud to see the strides that we have made in advancing energy industry on the continent, but we must also recognize the challenges that lie ahead. Sustainability, like the team said, is not just a buzzword. It is a necessity for the future of Africa and our industry. So in today's evolving Africa, it is imperative that we adopt a holistic approach to local content development that takes into consideration the energy availability, security, sustainability, environmental impact, technology advancement, sector-specific dynamics, and opportunities for growth in African energy sector. We must strive to strike that pragmatic balance between meeting African growing energy needs for our continent and preserving our environment for future generations. As we continue to develop and expand our mixed energy resources, mark the word, mixed energy resources, we must do so in a way that is environmentally responsible and socially inclusive, that gives priority to the well-being of our local communities. A robust policy framework for African local content is also key to our success. The African Regulators Roundtable, spearheaded by NUPRC, it is ongoing right now, should and must be inaugurated very soon. This, we are working behind closed doors to make sure we achieve that. So is Apple-led African Energy Bank, that is on stream. The same way we talk about this, we talk about African standardization, as in Europe, United Kingdom, the US. These play a vital role in sustainable energy in future for Africa. We must nurture and support the next generation energy professionals, ensuring that they have skills, knowledge to lead us to the future. This requires investment in education and training programs, as well as creating opportunities for mentorship and career advancement. By embracing innovation and leveraging on technology advancement, we can unlock new opportunities for sustainable growth in energy sector. This includes investing in mixed renewable energy sources, exploring cleaner technologies, and promoting energy efficient practices. Additionally, we must collaborate with stakeholders, including governments, industry players, local communities, to ensure that our content development strategies are inclusive and beneficial to all. As we delve into discussions today, let us keep in mind the importance of long-term planning, flexibility, adaptability in shaping the future of African energy sector. Together, we can pave the way for sustainable, forward-looking approach to content development that would drive growth, create jobs, safeguard our environment. We must work together, share knowledge, the best practices, and stay committed to our goals. Local content, and I repeat again, local content is critical in driving sustainability and future of energy. I thank you, and I look forward to insightful discussions and fruitful collaborations ahead. I thank you once again for listening.
Thank you very much, Mr. Nicholas Odinowe, Chairman, Petroleum Technology Association of Nigeria, and Chairman of Citadel Group. Thank you. We're moving on swiftly now to the Executive Secretary, Chief Executive of Nigerian Content Development and Monitoring Board, NCDMB, Engineer Felix Omashola Ogbe. Let's welcome Director Corporate Services, Dr. Ama Ikuru, speaking on his behalf.
Good afternoon, all. Let me still stay with the protocols that have been established before me. My Executive Secretary, Engineer Felix Omashola Ogbe, would have loved to be here himself to give this keynote address, but then he has other national engagements and he has asked me to make the presentation on his behalf. I'm sure most of you know about Nigeria Content Development and Monitoring Board and what we do. I will, in this presentation, talk briefly about what local content actually means. We are supposed to discuss sustainability and content development for African energy sector. And for us, content means what we do. So content means what we do when we develop local services, when we develop our people and they have the human capacity, the skills that they require to support the industry, when we develop our facilities, our materials, when we develop local grown technology to support the industry, when we use and own our equipment, and when we use our finance to support what we do. Now with content, you achieve two key goals. One is domiciliation of the proceeds, which will help our economy and solve some of the problems we are having presently. And then we domesticate activities locally, which will create employment for people and help us to move our economy forward. The case for local content is very well made. On the screen, you can see the population of Nigeria and put that side by side with the population of Africa. You can see our gross domestic product. You can see all the other vital statistics. Africa has reserved to sustain local content for a considerable amount of time in future. The story about renewables and the energy transition is a good story, but I think we still have enough of the fossil fuel to support any investment in the development of capacity and local content in Africa. Let me share with you some of the successes we've achieved in local content. Today, our level of local content in Nigeria stands at 54%. Now, we can boast of a fabrication yard with 250,000 metric tons. So we can build the infrastructure you require for oil and gas development going forward. We have the FPSO integration yard at Ladol, which is the best in Africa and one of the largest in the world. We have developed pipe mills, pipe coating yards. Towards supporting the industrialization of Nigeria, we have started the construction of industrial parks. Our intention is to do about 8 of them. 2 of them are almost at 90% completion. And once we start that, we'll start manufacturing what we need and start using what we need for our industry in Nigeria. We pay a lot of attention to training people. I will not be the first to tell you that Nigerians are the ones managing most of the fields in Nigeria. Before, the fields were owned by others. Now Nigerians own those fields, and I think we deserve a round of applause for investors in the Nigerian oil and gas industry. We set up the fund to support our contractors, the Nigerian Content Intervention Fund, and that's one of the most successful funds we've had in the industry. We tracked over the past few years the business in the marine sector. Now we're talking about blue economy. And we came to the conclusion, based on data, that 60% of the vessels we use in the country are owned by Nigerians, which is positive. The business in that sector over that period was about $7 billion, and Nigerians did 60% of that business, which is quite good, and it's what we want to do with local content. That's the picture of the Lador yard. The picture of the FPSO integration facility at Lador. Picture of one of the parks we are doing at the Mayal. Picture of the other park we are doing at Udupani. Our intervention to build enduring capacity building facility. This is a vocational school that some of our partners, Shell, Total, are doing in Port Harcourt to support the industry. If you look at the chart in front of you, you can see that we've achieved significant mileage in reducing the number of expats that come into the country. Actually, so far, we've replaced about 1,376 of them with Nigerians. And Nigerians are doing more. We're not seeing a lot of influx of expats because we have the capacity to do things. Very recently, we worked with the industry to reduce contract cycle time. Yeah? And we just signed an SLA with NMPC and industry stakeholders to reduce the cycle time from about 36 plus months to about 6 months, which will attract investors into the country. We are the #1 agency in Nigeria in terms of ease of doing business. We've sustained that for the second year, and we'll continue to do more to remain who we are. When nobody was helping us to fix the refineries, we invested in 4 refineries. Some of the refineries are producing today. We've also gone into gas. For gas penetration, we are partners with NEDO. NEDO talked to you not too long ago. Yeah? And we have a number of other gas companies we have invested in. We did not stop there. We called the companies. We did the Project 100 to train our companies to have the capacity to do services in the industry. We selected about 100 companies, and the intention was to move their performance from 500 million naira in a year to companies today. I think some of them are doing above 5 billion and all of that. We've grown those companies, and it's our job to do that. I talked about our fund. The question is, when you've done so much, you've built capacity, how do you sustain it? We can use the same template and model to develop capacity in Africa. But if we cannot sustain the capacity built, it will go into waste. I have a number of points a number of bullet points and areas that I believe if we focus on will help us to sustain the capacity built over the period. This picture is just to say that, yes, with all the things about renewable energy and the sustainable energy, the hydrocarbon, the fossil fuel industry will stay for some time to come. But on the board, you can see the few areas I think we should focus, and I want the capable panel that we have today to discuss how we can go around this to build the African content. First is research and development. When we started, most people said they are agents of original equipment manufacturers. Now, the same original equipment manufacturers are targeting the markets that our people are also targeting. So there has to be an original input that you will take to those markets if you want to win. We need to focus on research and development. Second point has to do with business opportunities. If we're not taking new FIDs, if we're not creating those opportunities, how do we sustain those things that we have built? And how will Africa bring out more money to build? Now, we will not get opportunities on a platter. Our cost has to be competitive. Those guys will compete with you on cost, so we need to rework our value chain and make sure that we're as competitive as the foreign companies that we are competing with. We also have to work on our quality. If the quality is not good, in the oil industry, we don't tolerate poor quality. So, local content, yes, but local content with world standard, world-class quality. That's what we want to do. We have to standardize. The worst you will do is to mobilize an equipment from Nigeria to Congo, and they tell you cannot meet the specification or it's not standard, and you have to mobilize it back and all that. It's a waste of time. We need a base African standard that will help us move things across boundaries. Luckily, we have the African Continental Free Trade Agreement as the framework, legal framework to help us move across boundaries. But individual countries also need to have a legal framework to support what we do. And they have to support that policy such that when we develop capacity, people have invested. They will allow them to actually get to the point of recouping their investment before you go completely local. Those that are actually going international should also think about partnerships with those companies. How do we cultivate those partnerships to make us successful? There are so many things to be said. The team here is quite capable. They will tell you and diagnose and tell you how they will succeed in building sustainable African content for the energy industry. I'll leave you in their hands and hope that together, if we work this, Africa will become developed and Nigeria will win. Thank you very much, and thanks for the opportunity.
Thank you very much, Dr. Amai Kuru, Director of Corporate Services at NCDMB, speaking on behalf of Angela Felix, or Mashallah Ogbe, the Executive Secretary. We're moving on now to Apple. Apple Secretary General, Dr. Omar, His Excellency Dr. Omar Farouk Ibrahim, has gone to attend another meeting, and I guess you know which one. But the head of energy studies at Apple will speak on his behalf. Let's welcome Temi George.
I'm still standing on all existing protocols. I will be reading Dr. Omar Farouk Ibrahim, the Secretary General of African Petroleum Producers Organization's remarks. As we gather here today for the African Local Content Investment Forum, it is with great anticipation and commitment to the development of our continent that we convene. This forum stands as a beacon of hope, a platform where ideas converge and strategies are forged to empower African local economies. Under the auspices of the African Petroleum Producers Organization, APO, the significance of this event resonates deeply. It underscores our collective resolve to harness the vast potentials within our borders, nurture indigenous talents, and foster sustainable development across the energy sector. ALCIF represents a pivotal moment in our journey towards self-reliance and prosperity. It is a testament of our unwavering belief in transformative power of local content policies and investments. As we engage in this dialogue, exchange insights, and explore opportunities, let us remain steadfast in our commitment to transparency and collaboration. In the face of global challenges and shifting paradigms, Africa stands poised to chart its own course, redefine its narratives, and emerge as a beacon of innovation and progress. Together, let us seize this moment to shape a future where African nations thrive, citizens have the opportunity to prosper, and where our collective aspirations knows no bound. The Secretary General of Apple is honored to stand alongside you today, inspired by your passion, dedication, and unwavering belief in African boundless potentials. Let us embark on this journey together, mindful of the challenges that lies ahead, but fortified by the strength of our convictions and the power of our collective resolve. I thank you.
It's looking like every speaker before the panel on this session will receive my honor, my international honor of timekeeper, you know. So you can say, Temi George, accurate timekeeper. It's the only one bigger than it is if the president gives you one of those ones from Abuja. But hey, thank you. Let's give the three speakers a round of applause. Thank you so much for helping us managing time while sharing your insights on the theme of African content and opportunities. Let's go to the panel now. Real quick, first off, General Secretary of PETEN and Managing Director and Chief Executive Officer of Global Pipeline and Process Services Limited, one of our award winners on Saturday, Mr. Obi Usu, is on our panel. Let's welcome him. Joining him is the Managing Director of N.I.E.S, the second one there, yes. Tenaris and the chairman of the Petroleum Contractors Trade Section. Let's welcome Mrs. Rosario Osobase. Joining them is the chairman, Commonwealth Women Group and founder of N.I.E.S Limited. Let's welcome Mrs. Ngozi Oyewole. Joining them is the Chief Technical Officer of New Cross EP Limited and President of the Nigerian Association of Petroleum Explorationists, Mr. Abiodun Ogunjobi F. Napi. Joining them is the Managing Director and Chief Executive Officer of Africa's Finest Cables, Coleman Cables and Wires, Mr. George Onofwoko. You're welcome. On the panel, we'd like to welcome the Managing Director, Matrix Energy Exploration and Production Company Limited, Dr. Bukola Olushola. You're welcome. Joining them on the panel is the Chief Executive Officer of Heritage Energy Services, Heritage Energy Limited, Mr. Ado Osaribaje, who is not here but represented by the General Manager of Operations Integrity. Let's welcome Nelson Wilbert. You're welcome, Mr. Wilbert. Joining them is Managing Director of one of those independents that truly is doing IPPG proud, Platform Petroleum Limited. Let's welcome Mr. John Anim. Before I bring up the moderator, let me quickly inform you that tomorrow the Secretary to the Government of the Federation will be coming here to first off take a tour of the exhibition and then proceed into the room and take the concluding remarks from the Federal Government of Nigeria to close this particular 7th edition of NIES and to end sometime around 12, and we'll all retire to reconvene in the evening of tomorrow for the concert that closes the NIES Conference Summit that is sponsored by the NNPC. Now let's welcome our moderator for the panel, Managing Director, Stars Investment Company Limited, Ms. Irohama Ogbefun.
Thank you. Good afternoon, ladies and gentlemen. I will continue to sit, stand, eat at the already established protocols. I would like to also let Richmond know that my panel would like to give proper justice to this topic because we think it's very important. So please, I will ignore you like you're not here when you climb the stage. And then lastly, I'd like to thank everyone in the audience for sticking with us. I know it's lunchtime or it's past lunchtime, but you chose to be with us, and that just shows your commitment to the topic, and we promise to not disappoint. I have warned the panelists, do not disappoint. My name is Irogama, and I'm extremely privileged to be moderating this panel, discussing something that's really important and very dear to all of us in this room because it speaks to what the future of the African energy sector looks like for Africa. We've heard a lot during the last few days about the current state of the industry in Nigeria and, of course, giving an African view. We've also been told about the potential for the sector in terms of growing energy demand, in terms of the challenges, which I also see as opportunities, and just where Africa needs to rise up and take her place. This panel is interesting because it's filled with private sector players. And I'm usually used to engaging with public sector officials, challenging them, telling them what they need to do, what they're not doing right, and how they should be going. But today we were saying, private sector, how do we stand up and make the change that we want to see? And if we have to drag the government officials by their hair, if required, to make sure that they come along with us. So you're going to be hearing a lot of real insight, experience, and just private sector players saying, if we're going to do Africa for Africa by Africa, this is the path that we need to chart. I will not do the boring style of going from one panelist to the other so that you don't fall asleep on me. So we're going to keep them on their toes and pick randomly. Maybe in my head, I'll do eeny, meeny, miny, mo. So I'll be starting with Mr. Abiodun, who is distinguished president of NAPI, and also happens to be the CEO of Matrix Energy.
New Cross.
Of New Cross, sorry, CTO of New Cross, apologies.
Thank you.
You are an established player, an upstream indigenous player. You have excelled. One of the success stories that I'm sure NNPC would speak to or the regulators would highlight as one who has gone into divested assets and has proven their worth. And my first question to you would really be around how you are, how are you approaching environmental stewardship? So we've talked around sustainability, but we will not only address sustainability from a business legacy standpoint, but also from how is the business being operated in a responsible manner in terms of the environment and as well as fostering the right relationships with the community in which you operate in. We have heard why IOCs have divested from onshore assets, operational risk being one of the major challenges. How are you, as an indigenous player, driving sustainability in your operations in your community? Thank you.
Thank you very much, and good afternoon, ladies and gentlemen. I think one of the things that African or Nigerian independent has done rightly is by integrating the community as a stakeholder in the business. Now, what independent operators like ours has done successfully is by establishing a symbiotic relationship with the community, where you make them a stakeholder and they know that their interest is well enshrined in the operation. They'll be part and parcel of the business. Now, for over a few years, that the company that I work for had been operating, we operated an asset that was divested from the IOC, and I can tell you confidently that we have never had a day of shutdown to community disturbances. So if you have any shutdown at all, it will be maybe operational technical issue, but has not to do with the community. So making them a stakeholder in the business, establishing a robust community relationship whereby they know that they benefit as long as the operation goes on. We made them be in a position to guide the operation. And not just that, the local content policies has also enabled a situation where the local community are also empowered to be able to offer services. So we have skill development program that some of them that are even well trained in providing technical services are grouped together in a cluster. And they are able to compete for some of the services that we give out to some of the established service providers. So by making them a stakeholder, they also guide the operation for you and able to operate successfully.
Thank you very much, sir. I'm going to circle back to you because we want to really learn a lot from your experience as an indigenous player in upstream activities. But I will dial to Bukola. So, Mr. Bukola, yes. I will be asking you a similar question because I know that you're dealing with communities as well.
Yes.
And we're talking about sustainability. So I would like to hear from your experience, very detailed. What has that been like and what could the future potentially look like?
Okay. Thank you very much. Good afternoon, ladies and gentlemen, and thanks for having me. I want to say that we are now in an era where the host communities are a key stakeholder in oil and gas operations, and they're well enlightened about our operations. Just by citing an equipment, a community person can tell you the operations you're about to commence. It is therefore important for us to have pre-engagement before every activities that will commence in the field. And also we sustain that communication with the community to ensure that at every stage of our operations, we are in a mutually beneficial relationship. Also very critical is for us to also look inwards at our operations and how we operate our assets. Gone are those days where you just develop an asset the way you like it. Now, how you develop an asset is very important. It's not just getting results, but how you get the results. And so for us at Matrix Energy, we're very intentional about how we develop our assets. Because if we develop our asset responsibly, we minimize our carbon footprint in the environment, then we can minimize frequent engagement with the community. What I mean by that is we make sure that our HSE policies are according to industry best practice, and our employees are empowered to comply with those policies. And even when we have communities and contractors working on our locations, we hold them responsible to the same standards that we hold our employees responsible. So for our development strategy, we'd make sure we work with a zero gas flare strategy, even from the beginning of our operations. We don't want to flare. Our water, we make sure they are properly treated and disposed responsibly. Because if we minimize the impact of our operations in our communities, then they see us as a responsible player. And one more thing that we do very well at Matrix is the fact that we treat our host communities as a member of our family. We always tell them, don't treat us like strangers in your land, but treat us as a part of your family. And that always goes a long way in encouraging them to support our operations. Because for every project we do, we always sit down and ask ourselves, what part of our project can we allocate to the communities? Because if they benefit from our project, then we can have a sustainable operations in our communities when our employees are safe, our assets are safe, and our stakeholders can maximally benefit from our operations.
Thank you very much.
Thank you.
Thank you. Very good points right there. Please, you can clap if you want to. We're not allergic to the clapping. So I'm going to move to the very, very, very beautiful woman on this panel, Mrs. Rosario Shabase, who, a personal friend, and I know how committed she is to local content development in Nigeria. And now we're discussing what it looks like for Africa. She's the chairperson of PCTS, so which gives her a platform to interact and know exactly where the pain points are, not just from a personal point of view. So Rosario, my question to you would be, with your experience and all that you know, how can we ensure that local content development in Nigeria or Africa's energy sector aligns with global sustainability goals and strategy? I know it's something that's dear to you, so please unleash.
Okay, thank you, Iro, and good afternoon, everyone. I'm delighted to be here and happy to have all of you in the audience, to participate, despite the very long day we've had. Iro, to your question, I believe that sustainability, right, is about securing the now, the need for the now, without compromising the future. Right? And personally, I always preach that sustainability wraps around three things. The first is that it has to be people impactful, so the people have to benefit from whatever it is that we're trying to develop. The second is that it has to be planet impactful, which means that whatever we are doing, our operations, our products, our services are done in such a responsible manner that we leave the environment and the climate, better than the way we hopefully met it, and for the future generation as well. And the third is profits. Profit because every sustainable business model hinges on the back of profits for the economy, for businesses that float it. So I call it the 3 Ps of sustainability. So with this in mind, my opinion is that, first and foremost, the NCDMB, represented here by my very big brother, Ama, did justice to the topic around the direction of the board. And in Nigeria, we've done a good job with establishing laws that enable local content. And since 2010, when the law was enacted, I believe that there's been significant progress. That progress is what sees me seated here as the first female managing director of N.I.E.S in Nigeria. Thank you. Okay, with that said, I believe that the first point to align to globally sustainable best practices in developing content, especially for the African continent, would be building true capacity. And when I say building true capacity, I mean not tokenization, as we currently see at play sometimes in the oil and gas industry just now. What that means really is that we need to encourage homegrown solutions, African solutions. We also need to encourage established players who are more driven towards value creation and retention rather than portfolioship, rather than portfolio companies who are only in the benefit of putting a markup and ending up ceding the work to out of Africa, i.e. Chinese destinations and the rest of the world. I think another point that I would like to make is, again, we see NCDMB or the board taking leadership on this, is the fact that for us to be sustainable, we need to set very ambitious targets for for us to build global best practices in content development. And these ambitious targets have to be driven on the backdrop of strong monitoring for compliance, as well as monitoring progress of these targets. So let's say we've seen on the board that NCDMB have developed 6 coating mills. By way of introduction, my business is, as N.I.E.S, is a leading pipe manufacturer, global pipe manufacturer of steel pipes and everything related to steel products. We have a pipe mill, $100 million of investment out of N.I.E. What that means to me is that we need to continue to increment capacity. But for us to increment capacity, we need to be seen to be sustainable. So it's important that from time to time, we are monitoring for compliance of the local capacities that already exist around Nigeria and Africa, and also ensuring that we are making the incremental progress.
All right, thank you very much.
The third point, please, if you let me, is very important to me because I sit on the board of the NCDMB R&D Council, and we hardly talk about research and development as the bane of industrialization. Ogama mentioned it here, but for us to have true sustainability in African content, then we need to, as Nigerians, as Africans, be serious about investing and increasing our spend in R&D.
Thank you very much, Rosario.
I would say that.
Very strong points that I would like to share to the rest of the panel. I'm going to ride on your definitions around sustainability and your last point on the place for technology and innovation, and just run on to Mr. Obius, who got an award on Tuesday night, actually, for just his excellence in his business. So I think you're poised to be shedding light to this topic here today. So you're into pipelines and process services as a business, doing it for decades now, so grown that capacity over time. What would you say is the role of innovation in how we could position as a service company in the industry for sustainability as we are growing local capacity, both here and in other parts of Africa?
Thank you very much.
How do we develop that using technology?
Thank you very much. Good afternoon, distinguished ladies and gentlemen. I'm the Secretary of Patent, which involves more than 100 Nigerian companies rendering services in oil and gas, as well as the Managing Director of GPPS. However, I want us to look at 3 very important key, which is on the content first, before we go into the real question. Those 3 C is competency, which is knowledge, training, and research and development, like has been said earlier. The next C is capacity, which has to do with resources you will need to deploy to be able to fulfill whatever commitment you've made. And the last one is collaboration. That collaboration is closing the deficiency gap. You may know how to do 1 or 2 things, but the third one you don't have. You need to collaborate either externally or internally to be able to deliver that. And it helps you again to de-risk yourself or a company you have. Instead of you to take burden of doing things you are not an expert in, you give it to another company that has that capacity to do, and to scale up to do more of bigger projects in that space. However, coming down to your question, the role of innovation and technology, I'm going to give you perspective of a service company as well as GPPS personally. You need to have a very sound knowledge of the space you are playing. That space you are playing, you are doing drilling, you are doing service, pipeline, this one. You need to understand it end to end and understand the ecosystem. That ecosystem is very important. Who are the people playing on this space in Africa, around the world? That way you can attract collaboration from Norway, from UK and all that. If you don't have that broad knowledge, you restrict yourself and think you are a champion. Meanwhile, you are just playing on the last league. So that's the problem. The second one is you have to have a robust R&D in place and collaboration, like I said, internally or externally, to be able to bridge the gap of things the client needs. Somebody said they need this, they need this. Some of the equipment we've got, we bought them from Europe and other, but they are not on the spec of deep water operation. We will remodify it, we will reset it to that spec because of the knowledge we have and what the system required. So you must have that knowledge to be able to modify it. Even some of the people who bought those equipment cannot even recognize it again. Some people take picture of those equipment, send it to where they want to buy it. They say they don't manufacture something like that. It's still the same place we bought the same equipment. But you need to have that knowledge to do internal R&D on your space to expand it more. And competency development program. This is the key. We've sent 27 Nigerians to Cambridge and Harvard within this space. We have 3 that's going to Cambridge. What happened? We realized that if we have this competency in country, it is to our advantage than bringing somebody from France or from India. After 2 years or 1 year, he will just go. But if we develop Nigerians, over time, you see they are the experts and they are in-house with us and they never forgot about this. They will always be very loyal to our own culture and to our own company. So that's what we are doing to have organically grown expertise within this space in Nigeria.
Thank you very much. Thank you. So, because most times people are very afraid to train. And that's what I find with a lot of business owners in Nigeria. They don't want to train because they're worried, what if they leave? But then the question is, if you don't train, what is really the sustainability strategy for your business if you don't equip your employees? I want to go to the cables guy. So how many people here have heard this Coleman Cables ad on, I think it's NTA? I've told him that I think the new one does pales in comparison to the old one. We want the old one back, the real one, the original. You have to go back to the original. But yeah, so I mean, George is just like me, second generation. I truly admire what his business has turned into under his leadership. And I think he has driven real local content policy implementation in Nigeria just using his business. And he has found an opportunity to also expand into other countries. And I think, George, what I would like to hear from you today, using that experience, really is telling us how, manufacturing companies such as yourself can adopt, a sustainable approach towards the growth of local content in the energy sector, but still maintaining that standardization that we've heard a lot of. When we think about Nigerian products, I mean, no offense to us as Nigerians, but we know that typically the first reaction is not to trust that quality and whether we have cut corners or we have actually stuck to international standards. So as a manufacturer, how can we really drive this content development that we're looking for sustainably, but still being able to standardize realistically, both here in Nigeria and even in other parts of Africa?
Good afternoon, everybody. Thanks, Zoro. For me, we should look at it in some different parts. Creating sustainable development within the content space, and how, where, and how is it developing to other areas of Africa. The biggest issue is, as you said earlier, you say you're Nigerian first, and everybody just gives a barrier that most likely your goods, services are below par. Now, how do we develop, or how did we develop into a business where I could proudly say every Nigerian sitting here we're the only industry where they'll actually, when they're building, doing anything, when it comes to cable, the first thing they'll be saying is buy made in Nigeria. And that is something of pride, that we are the only industry where every Nigerian, no matter small or big, would not buy a foreign cable into their property. So we did something right. And how that was possible was just standardization and not bending the rules on standards and quality. Now, how do you sustain that? And how have we sustained that for over 50 years in Nigeria, maintaining that status and growing it into a business that we've been able to do so far, But it just shows that if we're committed to a long-term goal, long-term sustainability, training your staff, believing that, I'm a foremost believer that you can be black, but you can be proud of being black. And the only way you can is to develop those that are within your system. And developing the same Nigerians, developing the skill set. In ours, we target basic process of training for any product we have never done before is to bring a team in, but target ourselves that in 2 years, you've taken 50% of that team out. In 3 years, I've taken 90% of that team out. And in possibly 4 years, I have no member of that starting team. We've been able to achieve that. 800 workers, 1% expatriate. And we're achieving it. So it means you are able to train and believe in the same Nigerians, sending them out, bringing them in, and putting capacity and capability on them to be able to sustain growth. And that is only possible in an industry this difficult, that you really need to spread your wings, not only in Nigeria, out of Nigeria. And you go to other countries, we actually export also. And you get in some other countries and the word again is, can you take off made in Nigeria? I said, how is that possible? Now, we're bringing products from Nigeria, but you want me to take off the made in Nigeria, because the assumption and the presumption is that made in Nigeria is below par. I said, but for my industry in Nigeria, I'm literally in a position where every Nigerian wants to buy, so why should I come into your country and take off the Nigeria? One actually proposed, right, made in Turkey, but put your comment on it. I said, it's not going to happen. We eventually actually went into that country with made in Nigeria and sold. So it just means you can create standards, you can, and luckily in our own industry, now the world has actually evolved to be IEC compliant. So we all started with all individual British standards, Nigerian standards, South African standards, and the world has literally, for the industry, actually using more of the IEC standards for all the cables around the world. So most countries have adopted IEC standards, and that's made it sustainable. And I think that's the best thing that's happened to us in the industry in terms of the cable. So no matter who you're speaking to nowadays, whether in oil and gas, in power, in energy, solar systems being deployed with certain cables, everybody is now using certain IEC standards. So the important part of it is that the standardization makes it sustainable, that it doesn't matter which part of Africa you go to, as long as they're all operating on the same IEC standard, the entry point becomes you're all at the same equal level, and it's now a case of how efficient or how better are you at doing what you do. And finally, anything sustainable needs staying power. And now anything sustainable in our part of the world called Africa is not easy to achieve on the long term because of capacity building cost money, sustainability cost money. All these are CapEx related. So how do we create that staying power? And that is all coming from the support that we need. Africa as a whole must see content as Africa, not as Nigeria anymore, not as Uganda, not as Angola. It means we need to have sustainability built on developing collaboration between all the countries and seeing no matter where you come from, I have local content in Nigeria, there's local content in Uganda, local content in Angola, irrespective of where the local content is coming from, as long as it's Africa, interlink and there should be linkages. Now, at the end, what you then have is capacity built from those mergers, those linkages, those collaboration, and it will make us big enough to actually take on projects that are really not the figures we see in our world. And I give that as a final point. For me, today, when you look at NLNG, we're literally doing 100% of the type of cables that 50–60% of the cables we're doing. Nobody in Africa has been given some of them. And today, you had to build capacity years beforehand to actually approach and break those barriers. So sustainability is long-term, and sustainability is long-term achievable in this part of the world when we focus, believe, and train our people to break the barriers with us. Thank you.
Thank you very much. Thank you. Thank you. So, transverse the borders, train, build that capacity, and do not compromise. I mean, we need to start to change that narrative out of Nigeria, out of Africa, that made in Nigeria or made in Africa is substandard, and we only achieve that as a collective if we choose to stand in the way of integrity and we choose not to compromise. That's what builds that sustainability. I picked that very strongly, George. Thank you. I'm going to just slide over to the MD of Patron Petroleum, Mr. John. We've already heard, I think standardization stands out very well. That's a very nice quote. For us as an enabler, right, for building content and in a sustainable way. I'd like you to expand a bit more using your own story and your experience in the industry of how you've grown. Your company has grown, was cited as one of the impressive companies as well from under IPPG, doing very well. So what are the key enablers? I'm sure that there are challenges, but in speaking about the enablers that help us to really sustain the development of local content in our sector, I want you to see them as opportunities, and which is why I'm asking about the enablers, not asking you to speak to the challenges. So what are those other enablers that would help other companies sitting in the audience today saying, look, I want to build this business sustainably, responsibly, and build it from a local content perspective? What needs to be standing around me to help me prop up?
All right, thank you very much. And good afternoon to everyone. Platform Petroleum Limited is a product of the Local Content Initiative. It's a company that has been existent for over 20 years and that is formed by individuals that worked in the IOCs, understood how business is run, understood the challenges, and understood what it takes for you to develop the asset in your environment in a sustainable manner. A sustainable manner in the sense that if you don't have sense of ownership, that you are operating an environment, if you mess it up, you're going to bear the consequences of that mess. You will not operate responsibly as a company. So these are individuals that had those initiatives, and they understood the issues, the challenges they faced when working with those companies. And they came up with the idea of, first of all, knowing that the company, the assets, has key stakeholders. Like the two other speakers spoke about the community. Community has been identified as one of the key stakeholders for the sustainable operation of your company. They identified that and knew that there is no way we're going to work without the community. So first of all, when the asset was granted, the community became a part of the business. We identified with them and engaged them in our operation. First of all, we formed a collaboration between the different communities, the host communities, and extended into the impacted communities. And we were able to engage employees of platform, mainly from the communities. So we had about 60% of the employees of platform coming from the community. So whatever we're doing it in such a way that it will not impact negatively on the environment. Thank you.
Thank you very much. Thank you. I'm going to just slide to Nelson. Nelson, I know you're expecting a question on environmental sustainability, but I want you to talk a bit more about that last question. I want you to dig deep a bit more into those enablers. Because, I mean, we're talking around how do we build content in a sustainable way? How do we do that? Very simply, how do we do that? What needs to be in place? What do we need to be doing as private sector? Yes, it'd be nice to hear what the government should be doing. We've heard a lot of it in the last 2 or 3 days. But for you as a private sector player, for people who are invested in the industry, who like to expand and grow, what do they need to be thinking about putting in their forefront that enables us to say that in 10 years, in 50 years, this is what our sector would look like?
Good afternoon. So thank you very much. Someone, and I'll quote very loosely, said sustainability is a marathon. It's not a sprint. One of the challenges we've seen in Nigeria is it's not the policies, it's the implementation of those policies. We have some really fantastic policies. I know we play the sort of ping pong sometimes with NCDMB, but what they've put on ground for us is actually world class. The question is, how are we implementing it? It's not about going with the tokens to say, yes, I have to, it's my scorecard because Mr. NCDMB will come over, let me get 1 or 2 people. Everything that we do has to be outcome driven. Now, you know that many of these people are starting from scratch, near zero capacity or capability, or even competence in some cases. This is where you essentially put the training wheels. It's a symbiotic relationship where you say, if I am going to help develop, even if it is this one company, to raise them up, show them the right standards they should operate to, whether they're community-based or they are just another local or indigenous player, it is important that we work as partners. Now, this is just the direct relationships, but behind that, there are lots of things that the policies and, of course, the guidelines that have come from the NIES Act has actually helped put in place. When we stop certain services from flooding our market, that gap is automatically filled by the real entrepreneurs, and we have so many fantastic stories today. I know George is way beyond the NIES Act, right? But there are so many young players that are successful, but we have to be deliberate with every single step that we're taking. And it's not just about the company or the operator in this particular case. It's actually the other players. And then you have the enabling fields being put by the regulators, right? So it's essentially an ecosystem that has decided we want to build competence and not cut corners. We have cases where local players are given opportunities, and what they want to do is get substandard products. Accepting those substandard products, you're actually contributing to the problem. We have to maintain that level of quality, as George already mentioned, and help them build the competence to be able to deliver that. I'll give an example from Heritage Energy. Heritage Energy is the operator of OML 30 and also the Transfocados pipeline. like most indigenous players or independent players, we have aged assets. Aged assets, and I think someone joked about even the manufacturers not even recognizing those equipment anymore. That is not the sort of environment you want to bring someone that is going to cut corners. We've been blessed with the age of the oil and gas industry in Nigeria that we have competent people that are actually managing world-class portfolios across the world. And we have several of them here in Nigeria. So why can't we deliver? It's just the leadership and commitment right from the top of every organization. The regulator enforcing, the operator, or the operator in our case, the leadership, and then also the local player, all choosing to say, this is what we want to do. And it's not just for this job or for this quick profit. It is for the long run, I think with that, we'll be able to build competence. Now, the other part, which I know it's always on the lips of the NCDMB, is R&D. And we've said it so many times that it almost seems like we're immune to it. But the truth is, we really need real research and development. I'm blessed to be to sit on the technical advisory board of the NCDMB R&D fund, and we've seen the quality that have come out. When we think long term, we now need to even start going back to our curriculum. Maybe not go as far back as primary school, but that's where I will propose. Primary school, secondary school, university. You see the quality of proposals to the technical advisory board from even university professors is so substandard. So substandard that it is actually shameful, right? So very few, I would say maybe at best, 20% actually comes without you having to essentially show them a few things to step up. So we need to think that long term, go back our curriculum, teach our people how to be innovative. I mean, every single child is innovative. You just need to give a little child Lego pieces and see what they come up with. Most of the time, they don't even look at whatever the original design is. They just fix it in different ways to satisfy what they want. That is the type of skill that we need to start way upstream. They say the best time to plant a tree is 30 years ago. Mm-hmm. Next best time is today. We don't have a choice. We'll manage what we have today, but also we need to start fixing the pipeline that is coming up front, or rather coming behind. I'll stop now.
Thank you so much, Nelson.
Thank you.
I think those are very great points. Thank you. Thank you. And you know, just speaking to that, I think it was 2 days ago, we had Gil Automation on the panel, and he spoke about technology and even the challenges, you know, of just adopting everything that's not built necessarily for the African climate and the inefficiencies that come with that. So maybe it is something we need to really be thinking about when we think long term. What are we doing by Africa, for Africa, in our sector? And R&D, Dr. Ama, I think NCDMB still has their work cut out. I think beyond, like he said, just ticking the boxes, we really need to drill down, you know, what are we doing really? Because if not, we're going to be in a lot of trouble in next few years. We're thinking more around the assets and who we see today. Well, in 20, 30 years, many of us are not going to be in this room. And who's going to be sitting here? Who's going to be sitting on these panels? Who will be sitting at the helm of affairs of these organizations, divested assets? Who will be managing that? I mean, what he just said is a bit scary to think about, but I think it's not too late for us to start acting. I'd like to come back to Mr. Abiodun, because we're talking about, you know, sustainability, and we can't discuss sustainability without thinking about money. Everyone is looking for money, even the IOCs are looking for money. If the IOCs are looking for money, I mean, who are we not to be looking for money, right? So we need investments. And your organization has managed to some extent, attract that. You know, obviously you must have had that sort of support to record the kind of successes that you have. in light of what we're talking about here in terms of driving local content, where we're not having to put a foreign face in front of what we're doing or give it a foreign coloring to derive credibility, how can we balance that, attracting foreign investment, foreign direct investments, while still making a case for developing local content in a sustainable manner?
Thank you very much. Before I come to that, I would like to deepen a little what Nancy just talked about. I've had on this table, we've talked about R&D, but nobody has shown the roadmap for that development of the R&D. We have to take this, we have to be deliberate and intentional about increasing collaboration between the industry and the academia. We have never brought them to any of our discussions. And there is no sustainable growth without the academic. Because when you talk about some of the divestment that we have seen in the last couple of years, majority of the people that took over those assets were people that have been trained by those people that were divesting. If you look at the last set of Renaissance purchases, the top echelon on those purchases are all ex-chair. So when is the next divestment, and who are the people to step into it? Most of these IOCs, they have their own offices that back up the activities with their R&D. Now the divestment is gone. Those R&D, whether in ILC or in the US, will no longer be there. And where we need to develop our own capacity is our universities. But they are not there. And we are not taking a deliberate attempt to discuss about it. I'll give you an example. My association, in partnership with a UK-based software company, wanted to give all the universities in Nigeria a rock physics and petrophysical software. We could only identify 17 universities with a standard workstation. 17. So when we are talking about sustainable growth, who are the people to be there to provide that capacity in the next 10 years? And the roadmap is not there. We've only been mentioning R&D. Let us show the R&D. So talking about investment, we need to find a right balance between local content and attracting foreign investment for sustainable growth in Africa. And investment will only come to the right environment where it's welcomed. So we need to have the right investment policy. We need to have the right, a clear and transparent regulation. We need to make sure that the investment climate is tolerable for people to come in and invest in their money. Now, we've talked about infrastructure. Now, the depth of infrastructure that we have in the country is not making some of our projects to be attractive enough. Because people can only invest when they can see the roadmap to the gestation of their money. But you invest and you cannot even repatriate, you can't even have access to get your product to the market. Then it's very risky for such an investment to be done. So we need to ensure that we have the right investment climate, we have the right policy regulation. We need to look at our regulation and try to merge duplication of regulations. Good thing the government of the day have started the implementation of a Onseye policy document, and I think we need to extend that to other aspects of the industry. As we speak today, for you to do as simple as EIA, you will have about 8 regulators on EIA. As simple as that, starting from the state government to NOSRA, to the Federal Ministry of Work, State Ministry of Environment, for just EIA. So people consider all of that as cost of doing business.
Of course.
Why should we have multiplicity of regulation for a simple thing as just conducting EIA? I think money will only goes to where it's welcome. That's it.
Thank you very much. Thank you very much. So still dropping it on the laps of the government and public sector and saying, how do we really create, I think earlier panel said, how do we reduce the difficulty before we start to talk about making it, easy. So I see that we have the head of the Decade of Gas program here. We are the only, unfortunately, you and Dr. Amma, so we're just appealing to you, Mr. Edubong, to take our voices and our words, saying that as much as we have a place to play as a private sector, there's a fund coming up and would like to invest and like to put our money where our mouth is and bring our ideas, we still require that sort of support in terms of enabling business environment that drives that investment. I will be very remiss if I finish this panel and we don't talk about gender. I'm sorry. We must speak about gender. I'm going to throw this question to Bukola. Unprepared, but this will be the real test for all your female employees. But yes, so we've talked a lot. I enjoyed the diversity session on day one, and one of the things that I found very amusing was when the president of WIOG said, for the last 50, 60 years, we've been going to war with only 50% of our lieutenants, because we've been going to war with only the men. We've left the women behind, and now the women are saying, let us now be truly your helpmeets. Let us come to battle, with you. So I don't think we can speak about sustainability to the extent that we have this afternoon without talking about where is the place for gender inclusivity, gender equality, some level of significant diversity in the equation. So from your own standpoint as the decision maker, CEO of your business, Heritage, Matrix, I've put that problem on Nelson. Nelson, don't worry, you escaped. This is squarely on Matrix. How do we carry that along? How do we carry the gender, not just the conversation, because we've had the conversation for too long. How do we carry the gender action and implementation along in this journey of sustainability and building local content? Richmond, I can't even see you, you're barely there. But yes, please, Bukola.
Yeah, okay. Thank you very much. So it is often said that if you want just any idea, just bring together people of similar background and life experiences, and you get just any idea. But if you want a great idea, an innovative product, then you need to bring together people from different backgrounds and life experiences. So at Matrix, we are intentional about how we recruit our staff. We make sure that we retain diversity in our staff strength, because we want that uniqueness, that diversity, that contribution from individuals from different backgrounds, bringing in their own perspectives to the game. And that's what makes us very unique. So I would say that with respect to our recruitment strategy, we're intentional about balancing it. Having a reasonable number of female staff taking decisions across our assets, and that's something you can verify on your own. So that diversity is important. And if I want to tie that back to the questions or the discussions around the R&D we're talking about, why those proposals are substandards most of the time is because the professors have not had opportunities to collaborate with other professors in other developed nations. So we need to start saying to ourselves, when we talk about academia presenting quality proposals, we need to start asking ourselves, can we also sponsor some of our professors to go for either an internship or the sabbatical leave in other countries, in other institutions outside of Africa? Then they can bring those quality, those knowledge into Nigeria. So I want to say something again. So when we say industrializing the Nigerian industry or the African industry with Africans, we must retain diversity in that African content development. Otherwise, we can't achieve that sustainability. Because what brings about sustainability is a vision, the sustainability in it, it's alive. It must be kept alive by a system and not by people. So that when a set of people leaves, the next set that inherits that system are able to carry on with that vision. So it is also important that, irrespective of the gender, that the staff of an organization understand why we are talking about sustainability. It is not just for us today, but for the generations to come to be able to benefit from our work. And it is important as well that we also take note of this, that whatever we do today, it's going to change tomorrow, because what changed sector dynamics is not only market forces, but our mindset, how we think and how we relate with products. So it is important that we maintain that balance with respect to gender, with respect to tribe, to religion. We keep that diversity in any team that we have. Then we can talk about taking over the leadership of the African energy sector as Africans, and also still keeping the relationship with the Americans, with the Asians, and the Arabs, who at some point they may also be being helpful in developing the industry that you and I are operating today.
Thank you. Thank you. You didn't really hit my point, Sha. You diverted. So I hand you over to your employees. But I want to just say a point. I know Rosario is going to say, I'm going to give each panelist just 1 second to literally just say one closing remark. I know that Richmond is here, but please very quickly say that. But still on the gender point, it's not just the employees. We have female-led businesses that they bring that to the table. So most times when the gender conversation is going on and diversity, we're just talking about recruitment and employees and employing people. But we're also saying that there are female-led companies. I'm one. Rosario is one. A lot of female-owned businesses that are here who, without the opportunity, intentional and deliberate action of organizations to bring us in and let us have, a slice of the pie, we will not be on the table engaging. So please just keep that in mind for all my beautiful panelists. And then just to wrap up, I will give each one, and this time I'll be boring, we'll go step by step. So I'll start with Mr. Obi, and please, you will just give a last remark, and keeping in mind what we've said, Africa, for Africa, by Africa. Thank you.
Thank you so much. One basic thing I want to leave with the audience is good project management starts from understanding the expectations from the client. That's the key. You need to take your time, understand what the client wants. Then you now assemble all the resources you will need to surpass that. Probably when you get to the field, you may achieve that, which is good. If you surpass that, when you have, based on your plan, the client will be happier with you and give you more work. That's how we have been surviving.
Rosario, thank you.
Iro, try not to stop me, please. I'll be doing my gender a disservice if I don't point out some things around gender diversity. So I think the first thing is, I said earlier that one of the P's of sustainability is people. It didn't say men, it said people, human beings. So if you're trying to build sustainably, then you have to inspire inclusion. And to inspire inclusion, it has to be a business narrative as well as an economic narrative, not a recruiting narrative, not a female-led advocacy narrative alone. So that's the first point. So think about this. Business narrative means that the leaders of organizations need to start leading inclusivity. Then the second point on R&D. On R&D, yes, and my final point is, let's think about this. Do some research about the Saudi case. Saudi has 3 Saudi-based R&D centers. It has 9 international R&D centers, including Delft University in Netherlands, one university in IFP in France, a couple other universities. So they are partnering around the world, to Bukola's point, right? So if we are serious about building R&D, then it's important that we start thinking, how much do we spend, or how much is our spend as a proportion of our gross domestic products. These countries that do excellently in R&D, like the US, China, Japan, where we want to seed work to, spend about 3 to 7%. Our spend is less than 1%. Think about it. I'll leave that for food.
Thank you very much, Rosario.
Thank you.
Mr. Abiodun.
Okay, so I think for African to develop Africa, we need to leverage on what the local content has done very well, having a clear and transparent policy that defines the timeline, the target goals, and the implementation period. Now, the implementation period is important to allow room for capacity and skill development. Let us ensure that we are deliberate and intentional about increasing collaboration between the industry and the academia. Our university need to be well equipped to build the capacity that will develop the Africa of our dream. And we need to be deliberate about it.
Thank you very much, sir. Thank you. George.
Okay, I'm going to go back onto gender. I think gender is a thing that needs to be deliberate in anything you do. I think for any business, the cost to gender, but cost to gender over time is actually exhausting. In our industry, it's common for you to actually see a cable factory generally anywhere in Nigeria today with less than 3%, 2% workforce from the opposite gender, which is the women in terms of that. Now, how we've been able to grow it is be deliberate, because if technology is available, but technology is costly, when you have a scheme that basically is labor intensive, it's really not good for women. Now, but if you have other countries that are doing it, but they're using technology automation to take out the workload or the excess labor intense part of it. Now, we've been able to achieve that over the last 10 years, and we've gone from a 2% to 35%
Fantastic.
women working in the cable factory. I cannot find one in Africa that is doing 35%, and we're pushing the limits on that. And that's basically is technology driven and taking off the labor. But by the time you automate a lot of things where you don't have to lift anything, you find out that you're able to create that sustainability of the women's
Thank you very much, George. But some women can lift, they'll surprise you. But yes, Bukola.
Thank you. I'll leave with this. In the past, operators have managed assets leveraging on their knowledge and experience. But nowadays, we're in that era where data is king. So I want to encourage operators that, in addition to your knowledge and experience, add data to your decision-making process. That way you can deliver superior performance. Thank you.
Thank you. Wise words. Nelson.
So thank you very much. We didn't talk about environmental sustainability, but that is one key one. I will leave it at that. Regarding the gender action, so to speak, we need to go beyond just the token of, yes, my recruitment numbers, and actually go through the full life cycle. How many people are dropping out because the organizations they're working in, or indeed the society doesn't let them progress, say, even to management level, right? So all those things need to be addressed. The same also for the physically challenged persons, whether it's visual, motor skills, or whatever, we have to be deliberate to include these persons. And again, all of this goes, I prefer to deal with things systematically, go back upstream and start fixing some of those barriers that we've built over time. Thank you.
Thank you very much, Nelson. Last but not the least,
okay,
Mr.
thank
John.
you very much. I'll just take it very quickly. Platform Petroleum as a company is focused on inclusiveness, including women in our operation in every aspect of our business. I was in a conference last year when we were running the graduate trainee program, and I promised that by the end of the program, that is the recruitment process, we will achieve 40% of the number to be made up of women. Surprisingly, we recorded 60%. Out of 13 successful graduate trainees, the women were 7 in number. So that is so what that drives is the fact that we have the personnel, we have the people trained in Nigeria, and they are yearning to work. We have so many people, both male and female, that don't have job. They are well trained, but they didn't have the exposure to get experience that is needed. So that is on the personnel side. Within the past few years, with what the NCDB has been doing, I see so many local companies, that is service providers all over Nigeria. They've grown in number. They've grown in competence. What is remaining, which I want to commend the NCDMB person here, is to take it to the next level. And that level is consolidation, so that they will have the capacity to execute projects for the operators. These are multi-million-dollar projects. And when the service companies consolidate to that capacity, to that ability to deliver, they will be able to execute those projects that the multinationals are currently handling. Because the level we have gotten now is the level where many of the local companies are serving as middlemen to use the tools and the technology of the multinationals. So Nigeria and Africa as a continent should focus on having that technology in Africa, so that if the world is transiting to other sources of energy, we should be able to use that technology that we have in-house to continue to harness our resources.
Thank you so much. Thank
Mr. Edubong, please, if you can just kindly step forward and present this for us. Thank you very much. Mr. John Anim, let's begin with you. Thank you very much. Followed by Mr. Ado Sarabaje, represented by Mr. represented by all right. Mr. Wilbert, please proceed for Mr. Osarabaje. Thank you so much. Mr. Olushola, please be on standby. You're supposed to be in Lagos. Why are you here? You know the governor of Lagos State? Say your name is Olushola. All right. Well done. Thank you, Mr. Olushola. Thank you, Matrix Energy. Mr. Onofo Wokon. Which kind cable you go? Come on. Let's get that of NAPE President. Mr. Abiodun Ogunjobi F. NAPE. Yes, thank you very much. Mrs. Rosario Sobase. Me and you and Iro will do family meeting today. Thank you very much, Chairman PCTS. Thank you, thank you, thank you. All right, Mr. Obi Uzu. Should I tell them? I will not tell them, I will not tell them. All right. So for Irohama's own, I will take it home and give it to her when we see. What's the next person, please? I need the next person. Who's the next person? Bring it, bring it. And for Irohama, ladies and gentlemen, thank you very much. Is it done? Please give a round of applause. Give a round of applause. Thank you, thank you. Please, can we have Mr. Jinue? He spoke. Mr. Jinue, please step forward. Please, for Mr. Jinue, Pattern Chairman. Are we done? Is that it? That's it? That's it? All right, thank you very much. Lunch is served. What a wonderful audience you are. I wish I could sing. I would have sung for you. You know, what a wonderful word. Using each of your names in the song as a lyric, but hey, my singing talent is not there yet. But I want to thank you immensely for such cooperation we'll go from you today. Tomorrow, bright and early, we start and finish at 12. We'll start at 9 a.m. Yeah, of course, please, group photograph. We'll start at 9 a.m. and we'll finish at 12 tomorrow. The Secretary of the Government of the Federation. Please, Oga Ama, please come. You're in the picture. Temi, please come. You're in the picture. Thank you very much. Hold on, photographer, hold on. There are two people in the picture. I'm all just fired to serve lunch right now. Let's keep Ogama in the middle. Ogama in the middle. That's we're talking African content. That's the men driving it. Those are the men driving it. Please, you know where you got your lunch? Go eat lunch. Go eat lunch. Tomorrow morning, please be here on time. The SGF is going to close the 7th edition of NIES. Remember to take your certificate. I told you to go to the information desk and ask them to show you the system where you can Your certificate, the conference is a CPDA approved conference. So get your certificates, enjoy your lunch. Tomorrow morning, be on time. As I said, the SGF will close, so let's get settled in on time. We're closing early because we're using this place for the final concert. So we'll have to close early. Please be early tomorrow. Enjoy your lunch. Thank you for your cooperation. We do not take it for granted. Thank you for your understanding. 9 a.m. we start. Please be seated before 9 a.m. Thank you very much. Thank you, sir.